Have you heard of this brand new product that instantly cleans toilets without any scrubbing? Take any dirty toilet, pour in 1 scoop.
Toilets. Yeah.
Hello, my name's James Howard. I'm an ex-liberal. I just didn't like the platform that the liberals have been promoting: human trafficking, high inflation, wars. And you can understand why Kamala lost the election, because she was a human trafficker. She allowed 12.5 million illegals that are countable over the border. I think it's a lot more than that. Mostly men getting out of prison, raping our women, raping our children, killing our women. But that's what the liberal manja is, open borders.
CEO Tom Kingsbury is stepping down on
Metcalf,
January 15th.
she's
He served
getting ready
as
to have a
interim
fit here.
CEO starting in late 2022
We're gonna kinda watch
and
her.
was named the permanent
Still saddened by
CEO
her
in early
tears.
2023. Permanent until at least now. That stock is down about 45% since he took the interim role. And you can see the latest move down another 2.6%.
This is incredible.
Is it
Trump
horrible?
administration officials have been sending babies and other young children.
Babies?
Oh.
Oh God. I don't know if I can take any more of
At
it.
least 3.
Oh. God.
Graphic of this.
Human trafficking.
Thank you.
If we would have just put a stop to it, this would have never happened.
Shelters in South Texas. Lawyers and medical providers.
All your tax money going to them. Oh,
I think I'm gonna have to hand this off. Yeah.
I make $25 million a year, 1 episode a week, and I'm crying over it. Spilt milk. We need human trafficking. Please. Please stop it. Hello, this is James Howard, Washboardjim, with a sneaky snake trading strategy, and everybody have a great day.
Russell 1,000, 2,500, or 2,000. Not a single market cap of any stock do you have an earnings yield above the 5-year Treasury yield. And that's when you like to buy. That's usually when you like to buy stocks, right? So either there's a problem with what we're assuming about earnings going up 15%, or with interest rates coming down. Because if things stay just the way it is, 24 times earnings, there's the Houston, we have a problem next year, right?
Yes, yeah, absolutely. It's a concern that we have for the market, because it's spread now beyond that, tech and Russell 1000 growth that we saw for most of the year. But now looking at the indices, not every single stock, but just looking at the indices themselves. Okay. Yes, and then the indices themselves, not one of them has an earnings yield that is above the 5-year Treasury. So It's telling you that bonds look cheap compared to equities. But we think this is just more of this euphoria that's driven all of the U.S. market caps higher this year after the election.
Yeah, that didn't sound right, the 20, but that's what it says in the notes. So you're talking the indices themselves. So you are a long-term investor. Everybody, you have to be, obviously. Would you not commit any new funds to the S&P 500 right now at 24 times next year's earnings?
No, not right now. That's just too stretched in our opinion, given the fact that the economy is going to slow. There's a lot of uncertainty, especially with the news that came out this morning with the Trump tariffs next year. The consumer continues to be very stretched, and we just think that earnings growth is way too optimistic for next year. 15% earnings growth year over year.
Yeah.
In an environment where the economy,
The whole damn thing's out of whack, baby.
From this year's pace, that's just way too optimistic. We think some of this euphoria has has just carried on after the election. We think going into next year it's going to be a bumpier road, and that's where we want to go in having some dry powder, looking to rebalance the portfolios where we need to, and then have money sitting on the sidelines to put to work.
We hear the consumer's fine, we keep hearing that, but, I mean, you did point out about credit card debt, record high, credit card rates are high. I saw about car loans, almost many car loans are underwater, and the car's worth a lot less than what's left to pay on the loans. Do you see other signs of stress in the consumer area?
Confidence has been very, I guess, mixed. And we've had maybe a good month of confidence and then a couple bad months of confidence. But we keep hearing the consumers fine, but are they really fine? Because we also are hearing that they're changing the way that they spend money. They're being more cautious on how they spend money. That doesn't necessarily tell me that the consumer is really that strong. We think that next year is just going to be a time when the consumer's really just tapped out. And there's so much uncertainty, especially around the taxes at the end of next year, that we think the consumer is going to be what's really one of the biggest risks for the economy.
I haven't heard anyone say stagflation, and we kind of put that to bed, and anyone who's predicting it, people are sort of looking back and saying you were dead wrong. But, I mean, the 10-year is 4.28 today. You think maybe there is some slowing in the economy, right? And inflation is going to stay stubbornly high. It's not stagflation, but both of those metrics are headed in the wrong direction for what's really good for the stock market.
That's right, and I think it's a little early to use that word, but it is. Both of these things are, inflation is sticky in many areas of the economy. We'll get the Fed minutes today. Let's see if they have any more information about that inflation, because they did slightly alter their statement at the last meeting. And then with growth slowing, now we're not saying it's going negative at this time, but growth is slowing. So the Fed's got to make some comments about inflation. They've got to change that rhetoric around the interest rates for next year.
If I were the president-elect, I would be somewhat concerned. Plus, depending on how you date when a president comes in. Last time Trump came in, between November and January, when he was actually inaugurated, the market went crazy. But when people look back and grade how the stock market did, they don't start till January 21st. So he's not getting any of this right now. Maybe it is. Maybe it is. They don't do it that way.
No, but we
Well, it's at 24 times earnings, and I wouldn't want to be taking over at 24 times. I wouldn't want to be taking over at 20. That is a difficult. I'd rather be Obama than take over after the S&P was down 50%. Wouldn't that be better?
It definitely, when you go back in history and look at the returns just by president, it does seem better, being an Obama situation. And that's why we just use history as a guide, because elections happen every 4 years. And typically, when you look at a recession, that tends to happen every 4 to 5 years as well. So there's plenty of presidents that can come in and benefit.
The Fed has cured recessions now, Megan. That's what we were talking about that yesterday with QE. And everything, zero in, ZERP, and everything else. There are no business cycles anymore. Everything's always going to be great. Megan, thank you.
You're welcome. Thanks.
All right. See you later.
Okay. Coming up, Walmart is the latest company to roll back the latest DEI initiatives. We're going to talk about that story next. And then later, reaction to President-elect Trump's tariff proposal. Nick Mulvaney is going to be joining us as former acting chief of staff. We'll talk about that, Doge, and so much more. Squawk Box rolls on after this. Squawk Box. An interesting story to tell you about this morning. Walmart now saying that it is ending some of its diversity initiatives. It's removing some LGBT-related merchandise from its website and winding down a not-for-profit that funded programs for minorities. Now, the company moving away from using the term, quote, diversity, equity, and inclusion in company documents as well. It's also renamed its chief diversity officer role to chief belonging officer. Walmart joins a growing list now of companies that have rolled back DEI measures. This after feeling the heat from conservative activists. Other companies that have gone this route, Tractor Supply, Lowe's, Ford, and Molson Coors. The activist behind this is a guy named Robbie Starbuck, who has spearheaded anti-DEI campaigns against consumer-facing companies. He's done this across the country now. Said he warned Walmart executives last week that he would be doing a story on, quote, wokeness at Walmart. Walmart said that it is making these changes and that they've been in the works, they're saying, for a few years, and were not the result, they say, of the conversation with Starbuck. I don't know.
That's him,
Whether you
Andrew?
think that
I love the man bun.
is true or
So
not. What'd you say?
I love the man bun. That's the dude behind
Just looking
him.
at the video.
Yeah, watching the
You're
video.
Starbuck.
I love the man bun. I love that guy. That's the dude, huh? That's unbelievable. So he's the anti-DEI guy with these guys.
The man buns.
Kind of cool.
Yeah.
All right. Andrew, you thinking about it?
Am I thinking
Getting
about the
a man
man bun, or am I thinking about these DEI policies?
The man bun. I'm not going to get all serious on you. We're not going to discuss DEI and whether it's obviously we'd like everything to be DEI, but I understand.
Well, if you look at the comments that come from Doug McMillon on this, the CEO at Walmart, just saying that they want to change. They basically want to be a reflection of
Do it,
America
but it's just-
and what America is really looking for with some of these things. There's been a big pushback against it. They just said no retail company wants a story about them ahead of us, from us ahead of Black Friday. This is what the Starbucks is saying on those things.
Right. And man bun, people with man bun should be included as well. I don't think they should be. I don't think you should do anything against, right? They should not be
I'm trying
discriminated.
to imagine you in a man bun.
Me or I had a mullet. I mean, obviously,
You did?
in the '70s, nobody didn't have not the fish.
Party in the back.
Yeah, that a mullet is the same. It's not. It is
There's
a.
just up front, party in the
But
back.
Andrew, I'm thinking you would look. See, I can't do it now. I can't do it. But I'm not. You know. Just think about it.
Man bun. You think I could pull? I don't know.
You know what else is cool? And I didn't know what it was, but I've seen people like at the gyms have the warrior. You know what the warrior is? The warrior haircut is really cool. You kind of grow it long and then you have like one ponytail down, but the rest of it is down. You kind of look like, who's that one guy that?
I just want to have, what did Mr. T have?
Oh yeah, he had a mohawk.
Like a
Yeah, I
mohawk.
think a mohawk.
You're thinking of. I'm trying to think of the guy you're thinking of. The what's the guy who like?
Hegseth, or no, Chris, no, Hemsworth. I said Hegseth. I got Hegseth on it. Hemsworth. One of the Hemsworths had in one of their, of course.
I think probably a Thor look somewhere along the way. Okay,
Thor.
it's Thor.
That's the one, the warrior.
Chris Hemsworth.
Yeah.
All right, when we come back, the Fed's Neo Kashkari said that a rate cut is still on the table at next month's meeting. We've got the details right after this. And as we head to a break, a look at yesterday's S&P 500 winners and losers. There were a lot of winners yesterday. Supermicro Computer was at the top. It was up by about 16%. We'll be right back. Good morning, everybody, and welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. The futures this morning relatively flat, but you're still looking at green arrows even after some pretty big gains yesterday. Right now, the Dow futures are up by about 32 points. It was a gain of 440 points yesterday, and that sounds like a lot, but given the huge move we've seen in the indexes, that's only 1%. S&P futures up by about 7 after a gain of yesterday, too, and then the NASDAQ indicated up by about 27. Minneapolis Fed President Neel Kashkari saying that it's still appropriate to consider another interest rate cut at the December meeting. He told Bloomberg that the economy's resilience in the face of higher interest rates suggests that the neutral rate may be higher now. The latest inflation update comes tomorrow. That's when we'll be getting the core PCE data that is set to be released at 10 a.m. on a holiday-adjusted schedule. That's the very important measure that the Fed looks at for all of these issues. And we've gone from thinking that things are baked in to having to consider whether the Fed will pause or even eventually raise rates again, Andrew.
Really?
Right.
That's kind of the
Yeah.
market. Everybody we're
That's the
talking to
question.
now is trying to figure this stuff out. Look, it's because we don't know. There's so much uncertainty around these new policies with the new administration coming in. Fed may pause and look around for a little bit.
Right, and
We're going to
no
talk a lot
reason-
more about that actually in just a
Right.
moment. We'll get some reaction to President-elect Trump's tariff plan and maybe inflation, if you think comes from his former acting chief of staff, Mick Mulvaney, plus a new cost-cutting proposal from a Republican senator to the DOGE team. We'll talk about all of it right after this. Welcome back to Squawk Box. Republican Senator Joni Ernst sending a letter to Elon Musk and Vivek Ramaswamy yesterday In the letter, it outlined the potential cost cuts that could eliminate more than $1 trillion in federal spending. Among her proposals on the list, she says consolidating federal office space and auctioning off unneeded properties, auditing the IRS, slashing Biden administration infrastructure initiatives, and making changes to U.S. coins. Now, she noted that it costs 3 cents to produce a penny and more than 11 cents to produce a nickel. So we're going to get into all of this because meantime, investors seem to approve quite strongly, I think, of President-elect Trump's Treasury pick. Scott Bessent, some people calling it the Bessent bounce. Joining us right now to talk about all of this and so much more, former Trump administration acting White House Chief of Staff, who also served as the director of the OMB. Mick Mulvaney is here. He is the co-chair of the Active Strategic Advisors Group. Good morning to you, Mick. We can talk about Scott Bessent in just a moment, but I'd actually love to talk about, since you know where the bodies are buried, you know where the money is or is not. Is $1 trillion on the table? Is that a possibility? Would you get rid of the penny and the nickel? Would you start auctioning and selling off real estate that is owned by the U.S. government to make these numbers work?
Yes to all of the above except the $1 trillion. Well, of course, I guess it depends on how you measure. Is it $1 trillion a year? There's no chance. Is it $1 trillion over the budget window? Keep in mind, anytime you talk about spending in Washington, you have to realize the language is different. When someone says that a program costs $500 billion, that's usually over a 10-year window, so it's unclear where that $1 trillion is coming from. Listen, yes, get rid of the penny, yes, get rid of the nickel, but literally those are pennies and nickels when it comes to the amount of money that the government spends. These are all really, really good ideas, but until you start dealing with the major drivers of the deficit, which is the discretionary budget, the mandatory spending programs, you're not going to get any real change here.
Well, so that's the big question, though. So let's talk about some of that. I mean, we also maybe add to it the defense budget. Could you go from $800 billion to $700 billion and make that work, given that they have not, completed an audit successfully now in a very long time? Is there remarkable amount of waste there, for example? I don't know.
No, you should know, because there is a remarkable amount of waste, but your question is, can you go from 800 to 700? And the answer is no. We weren't able, when we first came to office in 2017, when I wrote the first budget, to even get the rate of growth in the Defense Department to slow. That's considered a cut in Washington, D.C. If you spent $100 last year and you only spent $103 this year, they call that a cut because they expect to spend $105. So this is great. I love it. Look, I'm so excited about it. I can't tell you. I wish that we had this sort of energy in 2017. But Congress was one of our major impediments. When I had my 2017 budget before the president, I had a high-ranking Republican senator tell him, Mr. President, no one's ever lost their job in this town for spending too much money. They have lost their job for not spending enough. So I hope the attitude in Congress has changed. Clearly, Trump is committed to this, and I think that's fantastic. But unless everybody in Washington, D.C. is interested in spending less, it's going to be very, very difficult to do.
What do you make of this tariff proposal that we were just seeing in the last 24 hours? The idea of implementing 25% tariffs against Mexico and Canada as well, 10% more to China to try to stop fentanyl, try to stop illegal immigration. You see that as a negotiating tactic? You see that, I imagine it is a negotiating tactic, but you see that as a successful negotiating tactic? Do you think it would ever be implemented?
Well, it has been in the past. We used threats of tariffs to get the Chinese to buy more soybeans. It was back in 2018. There's how I look at it. I think that when it comes to folks like Mexico, Canada, Europe, the tariffs are mostly looking for leverage, a way to get leverage. Donald Trump is the best I've ever seen at creating leverage where none exists. That doesn't say they won't go in, but I think the motivation behind them is to get leverage. On China, it's a little bit different. In China, I think the idea behind the tariffs is more to actually drive our policy, to sort of compete with them. So I think that you have to take it a case-by-case circumstance, country to country, good by good. But yeah, Donald Trump is going to use tariffs. It's one of the tools available to any president of the United States to try and get their policies enacted, or at least assisted by other countries. So I fully expect this to be front and center of the Trump playbook for the next 4 years.
Speaking of the Defense Department, Mick, and who knows what happens with a lot of these nominees. I don't know what you think of Pete Hegseth. Earlier, we were quoting Senator Ernst, Joni Ernst, would be the best Secretary of Defense probably ever, and she's expressed an interest in that. She knows all about, she served on the Armed Services Committee. Do you think Hegseth makes it? And when you look at her, okay, go ahead. You're making weird looking faces. I'm not sure what you're ready to say.
Yeah, but in order to get to Ernst, you got to sort of deal with Hegseth, and I do see him making it. I sort of get the feeling, Joe, that if the guy wasn't on television for the last several years and had been sitting at a think tank, I don't think there'd be a lot of complaints about him. He's got a degree from Princeton, from Harvard.
No, I know he has degrees, but he just doesn't have the experience in maybe you're right. He hasn't been a bureaucrat. He hadn't been a bureaucrat, which maybe that's a good thing.
Yeah, there's not a lot of folks who have experience running an agency that has a couple million people, or at least I think it's close to 1 million folks. So that's a big organization. There's no question about it. Jody'd be great. Don't get me wrong. But I don't see Trump pulling support for Hegseth unless something comes out that we don't know about Pete yet. Look, I expect one of the nominees to go down, right? I don't think Gates was the sacrificial lamb. I think Gates was an aberration. I think one of these folks is not going to get approved. I get the sense it's going to be Kennedy, just because that hearing is going to be such a circus. I don't know how long the Trump team is going to want to stay with him. But Hegseth fits the model that I think you see coming out right now, which is it's a two-headed sort of operation. You're going to have somebody in the White House dedicated to policy and someone out at the agency dedicated to selling that policy. There's a reason he hired Sean Duffy for DOT, who's good on TV. There's a reason he hired Kristi Noem for DHS, because she's good on TV. And Hegseth is good on TV. One of the biggest complaints Trump had in the first term was that there's not enough people on television helping him sell his agenda. And you're starting to see a new model come out, which is policy inside the White House and then the sales job out in the agencies. And I think Hegseth fits that model very well.
I gotta ask you,
Andrew, you gotta be good. We gotta be good on TV. I guess we don't have to keep checking our phone. I don't think it's going to happen for us. It's not going to happen.
I got to ask Mick though before we go, what he makes of this Boris Epstein story, and the fact that President Trump seems to be standing by Boris Epstein. For those who have not been following the story, apparently he had been seeking money from and consulting fees and the like from a number of folks who were trying to get posted in the cabinet, effectively. Even at one point sought a consulting fee from Scott Bessent, who's now the Treasury Secretary. He did not take him up on that at the time, but obviously it has raised some eyebrows around Washington.
Yeah, well, it raises my eyebrows just because, look, Trump says he hates this, and I get this. He hates people making money off of their relationships with him, and I understand that. But listen, if he's going to fire Boris Epstein, then there's going to be a lot of people fired after that, because a lot of folks in Trump world make a good bit of money on the side sort of selling access to Donald Trump. So we're curious to see if Trump really follows through on this, and if so, whether or not it's the first domino to fall. My guess is there'll be a lot of complaints, but then nothing really will change.
Mick Mulvaney, thank you for joining us this morning. Happy Thanksgiving.
Thanks.
worse than sweat.
When we come back, crude prices dipping on word of a potential ceasefire in the Middle East. We're going to dig into that story next. Check it out. WTI just below $70 a barrel, $69.60. We'll be right back. Welcome back, everybody. Oil prices are down after speculation of a ceasefire in the Middle East. You can see this morning WTI down, or actually up this morning. It was down a couple of percent yesterday, but it's just below $70 a barrel. And joining us right now to talk about it is Don Striven. He is Goldman Sachs co-head of Global Commodities Research. Don, this idea of a potential ceasefire in the Middle East is a big deal. You've got that on top of the Trump administration, the incoming Trump administration, saying that they're going to be looking for ways to produce more oil and natural gas in this country. I'm actually surprised we're not seeing a bigger drop across the commodities board.
So I do think that the geopolitical risk premium priced into oil prices was fairly modest, also as of late last week. And I think the market is very much focused on geopolitical risks with actual clear paths to lower production, less production, because a lot of geopolitical supply risks to supply ultimately have not realized since basically 2022,
right.
starting with Russia. In fact, we do think that oil prices are now a touch too low relative to inventory and price fundamentals, maybe $4 per barrel or so.
Why is that? But what do you see around the world that makes you think that? A slowdown in the economy potentially, or?
So it's based on the observation that this year global oil inventories have actually edged down. We think the market has been in a deficit worth about 0.5% of the global market. Even if prices, they're on track to average $80 per barrel this year, but they have trended down, consistent with a meaningful decline in positioning to the bottom 5% of history. So I do think that many oil investors are pricing in with a great degree of confidence a large surplus for 2025. We think a large surplus is not a done deal, or base case is a modest surplus. And actually we do see significant upside risk to prices in the short term, potentially coming from lower Iran production.
Okay, so you can have an administration coming in saying that they want to cut the red tape, they want to make it easier for permitting and places to drill and open up drilling places that they hadn't seen before. But if you talk to the big majors, I don't know that they are very eager to spend more money on production when you're already facing prices that are probably below what they had anticipated this year.
Yes, production short term is very much pinned down by prices and shareholder discipline. That said, the 3 million barrels per day of energy and oil equivalent production that new Treasury Secretary nominee Scott Bessent has put out there, we think it's actually achievable. Because we do think that natural gas production should be included, which is going to rise pretty significantly with the rise in LNG demand for U.S. natural gas. Natural gas liquids are also likely to continue to grow.
LNG that we export?
Yes, yes. So we think that goal is on track, but it's mostly a result of technologies, LNG export, plans that are happening pretty much regardless of DC policies. We do think that over the long run, regulatory easing could provide some upside to oil and natural gas production, but in the short term, it's very much pinned down by prices, economics, and shareholder goals.
What about OPEC and the role that they potentially play in this? Because obviously Saudi Arabia would like to see prices higher than this too. If they kind of kick in and say, we are not going to produce as much, what are the odds of that, and what's the impact on the market if they do?
So I think what we have seen from OPEC over the last few months is that whenever prices sort of drop to the low 70s, a touch in Brent terms, a touch below current price levels, they tend to extend productions, basically defending 70 as a floor under Brent. However, over the summer, we saw that when Brent was sort of around 80 or in the low 80s, they were signaling to the market, we're happy to bring barrels back to the market. So this supports our view that in the base case, oil prices should be range bound, with 70 sort of the floor and 85 to 80 as the ceiling.
What's so different than when we were talking about oil prices spiking above $100 and beyond? What's changed? Is it the technology that we have for these things? Is it our ability to find and get some of the oil and gas out of the ground? Is it the global dynamics? What's changed?
It's really the success of U.S. shale. If you look at production growth in the world for oil over the last decade, 100% of that growth has come from U.S. shale.
Wow.
And with the ongoing consolidation, those U.S. companies continue to make efficiency gains and are putting downward pressure on the long-dated part of the oil futures curve. And as a result, OPEC has been incentivized to cut production to keep the market balanced.
Don, thanks for coming in today.
Thank you.
It is now just after 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Ross Dorfman along with Joe Kernan and Becky Quick. We got a whole bunch of big stories for you this morning. Perhaps the biggest, President-elect Trump now saying he wants an additional 10% tariff on China and a 25% tariff on Canada and Mexico. We're going to bring you a lot more on the potential impact of those tariffs throughout the show and how he might be trying to use those as a negotiating tactic. Meantime, Minneapolis Fed President Neil Kashkari saying he's open to cutting interest rates again in December. In an interview with Bloomberg, Kashkari says it's reasonable to consider a 25-point cut when the central bank meets next month. And Starbucks saying that a ransomware attack on one of its software vendors has now disrupted how the coffee chain's baristas view and manage their schedules. The company says that store leaders and baristas are currently working around the outage manually for the most part, and that the interruption has not affected customers directly. Meantime, I want to take a quick look at the futures on this Tuesday morning ahead of Thanksgiving. Before we get over to Dom Chu, you're looking at some green on the screen, 75 points for the Dow. Dom, taking a look at this morning's pre-market movers. What's on tap?
Hey, good morning, Andrew, Becky, Joe. Let's kick things off this hour with some news out of the Biden administration. affecting shares of Rivian, which are right now up for about 3.25% after the company announced that it had received conditional approval for a $6.6 billion loan from the Department of Energy. That money will go towards building an electric vehicle production facility in the state of Georgia. Rivian said it expects to begin operations at that factory in 2028 and employ 7,500 people by the end of 2030. So Rivian getting a boost on that news. Also, Intel shares higher, just about maybe 1.33% after securing a $7.9 billion loan funding under the CHIPS Act. The Commerce Department said the grants will support the company's manufacturing expansion and packaging projects in Arizona, also New Mexico, Ohio, and Oregon. The Biden administration has been working towards finalizing deals ahead of President-elect Donald Trump's inauguration, so that big grant coming for Intel driving those shares higher. And we'll end with a look at a key analyst note coming out regarding Goldman Sachs and Morgan Stanley. Both of those stocks are fractionally lower, due in part to HSBC downgrading the stocks to a hold rating from a buy. The firm said that after the recent big bank rallies, analysts see less attractive risk-reward profiles and told investors to be wary of any arguments that an investment banking super cycle are going to drive the shares much higher. So keep an eye on those investment banks because of that HSBC downgrade. And by the way, for more on that call, other key calls of the day, head over to cnbc.com/pro. Subscribers get full access, Andrew, to the full detail and analysis behind those calls. I'll send things back over to you.
I will say thank you, and I'm sure we'll see you in just a little bit. And then I will say, Joseph, what's coming up?
Coming up, President-elect Trump's pick for National Security Advisor. Going to be on with us, Mike Waltz. Congressman Waltz will join us. And later, chef and restaurateur Lydia Bastianich.
Love her.
Plus, I have some of her stuff, spaghetti, sauce. Talks food prices, her latest PBS special, and tips for your turkey dinner. Squawk Box will be right back.
I've got this.
Some breaking news from Amgen. Angelica Peebles joins us right now. She has the details on that. Hi, Angelica.
Hey, Becky. Yeah, we finally have the long-awaited results from Amgen's experimental obesity drug. Now, this is a phase 2 trial of their injection called Maritide. Now, take a look at that stock. It's down almost 10%. Amgen's saying that the shot helps people lose on average up to 20%, and that's people who had obesity. Now, Wall Street was looking for about 20 to 25%, so this could be seen as a disappointment. Amgen is saying, though, that they didn't see a weight loss plateau, so there is a possibility that people might continue to lose weight as they take this drug longer. This is also part one of a two-part trial. So part 2, people will be taking this for another year. And again, it's possible that we might see more weight loss, but at this point, it could be seen as a disappointment. Now, they're also saying that about 11% of people discontinued from the trial because of any adverse event. And like other drugs in this class, GI issues, things like nausea, diarrhea, are playing a big factor in this. They're also saying, though, that they saw no association between Maritide and any changes in bone mineral density. Remember, that's an issue that has come up recently. So there's a lot to digest here. And again, Amgen has already said that they are moving this into phase 3, and they have a call coming up in the next hour. So we will be tuning in that to see exactly what they have to say about these results, Becky.
Angelica, you were right to point out that there could be disappointment on the street. Right now, that stock is off by more than 12%. So, they're moving into phase 3. You pointed out a few potential positive outlooks from this, but the reaction, the knee-jerk reaction on the street is certainly one of disappointment.
Exactly, and that's because although this is a monthly injection, they're saying it could be monthly or even less frequently, which would differentiate it from Zepbound and Wegovy. Ultimately, if you want to succeed here and compete against these two behemoths, you're going to need to show something that's competitive. And right now, there is some concern maybe that this is not competitive. You don't have as much weight loss. Why would people go and take this different injection if they have something else already on the market?
Well, the one thing that you can do is price it more cheaply, but then you've got the Biden administration, I was just hearing today, moving to make it so that the government pays for, the federal government would be on the hook for paying for any of these. And so if that's the case, then you have probably less price sensitivity.
Exactly, and we're going to see Wegovy. That price will probably come down as Medicare does start to negotiate the price of that drug. So pricing will play a factor, but again, the thing that is interesting here is the dosing. And people were looking to see maybe less frequent dosing because Amgen has talked about at least monthly, maybe even less. Some analysts I spoke to said they'd like to see quarterly, but at this point, that's not what we're seeing. Amgen is looking at that in part 2 of the trial. Quarterly, other different options for dosing once you lose the bulk of the weight. But at this point, I just think overall, people wanted to see a little bit more here because hopes were so high for this drug, and right now people are digesting to see exactly what the future here holds for Amgen.
Okay, Angelica, thank you.
Thank you.
The Dow with another record close yesterday. Joining us is Emily Rowland, Co-Chief Investment Strategist at John Hancock Investment Management. And I think we're all wondering, does the train ride continue? Does it pull back? What's going to happen here, Emily?
Yeah, look, Andrew, if you're looking to get tactical into year end, momentum can be a powerful force. And we've got to remember that markets have muscle memory. We have a playbook for this. You look back at 2016, 2017, and post-election, you saw a massive rally in areas like regional banks that could potentially be beneficiaries of deregulation, small cap equities, which would benefit from pro-cyclical policies. We looked back at the 3 months post-election in 16, and regional banks were up about 26%. We're at 19% right now. Small cap equities were up about 15%. We're at 10. So we could be in sort of the 6th or 7th inning of this pro-cyclical trade playing out. The challenge is the fundamentals in those areas of the markets aren't as strong. So we think into 2025, investors refocus on the fundamentals, but for now, momentum can be a powerful force.
So what I'm trying to understand is you think momentum is a powerful force through the end of 25, but through the end of 25 into 25? What are we talking about here?
So we're looking at into 25. So if you look back at the 2016 playbook, you saw the bulk of the returns in these riskier areas of the market happening in the last couple of months into the year, into the early part of 17, and then those trades sort of chopped around and moved sideways from there. So I think you're getting a lot of it now, but again, you could have a few innings left. for these plays to work out.
But if you think that chop is on the other side, is there any argument to say to take your winnings now?
I think there certainly could be, depending on how tactical you want to be. You know, you look at, for example, small cap earnings. They're down 7% this quarter versus large cap earnings, which are up 6%. So what you've seen is these moves have been made entirely on multiple expansion. You're also seeing this almost speculative frenzy playing out across lower quality stocks, across crypto and crypto related assets. It's just remarkable to see what's happening here from a sentiment standpoint. So we would suggest trimming into those riskiest parts of the market as we head into next year and refocusing on quality at a reasonable price, places where we're actually seeing the earnings momentum. We have to remember that over time, stock prices follow profits. And I think a lot of investors are maybe ignoring those textbooks right now and focused on where the most speculative action is.
Emily, you mentioned crypto, and that obviously is a speculative asset. We long talked about crypto and the NASDAQ being tied. I don't know if it's tied in the same way. I don't know if you think that crypto, which is the dog and which is the tail in this case?
Yeah, typically those two things move together, and we've actually seen crypto-related assets break away in terms of that performance profile. So again, just remarkable moves. Every morning you wake up and crypto's at a new all-time high. It's actually helping mid-cap growth stocks be among the best performers across the broad U.S. market right now. So again, we would fade that, although we're continuing to emphasize U.S. assets broadly. The dollar's up 7%. This quarter, we're seeing economic growth better on a relative basis in the United States right now. The services side is booming, the consumer is doing well. So we would continue to emphasize U.S. assets in a broader global portfolio. We would just think about sort of pruning risk at the margin. We don't want to be going over our skis here and taking risk as we head into next year.
Emily, we're going to wish you a happy Thanksgiving. Thanks for joining us this morning.
Same to you.
You bet. Joe?
Coming up, the president-elect's pick for National Security Advisor, Congressman Mike Waltz, is going to join us to talk the ongoing Ukrainian war, a possible ceasefire in the Middle East, and other foreign-related relations issues. That's straight ahead. Squawk Box. Be right back.
Time now for today's AFLAC trivia question. According to the USDA, how many turkeys are eaten on Thanksgiving? The answer when Squawk Box returns. Answer to today's AFLAC trivia question. According to the USDA, how many turkeys are eaten on Thanksgiving? The answer, 46 million. That's about 3 pounds of turkey per person.
Turkey. All right, the second Trump administration is just around the corner. Investors are going to be on the lookout for the potential foreign policy shifts. And joining us right now is the president-elect's pick for National Security Advisor, Congressman Mike Waltz of Florida. And Congressman Waltz, thank you very much for being here today. You're in a position that is not subject to confirmation from the Senate. Obviously, you're ready to hit the ground running on some of these issues. I thought maybe we could talk to you about what you see happening around the globe right now. The talk this morning is really focused on what potentially could happen in the Middle East, ceasefire talks there. And I just wonder how involved you've been with this, what you think of what you've seen.
Well, we're in communication with President Biden's team, with his national security advisor, Jake Sullivan, and one of the lead negotiators, Amos Hochstein. This is a ceasefire, if it comes to fruition, that I think all sides are going to be able to get behind. Israel, as you know, has made an incursion into southern Lebanon to preemptively take down Hezbollah's rockets, tunnels, and other assets that were poised to attack, and that were also hitting Israel on a daily basis. I'll remind everyone that Israel has nearly 100,000 of its people that can't go home, that are internal refugees, because their homes were being fired on. We remember the sad and frankly just heartbreaking instance of over a dozen Israeli kids randomly killed while playing soccer. So to resolve that, I think would be a step in the right direction. It will also further isolate Hamas, and we are all hopeful we can drive some type of resolution to get our hostages home. By Inauguration Day, those hostages will have been held longer than the Iranians held Americans hostage in 1979. So it's time to drive this home. And what we're calling the President Trump effect, where suddenly everybody's ready to deal, we're seeing that across the board and around the world.
Let me ask just how closely you're working with the Biden administration, with your counterpart, Jake Sullivan, just because, look, there's this idea that your incoming administration sees the world differently than the existing Biden administration. This is this awkward time between Election Day and Inauguration Day. And there is definitely the feeling that the Biden administration is maybe making some changes and pushes in other areas, like allowing Ukraine to use some missiles that they hadn't allowed them to use to strike into Russia in the past. Is that stuff that has been done with talking to you all, or do you think these are counter to the views that the Trump administration, incoming administration, will have? How do you see this playing out?
Well, in that particular instance, we had not spoken yet, so we were not informed of that decision, but we have since. Look, my message to the world, and I think Mr. Sullivan would certainly agree, is if you think, to our adversaries, if you think this is a moment of opportunity that you can play one administration off against each other, we don't agree on every issue, to be certain. But we are in communication. You cannot use this as a moment of opportunity if you think you're going to. And we need to send that message as fellow Americans loud and clear.
Congressman, I didn't realize that it's been longer than the hostages from, that was so long ago, but that would be very strange if they were released on Inauguration Day, because that's when the Iranian hostages were released. I remember when President Reagan was inaugurated, that day is when they were released.
No, that's right. We just want them released, period.
Right, but that's just weird the way history would theoretically repeat itself. Let me just ask you about the overall backing of Israel by the United States, Biden administration. You hear both, that it's been good and Israel is grateful. Then again, I've seen editorials written that, whenever the Biden administration will respond to some moves by Israel, a lot of times they were scolding Israel rather than Hamas or rather than than the other side. And I don't know whether weapons were withheld. There are certainly threats that weapons would be withheld. Do you think that it's been unequivocal enough, the Biden administration, with its support for Israel at this point, Congressman? Will that change?
Well, look, I think the change you're going to see is more focused on Iran. I don't believe that you restore stability. I don't believe that you solve Gaza. And I think this is shared across many in the administration with the president. Necessarily there, you solve it with dealing with Tehran. Tehran is the world's largest backer of terrorism. They are going to help Hezbollah, Hamas, the Houthis rebuild if they can. And as long as they are flush with cash, the Middle East is never going to have peace. Iran doesn't want the Middle East to be in peace. They don't want a two-state solution. Neither does Hamas, for that matter. So there will be a shift. The president has been very clear about that. He was very clear in his first term in exerting maximum pressure on Iran until they're ready to come to the table from a very different perspective than they did with the Iran deal.
So how does that work when it comes to Ukraine and Russia? If the Biden administration is doing things, allowing them, maybe trying to push as much of the funding that they had promised to Ukraine before Inauguration Day, if they're allowing them to use missiles going into Russia in ways they hadn't before, how would your policy differ from what you were seeing happening on the ground there?
Well, and I'll address that. I just want to make one more point on Iran. You know, China buys 90% of Iran's illicit oil. Just roughly 2017, 2018, they were exporting 4 million barrels per day. By the end of Trump's first administration, it was down to around 400,000. So I think we'll be having some conversations with China about those purchases. But again, going back to that full maximum pressure, not only will help stability in the Middle East, but it'll help stability in the Russia-Ukraine theater as well, as Iran provides ballistic missiles and literally thousands and thousands of drones that are going into that theater. So that is a key. The Middle East is also a key component to resolving the Russia-Ukraine conflict. But the president has been crystal clear that he sees this conflict in Russia-Ukraine as needing to come to an end. I think the question now, as we head through this transition and into his second term, is how do we drive that deal? How do we drive all sides to the table? Who's at that table? And then what are the broader frameworks of whether you want to call it an armistice, whether you want to call it a deal, however we want to frame it out. How do we end the fighting? And the president really has been seized and struck with the extent of the casualties. People need to understand that this is a World War I style trench warfare meat grinder with hundreds of thousands of people being fed into it. And our question has been, okay, if the Biden administration is escalating in response to a North Korean escalation, now South Korea is talking about some type of potential involvement. Russia is responding in kind. We keep climbing this escalation ladder, and to what end? What is success in line with America's interests? What is success in line with stabilizing this effort? And we just met with the NATO Secretary General in Palm Beach and talking about what is Europe's role in the long term. The EU has the same size economy as the United States, but roughly only half of the NATO members are meeting the bare minimum of their defense spending. If they're not going to do it now, with the largest war since World War II on their doorstep, when are they ever going to? And I want to be clear, some European allies, like Poland, like the United Kingdom, the Baltics, are absolutely contributing a huge part of their budget, but others are not. And we had some good, strong, tough conversations with the NATO Secretary General about that.
Am I oversimplifying it to think that sounds then like our answer to this is American isolationism? We will pull back and allow European problems to be handled by Europeans?
No, I don't think so at all. I think what I just said was the United States will be right there driving some type of deal. But in the long term, for Ukraine to continue to defend itself, some type of security agreement will be part of this, Europe has to take a major share of that. They have to take a larger share of that. Look, from our own perspective, the interest in our debt alone, just the interest, is eclipsing our entire defense budget. We cannot just afford year after year to pour tens of billions of dollars into a conflict that has no resolution. The president's prepared to do that if necessary, but we need to take, I think, a broader approach, and then also one that is focused on ending the war rather than this just kind of open-ended, how far and how high is the escalation ladder going type of approach we've seen in the last couple of years.
Mike Waltz is the incoming National Security Advisor. And Congressman Waltz, thank you for your time this morning.
All right, thank you.
Okay, coming up, we've got a rundown of this morning's big retail reports, and then later Bedrock Capital founder and OpenAI investor Jeff Lewis is going to join us to talk about some of the big tech headlines over the past week. Squawk Box rolling on right after this.
We had a number of retailers reporting just within the last few minutes. Courtney Reagan joins us now with more. Hey.
Wasn't busy enough for
Exactly.
retail, Joe. So Dick's Sporting Goods putting up another strong quarter here, beating nearly across the board. Adjusted earnings of $2.75 at 7 cents above estimates on revenues of $3.06 billion. That's slightly above consensus. Comparable sales at 4.2% 6%, much stronger than estimates, and the third quarter in a row, the comps have gained more than 4%. The athletic retailer also upping its full year guidance for the third straight quarter, comps above the street, though the earnings potentially maybe some people could take some issue with. I spoke with Executive Chairman Ed Stack. He said he wants investors to know the guidance might be conservative, but that the retailer doesn't want to get over its skis as it's a little concerned with 5 fewer days between Thanksgiving and Christmas, some geopolitical noise with tariffs and otherwise. Further, Stack says inventory is up 13%, but it was a conscious decision. We have invested heavily in certain key categories from key brands and particular products inside those key brands. It's a different story, though, for the other retailers so far this morning. Kohl's earnings of 20 cents, 8 cents shy of consensus, with weaker revenues of $3.51 billion. Comparable sales down 9.3%. That is well below the projected fall of 5.1%. The off-mall department store slashing prior guidance to an earnings range now of $1.20 to $1.50 from $1.75 to $2.25. Consensus is at $1.81. Net sales now expected to fall between 7 and 8%. It was expected to drop between 4 and 6%, and the street was sitting at a negative 5.5% for its expectation. The retailer calling out weakness in clothing and sales early this morning. Shares down 16%. And ahead of earnings after the bell last night, Kohl's announced its CEO Tom Kingsbury will be stepping down effective January 15th. Current Michael's Craft Store CEO Ashley Buchanan will take over. We've got more on a write-up on .com. Now, Best Buy also just out with results. It also missing across the board. Adjusted earnings of $1.26, 3 cents shy on revenues of $9.45 billion. Again, expectations for $9.63 billion. Comps down well shy at negative 2.9%. The street expected that to fall just 1%. Shares down now 6%. CEO Corey Berry calls out, quote, a combination of the ongoing macro uncertainty, customers waiting for deals and sales events, and distraction during the run-up to the election, particularly in the non-essential categories for disappointing sales. But she also notes in the first few weeks of Q4, holiday sales have begun, the election is behind us, and we've seen consumer demand increase again. A lot of noise, a lot of stuff going on in retail. You got to be a stock picker here if you want to play some of these names, because the stories are different name to name.
I was just looking at Kohl's, the longer term over that. I mean, the year to date, that stock even before this morning's decline,
a lot of
35%.
Yeah, I mean, comparable store sales for Kohl's have been down, I think, something like 10 quarters in a row. It has struggled.
Best Buy, I don't understand. And they have to come up with reasons, I guess. I'm not sure.
I mean, consumer
so the consumer uncertainty, I'm going to hold off on that widescreen TV until after this
Either
election.
that or they already bought a bunch of them during the pandemic and they don't need them yet.
Yeah, it's not what they said, though. They said the election.
Yeah, that's what they blame for softer than expected sales. They think people are waiting for potentially the big deals. I mean, to be fair, buying electronics is usually a very big period of time during this coming week, right? And so if you're going to buy a flat screen TV, do you buy it in October or do you wait till Black Friday? I mean, I would argue you would wait till Black Friday.
We were comparing against last year, so I don't, so what's the difference?
That's true, but I've talked to Best Buy and they said that people are in the market for extra large TVs. We're talking 90 inches, and those are pretty expensive. I don't know why you need a 90-inch TV. And so if you want something like that and it's an upgrade, then maybe you wait, and that's the product cycle of this holiday season.
90, why not 105? 105?
115?
Well, I don't think you can get a really clear picture with a 90-inch or big enough.
Probably not. Yeah,
105.
it's so pixelated. It's just
105 maybe.
Yeah.
They get more expensive because you got to use the way that they remember Corning, the way that they used to do it. You had to use. You could only make it a certain size, or you need.
I remember when they first came out, and Best Buy was breaking a lot of them accidentally because they were so fragile, and so there was like a big shrink issue that quarter.
Hey, Best Buy has stayed relevant a lot longer than any of us thought.
They have, but they were going to disappear because you need last man standing.
Because you need people to come out and help you do that. I do.
They have good services. That's true.
Exactly.
They do. They've really amped that up. I think they figured out that was a competitive advantage. Can't do that on Amazon.
Thank you, Courtney.
Thank you, Jeff.
Squawk Box will be right back.
Restrictions apply.
Welcome back to Squawk Box. Joining us right now to talk about some of the big tech headlines over the past week. Jeff Lewis, founder and managing partner of Bedrock Capital, which is invested in OpenAI. Jeff, it's great to talk to you this morning. We've been watching a whole number of things taking place. We've obviously watched the end of this Google trial, which may have a huge impact on things. We've watched OpenAI, which you have a big investment in, get into the search business in just the past week or two. And then, you know, Elon Musk, who's obviously now super tight with Trump, is having great success, it appears, with XAI. So I want to get to that and about 100 other things. But where do you see the race at this point as it relates to the large language models?
Yeah, I mean, it's certainly a super exciting time, Andrew, and still continue to believe that OpenAI is the clear leader. You know, there is this dynamic with these LLMs, these large language models, where you've got a lot of catching up that happens, and then other groups then exceed the folks that have caught up to them. So you've had Anthropic chasing OpenAI. XAI has done a phenomenal job of scaling up fast with their supercluster. But the wedge that I think OpenAI has that is still massively underappreciated is that, you know, it was last publicly reported they have over 200 million weekly active users on the ChatGPT consumer product, and I think that is just a extreme wedge. I mean, when I walk through, something that I do that's not so common is I walk through the malls, I see what people are using. You know, I hear people using it to translate things in stores. I hear folks in elevators talking to ChatGPT, and at this point, it's just the definitive consumer brand for AI. And you know, I think regardless of what happens with the LLM race, which I do believe OpenAI will ultimately win, it is the consumer brand at this point.
Do you ultimately believe that OpenAI succeeds as its own consumer brand and people are paying it directly? Or do you think it will succeed as a result, for example, of the partnership with Microsoft, which has come under a lot of criticism recently from folks like Mark Benioff and others?
Yeah, I mean, it's the consumer side is really ChatGPT, which is OpenAI, and so I feel from a consumer standpoint, it is kind of winning in that position. I think it'll be interesting to see what happens with X.AI. I mean, one dynamic that I think we might find down the road is intuitively, I don't think consumers will necessarily want to be using the same AI that is hyper tied with the government. So I think there's an interesting strategic question around what Elon's doing, and he's doing a lot of phenomenal things right now. There's a question of to what degree does the X.AI stuff become somewhat tied in with the US government over time, and I think there's a sense in which that might be extremely valuable, very, very helpful to the US. And then there is this question on who wins consumer, and at this point, it truly is OpenAI.
Jeff, do me a favor, just unpack what you just said there about XAI and Elon Musk and its relationship with the government. How are you seeing that manifest itself?
I'm not seeing it manifest itself in any way today, but you know, Elon is a very, very successful government contractor through SpaceX and other companies, and specifically SpaceX today. Unbelievable business. Beyond the government, they have a phenomenal business with Starlink. But he does do work there, and you know, it's plausible that in the future, some or all of these large language model companies might do work with the government. And I think that intuitively, as a consumer, I feel like you are more likely to trust a consumer product like a chatbot, an AI chatbot that helps you, if it's somewhat less tied in with the government, is my intuition.
You know, Jeff, under a Trump administration, there's a view that there will be a lot more M&A activity than there has been in the past. Historically, some of these big LLMs probably would have liked early on to sell themselves, perhaps even, or at least a Microsoft would have wanted to own an OpenAI, or Google or an Amazon would have wanted to own an Anthropic or something of that sort. Do you see big transformational deals happening in the future under this new administration?
You know, I think there will be big deals that happen. I don't know how transformational they're going to be. I think there's sort of, they're going to be winners and losers. It's possible that the Amazon-Anthropic partnership narrowly works for Amazon. I think the main contingency in this investment they're making right now is Anthropic has to use their Amazon chips in lieu of the NVIDIA chip. So that, you know, it's not clear that that's a purely, as a venture capitalist, I'm trying to get a certain return. I think the return for Amazon might just be Anthropic using their chips. I do expect that there's going to be more consolidation. We've seen some acquisitions here in the private market. But then on the other hand, you have things like the Google DOJ dynamic where it's been reported that the DOJ is suggesting to Google that they divest their investment in Anthropic. So I think these things will cut in multiple ways, but net, yeah, there should be a lot more M&A over the next few years. I do expect to see that.
And finally, Jeff, do you see OpenAI then as a buyer or a seller?
I would see them as a buyer.
Of?
It's not clear today what they would buy, but I certainly don't think it would be Anthropic or another LLM. I would see them, to the extent there are these wrappers on ChatGPT, these relatively thin applications that are gaining traction in the enterprise, or different consumer wrappers on OpenAI. If anything really gains mass adoption, they might be a buyer for something like that. They might buy teams for their talent on the research side. There's a finite number of these extraordinary researchers. One argument I've heard is the researchers are getting less valuable because the AI is now improving itself. But I still think that you'll see talent acquisitions and acquisitions around different products that have gotten large distribution on top of OpenAI's API.
Jeff, it's always great to see you. I want to wish you a happy Thanksgiving. Thanks.
Likewise. Thank you.
All right, when we come back, Lydia's Kitchen comes to Squawk Box. We have the TV host and chef Lydia Bastanic. She's going to be joining us next and maybe showing us a trick or two about things you might be able to use at the Thanksgiving table. Plus, coming up in the next hour, former House Speaker Kevin McCarthy on President-elect Trump's cabinet picks, tariffs, taxes, and much more. Squawk Box will be right back.
Our next guest in studio is a legend in the food and media industries as people prepare to gather for Thanksgiving this week. She's going to share her unique insight on high food prices and the consumer. Let's welcome Lydia Bastianich, restaurateur, best-selling author, and Emmy Award-winning public TV host. Her latest PBS special premieres tonight at 9 p.m. Eastern. She celebrates America Changemakers, highlighting stories of chefs, farmers, and entrepreneurs who are changing how we think about food. And she's stuffing a cricket for Thanksgiving.
Not quite stuffing. Not quite stuffing.
But we'll talk about crickets a little later. Becky, you love crickets. Cricket stew, cricket pasta, cricket.
Huge fan, sorry, Lydia.
It might be the future, you know.
Eating bugs. I've heard we're going to have to do that.
Yes.
Let's talk just about some of the recent articles and publications and news reports that Thanksgiving's going to be cheap this year to put the food on the table. And I think people wish it was. Have prices come down at all for what we're going to serve?
I think that, you know, the food stores and suppliers have realized that there's a difficulty out there, that money is scarce. And so they have some specials to lure people in. And I think turkey is one of those special, because certainly there's abundance of turkeys. Turkeys keep well frozen and so on. But so is it going to be cheaper? I don't think so. But you can still have a great turkey and Thanksgiving. Just be careful on shopping, you know. Certainly a whole turkey. The size of turkey matters, you know. We all buy these turkeys and we have so much left over. Yeah, you can make stock the next day and whatever. But buy a sort of a measurable turkey that you can finish. Or if if you're not at 4 or 6 and the whole turkey is too much, parts of turkeys. You know, you buy the breast on the bone, not on the bone, and you roast that with vegetables. Or even cheaper are the darker meat, the legs, the wings, and all of that. And that you have to cook a long time, almost braise it to get it done. And as far as the vegetables, stay seasonal and local, you know. Root vegetables, the whole cabbage family is in. It's abundant, it's not expensive, and it goes a long way.
Because if food's up 20% and it goes down 0.5%, that doesn't count from year over year.
I know the messages out there are, you know, as a consumer, as a spectator, as a viewer, we have to be selective. We listen to all and then make our own selection, our sort of reasonable sort of approach to spending and cooking.
But the toughest part for me is trying to get everything on the table at the right time. If you have a bunch of people who are over, you're going to have not just the turkey, the ham, all the sides that come with it, and getting everything out of the oven so it's all warm at the same time is tricky.
It is. It's really playing a game. But the oven is the way to go. You cook most of it in the oven, whether it's the vegetables, you know, like a roasted mixed root vegetables. You put turnips and carrots and onions and all squash. Cut it in pieces, season it, about the same pieces so they can cook, and then you have your big tray. And those you cover and you keep warm, you know, but we were just talking off the air, you bought some
heat warmers. This is my new
warmers are good. You have 2 ovens, of course, right?
I got 3 of them.
3 ovens,
but it's still tricky.
Exactly. We said we might talk about some of the trends in food. And in addition to what you're talking about, sustainability with crickets, et cetera, I mean, RFK Jr. thinks we're all totally unhealthy. So what we consume and how we consume it, there is kind of a sea change occurring for some external reasons, external pressures, don't you think?
Yes, absolutely. You know, big industry, we have to sort of be careful. You know, they're a big industry, they're there to make money, quantity and all that. But so he's not wrong all the way. We need to return to natural things. We need to read the label and make sure. And we need to support the farmers, the local farmers and whatever, so that we have fresh, seasonal things. Let's not go to another country.
Lydia, natural doesn't mean bugs and crickets, okay? I'm sorry to tell you this, but look, it doesn't.
Crickets are natural. They have.
I know they are. That doesn't mean I got to eat them.
But you know what?
If Mikey likes it over here, if Mikey likes it, I will try. What? There's cricket pasta, or you put the crickets in with the pasta? Which is it?
Listen, crickets or insects have been on the table for big cultures. You go to China, you know, out in the market.
China. I see the crazy bugs on there. I don't have to eat
Go
that.
to Mexico again. You know, Mexico City. The
Taco Bell has bugs.
I'm talking about eating bugs. It's the bug. Bugs,
What's the best
insects.
bug?
Insects.
What tastes the best?
The crickets are nice, toasted. They're like nuts. You know, I went out there, but let me tell you.
You're nuts.
We're slowly gonna get there because that's the future, Joe. You know, environment.
Have we tried all the different bugs to see which ones might taste the best?
Well, you know, in Mexican cuisine, and in this special, I cook with the Mexican chef. They use worms, they use ants.
Worms?
Yeah. And the worms, they sort of eat fruit or whatever, so they're not...
They're tasty.
They're tasty, but insects...
Not gummy worms.
No.
I like those.
No, you make them nice and crunchy and season them and whatever.
Gummy worms?
Oh, not the gummy worms.
Gummy worms. Can I pretend I'm eating worms?
If I'm going to catch some crickets and fricassee them up or toast them, what would I put on them?
Usually these insects are already dehydrated, dry, so they're crunchy. They're almost like nuts. So I went to visit this young couple in Minnesota, and they're thinking about the future. You know, he is an environmentalist, an attorney, and his consciousness is, where is the world going? Insects are pure proteins, no fat. To sort of reproduce, they don't take much out of the environment, and you know, they're not expensive.
They get stuck in your teeth?
Are the legs still on them?
Oh my God! Well, yeah, all of those things you use.
And I can find the dehydrated ones under the sink.
you
You
know,
don't have to dehydrate them.
I went there.
Roaches?
Roaches? No, I haven't gotten there yet.
Why not? They're juicy, I think. They're much bigger.
Joe, let's get serious. Thanksgiving is coming.
I am serious. I'm seriously ill.
I went to visit these two young, this couple.
Yeah.
And what they did, they grew these crickets and then they dehydrated them and they made the flour. And we made pasta from it. So we made pasta. And so now the question was, what are you going to sauce it with? So I made pesto. You know, pesto.
Pesto would be good with crickets.
Yeah, instead of the nuts, pine nuts, I put the crickets in there, and it was good. And you know what did you taste? Did I taste them really? No. But the nourishment was there, and there was a little nuttiness to it.
Nuttiness?
Yeah,
Okay.
yeah.
I used to keep live crickets because I had
turtles?
I fed them to.
For lizards. Or turtles,
They
yeah.
smell bad.
Also, you're
just the process is not.
No.
Yeah.
Well, you know, but we had to begin to think alternative sort of.
We didn't want to
nourishing.
get bogged down in all that, but I think it's interesting to talk about in addition to everything else. But thank you, and good luck, and happy Thanksgiving.
Thank you. And
It's
tonight, the special, you could see how I made the pesto with the crickets.
And
there's
9 o'clock.
9 p.m.
9 p.m. on PBS.
Thank you, Lydia.
Thank you for having me. Merry Christmas. Happy
Christmas.
Happy Thanksgiving, and then happy
Merry
holidays.
Thanksgiving. Yes.
Holidays all the way through.
Exactly.
Thank you.
All right, it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, President-elect Trump vowing to hit China, Canada, and Mexico with tariffs when he takes office. In a post on his site Truth Social, Trump said he'd raise tariffs by 10% on all Chinese goods coming into the United States on top of the existing tariffs. He also said that he would put new 25% tariffs on Canadian and Mexican goods. Third quarter results from electronics retailer Best Buy are out. That company missing earnings and revenue estimates, also cutting its full-year sales guidance. It now expects full-year comparable sales to drop by 2.5% to 3.5%. That's a worse range than previously forecast, and that stock is off this morning by about 7%. On the flip side, shares of Dick's Sporting Goods are higher, the company raising its full-year guidance after what the CEO there called excellent back-to-school shopping for the season and better-than-expected third-quarter comp sales. That stock is up by 8%. Andrew?
Meantime, I want to get over to Dom Chu, who's got a look at this morning's pre-market movers. What you got, Dom?
All right, so Andrew, Joe, Becky, let's kick things off with shares of Amgen on the biotech side of things. They are sliding the pre-market trade. The company said this morning that its experimental weight loss injection helped patients with obesity lose up to 20% of their weight on average after a year. The results appear to be on the lower end of Wall Street's expectations, sending that stock down roughly 7% right now, so keep an eye on Amgen. Meanwhile, you've got Eli Lilly and Novo Nordisk in the opposite direction, right? Both companies compete in that weight loss injection space and are higher on the back of some of those results. Those stocks are getting a boost also from the federal government. President Biden proposing today plans to provide coverage for weight loss drugs for those enrolled in Medicare and Medicaid. So Eli's up 3.5%, Novo Nordisk up 2.5%, so keep an eye on those. And then we've got an earnings mover as well. Zoom shares are sliding right now, just down maybe about 9.5%, despite reporting third quarter revenues and profits that both beat expectations. They also raised their full year forecast. Now, expectations were high heading into the report, with those shares already up around 24% so far over the last 12-month period. So watch Zoom video shares. By the way, the software maker is also announcing that it's rebranding itself. Its corporate name is going to change from Zoom Video Communications to just Zoom Communications. CEO Eric Yuan said the change reflects the company's evolution into an AI-first work platform. So Zoom Communications, not video, down 9%. Becky, I'll send things back over to you guys.
Okay, Dom, thank you. Up next, automakers and dealers are playing the incentive game this holiday season, but will deals deliver a sizable sales boost? Phil LeBeau will break it down for us after this break. Squawk Box will be right back.
Welcome back to Squawk Box this morning. With incentives 60% higher than a year ago and many dealers once again offering steep price discounts, will it be a December to remember for the auto industry? That's the question of the morning, and Phil LeBeau joins us with the answer this morning.
Andrew, they needed December to remember. Yeah, December has, in recent years, become much more important for automakers and auto dealers in terms of sales. So it brings up the question whether or not that will be the case this year. They certainly are raising the incentives in terms of trying to get people in to close deals. As you mentioned, Andrew, these incentives are up 60% compared with October of last year. Average transaction price still close to a record high, but look at the incentive now, up more than $3,700. That's the average right now. There are some places, if you look around, they'll be like, hey, you want $4,500 off a new vehicle? You want $5,000 off a new vehicle? Let's make a deal. The reason for this is because they have to clear out inventory. When you look at annual auto sales, the pace of sales this year, it's only up 1 or 2% compared to last year. 15.7, 15.8 million. At the beginning of this year, most thought that the industry would sell at least 16 million. That's not happening. Take a look at the dealership stocks. In this group, we're looking at Group 1, Lithia, Sonic, and Carvana. We know the story of Carvana. That's why its performance is off the charts relative to Group 1, Lithia, and Sonic. But not bad returns for those other dealers. Remember, the bulk of the profits they make, it's in the back of the business. It's with service. And then when you take a look at Toyota, GM, Ford, and Stellantis, the issues there's a multitude of them. Inventory levels, the highest since 2019. We've talked this morning about the possibility of tariffs for vehicles that are built in Mexico or in Canada and then sold here in the United States. And then finally, guys, I want to take a look at Rivian versus Tesla since the election day. And Tesla, we know what's happening there because of Elon Musk and his relationship with Donald Trump. But look at Rivian here. Obviously closing that loan, or at least securing that loan, I should say, with the Department of Energy for $6.6 billion. That's part of the move higher that you've seen in the last couple of days.
Hey, Phil, I got maybe a curveball for you, because we were talking earlier in the broadcast about these potential tariffs in Mexico and Canada.
Yep.
When you think about the big U.S. automakers, or maybe even other automakers that are importing from Mexico and Canada into the U.S., do you have any sense of who has the greatest exposure there?
GM. Hands down, GM. 30% of the vehicles that are built in Mexico are for North American sales, and the bulk of that is here in the United States. Then you have Stellantis, 28% of its production in Mexico is for North America. Again, the bulk of that in the United States. Ford has the least exposure, about 16%. So it's in a little better shape in terms of overall exposure, but they'd all be whacked, Andrew. I mean, you're looking at about 2.5 million vehicles that are being exported from Mexico here to the United States. You slap a tariff on those and you rip up USMCA, boy, that's a whole can of worms right there for the big three.
Phil LeBeau, I knew you'd know the answer off the top of your head. Thank you, sir. Maybe we'll see you at an airport tomorrow.
Yeah, he's sensitive about that. Coming up, much more on President-elect Trump picks for his cabinet and other key posts in his administration. Former House Speaker Kevin McCarthy is going to join us. Stay tuned to watching Squawk Box on CNBC. what we can. Oh no, that was President-elect McCarthy. President-elect Trump cabinet picks have started meeting with senators. Now our next guest says this should put them in position for timely confirmation. Joining us now, former Speaker of the House Kevin McCarthy. He also has some news this morning that we're going to get to, and a new group aimed at advocating for pro-technology proposals. It's funny that do we need someone to advocate for that?
You know, the one thing I learned in Congress, and it's something I tried to focus on being Speaker, you get so bogged down on the day-to-day stuff, you're not looking at things a decade from now. Like, that's why I created the Select Committee on China. You know, MIT teaches a course to all the generals in our military for AI and quantum. So 3 years ago, I took 10 members and had them develop a course to teach AI and quantum to all the members in Congress. And then we reconstitute the Intel Committee so they're really focused. And when you think about where America poised today, for AI, for energy, for defense, these are things I worked on. But having served those 17 years and now being on the outside, you really need that private sector in there, that combination to make the right policies. And that's why I created the Alpha Institute. We're rolling it out today. It's based upon, when we try to go to space, if you read the right stuff, Alpha's the name of the module, the nickname, where the astronauts are going to get trained to try to stay straight with all the gravitational pull and the pressures. And that's kind of where you are in Congress. I mean, when you think about Congress today, they're not doing President Trump a favor. They haven't finished the funding for this year. They're going into the next year where the president now has to worry about last year's funding and not being able to think for the future. We're not going to capture AI unless we change the permitting process and enhance the energy grid in America for us to win the AI battle. Defense, we're not going to stay number one unless we reform the processing of the Defense Department. These are things I worked on, but the things I've learned going on the outside, the private sector can help tremendously.
Some of those things sound like infrastructure spending. It feels like this incoming administration is going to be cutting back on some of those things, trying to be more efficient, trying to not waste, and in the process probably going to cut a lot of things. How do you get spending for initiatives like that in an environment?
You know what? You have the capital for this. The problem is not more capital. The problem is the permitting. I was having this debate with Biden when we were doing the debt ceiling. Because what happens, if you're just, the president will sit there and he'd only want renewable energy. I want all the above. But right now, nobody can get a permit to build any of it. And in the debt ceiling, we actually got a little NEPA reform, hadn't done it in 40 years, and we were negotiating to do that further, treat everybody equal so you can build the pipelines, you can build the transmission lines.
A lot of that is state and local, though. How do you plan on overriding that from the federal government?
You're the federal government. To me, this is essence. Whoever captures AI and quantum really captures the future.
But again, back to this administration, it's about giving more rights back to the states, more control back to the states.
I think you could put guidelines on the federal government. But that's why you need the combination. When I've used every single position in leadership when I served in Congress, and what I do is I take members out to Silicon Valley for 2 days. I remember taking Pompeo as a freshman, meeting at this startup across from Stanford called Palantir, right? And what happens is you get so bogged down in Congress doing the day-to-day, you're not looking at what the future is passing you by. Creating the Select Committee on China, the most bipartisan committee we've had, I thought of that by walking the 75th anniversary of Normandy with Pelosi, looking at those grave sites, wondering what could those policymakers have done that day never would have taken place. And it wasn't a year before, it was a decade before. And our dependency upon China, right? From critical minerals, from the processing, from medical supplies. Those are not partisan issues. So this is an opportunity in the Alpha Institute to actually work together on both sides to really look to America. How do we poise? Because look, I think we're in a new industrial revolution. And I think this is, to me, I'm excited about where we are, but how do we harness that and get the right policies?
I don't like being predictable. I'm not going to focus on Matt Gaetz other than to use the same joke I used yesterday with Andrew. I didn't know what to get you for Christmas. I'm paying for a cameo greeting from Matt Gaetz for you. And I figure you might like that. But let's not talk about that. That's history already. You said it wasn't going to happen. It didn't happen. Let's talk about
I also said early on that President Trump would be the nominee and win the presidency. And I also said right before the election, when everybody was saying the gender gap was going to put her ahead, and I told you she's behind on the gender gap than where Biden was. I mean, To me, you saw this coming. I don't understand why.
I thought
You were there every day.
I was, and I thought he went over 300 the entire time.
You said that.
I did say that, and I wish I had said it. And I also said, once every 4 years, the rest of the country is no longer inundated with what they hear from the mainstream media, and they actually see what the American people actually are thinking instead of what we're being told to think.
Well, if you even listen, this is an opportunity for Democrats to retool their policies, and I'm excited to see some of them actually talk about it, because the pendulum has
It's
swung
much better when
too
they
far.
stay the way they were, I think.
Well, no, it's bad for the government. It's bad
Let
for
me
the
ask you
country.
this. So Scott Bessent.
Yes.
Like that taking 333. I hadn't even heard of this, but it sounds good to get it to. Have you seen this? Yeah, deficit get to 3% of GDP, 3 million additional barrels of oil per day, and 3% GDP.
Yeah.
Can it be done?
It can be done. But you know what? You can never achieve anything unless you set out a goal and a mission. What was our goal during the last 4 years? What was our deficit supposed to be? What was our growth supposed to be? You put these out so people can focus and attain them. And now people know where to work towards. I like the idea.
But so much to talk about. Who doesn't make it at this point, you think? Does everyone make it from here, or think RFK Jr.? Yeah.
Yeah, I mean, it's still early. They got to get out and have the hearings and others. But I think, somebody's always fall. Gates was never going to make it anyways. But the others, I think the country likes what he has picked now. And I think the senators sitting down with him, I think they all have a very good chance of
Tulsi Gabbard makes it. Pete Hegseth makes it.
Yeah, I think Pete makes it. I think Pete's turning the corner. And I think you have to look at Pete in a combination of who's going to be the number 2. And this is the way the president thinks. The president looks at, he's going to have a big say in a lot of this, and who's going to be logistically transforming the Defense Department, and he's got a couple names out there that's actually what they look at, and Pete would be doing another job as well.
What do you think of DOGE, the Department of Government Efficiency?
I love it.
Can we get at some of the, they lay out, Vivek and Elon lay out all of these issues that sound like massive waste. Is there that much waste there? Can it be stripped out?
Yeah, because when was the last time you looked at it? And we get into these internal fights. It's kind of the challenge that we had when the Soviet Union collapsed. No one member is going to raise their hand and say, close my military base.
Why didn't you do this, Kevin, when you were Speaker of the House?
You know why? Because I proposed and the president said no. I actually was putting into it that's called a BRAC, a base realignment and closure. This is exactly what we're proposing. This is exactly what we are going forward on. In the debt ceiling, I proposed to the president, because this is the right time to do it. Each party in the Senate nominates someone. They put a plan together, and then you vote it up or vote it down.
Like
No
Simpson
amendments.
Bowles, but that got voted down and
But
nothing happened.
Then you have the ability to do it. But now you've got a Vivek and you've got Elon actually making the case at the same time and letting the public in on it. That's the best thing. That's like going into a business and saying, give us your opinion, right? Tell us where there's waste.
Because that will make the public in turn put pressure on the members of Congress to look at ways.
And it's not partisan, so it's not coming from one side, right? And everybody can have an idea and tell us where it's at. One person doesn't know everything that's happening in government. You really want the people inside and the outside that interact with it. And with technology today, why aren't we utilizing that? Why is it easier to get a car from Uber and rate the driver and rate the person who rides in it than for a veteran to get an appointment for a doctor and rate the doctor? And what you would do is you would slim government, but you'd be more efficient, you'd be more effective, and you would provide a better service to the constituent. And every dollar you save is not government's money.
So what about all of these things that people keep saying, oh, the civil service is not going to be allowed to do that, you can't make as many cuts. You understand government inside now, you think it can be done.
Look, what DOGE puts together is not going to be lock barrel, this is what's going, because policymakers have to vote on it. But the structure will dictate the behavior. And if you started inside, the other side would just fight with you, no matter who proposed it. This is on the outside. This is asking the public to come in. The debt has gotten so large, you keep plussing up government every time there was a crisis. I mean, in the debt ceiling, we cut $2 trillion, you thought it was the worst thing on earth. No, you had to go much further, but we could only look at 11% of the entire budget. They walled everything off. Now you can look at everything in a perspective of somebody on the outside and giving us better efficiency. I think that would make the case stronger when you first go in, that it's not partisan. You might not get 100% of it, but I'm telling you, if you get 50% of what they're proposing, the country is in a much stronger position than we were. Yeah, I'm excited by it.
Do you think that with all these different cross currents that were, tariffs were announced, or on day one he's going to try and do some of these things?
Yeah, but did you read what he announced and why? I think this is very important.
Yeah, with immigration and fentanyl.
Immigration and
I got it.
So what are you saying?
But with all these, I'm just wondering, and Scott Bessent said he's going to get the tax cuts extended and do the no tax on tips, do all this thing. Don't a lot of things have to go right for us not to reignite inflation and scare the bond market? And wouldn't you? I'm surprised the bond market it's very strange the 10-year yield keeps going down, because it's supposed to be at 5% by now from fear of Trump.
No, think of this. When he says to stop fentanyl, think what fentanyl is doing. It's the #1 killer of Americans between the ages of 18 and 45.
Right.
But think about the ages between 18 and 45. It's the years you're most productive, the years you reproduce, and the years you serve in the military. It is the most critical time for a nation. So if this is the #1 killer and he's stopping that before he even goes into office.
With the tariff, no one thought that with the tariff and
that's
illegal
why you should look at
immigration.
it. Then he's stopping immigration. Will these even go into effect? No, if he's successful, they won't even go into effect. What the president is telling you, he's going to focus on America, but he's going to use every single tool he has in whatever negotiation you're talking about. That's why the world is going to be reset. That's why it's going to be a safer place, and that's why we can attain all those goals we set out. But when you're defending the #1 age generation for the future of the currently serving, and you're stopping what it's all coming directly from China, that's a direct attack on America. That's going after those who serve in the military. It goes after our most productive years. It goes after the years that you reproduce. That's really a big attack on your economy itself. So I wouldn't worry about the bond market. I'd be excited about, yeah, I'm stopping that. So the generation that's doing all the work right now is healthier, more productive, and going to live longer and reproduce.
RFK gets in.
I think he gets in.
Tulsi Gabbard.
I think she gets in. Look, I've known.
Getting quieter and quieter over there, Kevin.
No, look, I've known Tulsi a long time. I even went to her wedding, and she was in our workout team. I think Tulsi is misconstrued because she's a quiet person too. But she loves this country. She has served in the military. I watched her. She never once complained, but proud of going on what she's doing. And
But I think the question is what the Senate thinks.
I don't think the Senate knows her. Right? The Senate doesn't know her. And you've got to think of who she is. She ran for president in a party that attacked her. And she was bold enough to say, no, I'm going to put the country first, and I'll even flip over. Right? I'll support the person. She didn't just say, I'm just going to be a Republican. She says, I'm frustrated. I'm not going to give up. And then she watched somebody that would sit down when most Democrats were so afraid to even talk to President Trump. She wasn't afraid to. But she didn't just say, I'm just going to be a Republican. No, she said, I'm going to help you because it's the right thing to do. That's a good quality.
Mr. McCarthy, you want me to still call you Mr. Speaker? You've left that life behind.
Hey, once you speak, there's only been 56.
I know that. I know.
I want 15 rounds to get it. I want to keep it.
All right, Mr. Speaker. All right, Mr. Speaker. I just think you like your new gig better than the old gig.
You know what I like? I like coming, seeing you.
Well, you are welcome to come.
I don't know. I took Andrew's seat. I didn't go a little liberal. It was pretty good.
Yeah, you did all right. You might have gone a little bit. I've always said that about you. A little. Didn't you like Paul Ryan a lot? You're friends with him, right? Look, you're gonna have rubs off on you. Rhino.
You know what? You can never have too many friends in this world.
You're right.
Paul is not. Paul is a conservative.
Please. All right, we'll take you. Yeah.
All right.
He's a communist, the lefty. A lefty. I mean, the guy's, anyway. When we come back, a deep dive into this morning's big slate of retail reports, and we're going to talk crypto and Bitcoin's rise following Donald Trump's election with blockchain investor Dan Moorhead. All that and more as Squawk Box rolls on.
Qualcomm is no longer as interested in taking over Intel as it once was, and this is a Bloomberg report which cited sources saying that the complexities of such a deal have made it less attractive now to Qualcomm. Back in September, reports said Qualcomm had made a preliminary approach to Intel about a possible deal, and Intel's in the midst of one of its biggest ever restructuring. Thousands of jobs are being cut as the company struggles through market share losses, and what so far has been an inability to crack the AI market in any meaningful way. It's weird, it's complicated, but it's a hell of a lot cheaper than it would have been back then, so it must be a reason why it's cheaper.
You wonder, it comes on the same day that we hear about the funding that's coming out. It's going to be less than it was originally under the CHIPS Act, and the targets have to be met before they get paid out on some of those issues too. But yeah, maybe just a complicated situation.
Actually, it's rallied from 19 to back to where it is anyway, a little bit. As you can see it on the chart there, it was actually lower back in April.
Speaking of chips, when we come back, we will talk about the future of chips and the Science Act once President-elect Trump takes office. What happens to all that money that Congress targeted at semiconductor manufacturing? The outgoing Biden administration finalizing a multi-billion-dollar award to Intel this morning. We'll talk about all of that and more when Squawk Box returns.
Welcome back to Squawk Box. The Commerce Department this morning finalizing a roughly $7.9 billion manufacturing award to Intel. The Biden administration appearing to be moving to get money out the door before President-elect Donald Trump takes office. Joining us right now on the state of the U.S. manufacturing chip business, if you will, and all the global competition, Chris Miller, professor at the Fletcher School at Tufts University, the author of Chip War. This does seem to be a lot of sort of last-minute finagling before the Biden administration turns it over to the Trump administration. And I wonder what you think of what they're doing here.
Well, the industry has been pushing to get these grants wrapped up as soon as possible. Companies want the money that they need to build their factories, and so they've been pushing the government to hurry up and get the grants over the line. And I think we've seen with TSMC a couple days ago and with Intel today, some of the big grants being wrapped up.
No, I totally understand that, but the part of the question is, are they trying to get this money out the door so that the Trump administration can't, I imagine, try to claw it back, which I imagine they might otherwise want to do?
You know, I think there's been a lot of focus on this question, but if you zoom out, the CHIPS Act was first brought up in Congress under the Trump administration. TSMC's first investment in Arizona was announced during the Trump administration, and so there's been actually a whole lot of continuity between what the first Trump administration put in place and what the Biden administration's been executing. And so I would downplay, I think, the significance of campaign trail rhetoric. The reality is that this legislation was supported by both parties in both houses of the Congress, and I don't think the new administration is going to dramatically change it. And so the grants that are being finalized right now, they're likely to be supported by the next administration too.
Given the challenges that Intel is clearly having, when you look at the grant program, if you will, do you think that a decade from now, we're going to look back and say, this was great, we did it perfectly, well, not even perfectly, we did this well, we're happy we did this? Or do you think we're going to look back, like I think a lot of people look now at even some of the EV efforts or EV charging efforts that didn't appear to work the way they were supposed to?
You know, I think perfect is a pretty high bar. I think if the question is, will the CHIPS Act have spurred a major investment boom in chip manufacturing in the United States? The answer is already pretty clear. It's yes. There's been something like a 10x increase over the past couple of years in investment in chip fabs relative to the trend over the prior decade. TSMC, for example, already has a plant up and running in Arizona with the manufacturing quality, the company says, matching what it can do in Taiwan. And we've got big projects underway with other companies as well. I think, you know, you can't see with a crystal ball any specific company's plan, and that's why the government's making a broad array of bets. It's got a portfolio of 24 different grants in different types of the technology spectrum, and so it knows it's not going to predict perfectly, but I think the broad portfolio is already having a major impact on investment in chip manufacturing.
Where do you think the success, so if you were to identify what you would look at as a success in all of this, beyond the sort of broad macro or what you just suggested, are there any specific examples you go, that's a win, that's a win, that's a win?
I think if you look at TSMC's investment in Arizona, which is a plant that, as I mentioned, is already up and running, that's a plant that would not be here had it not been for the US government pushing for it and incentivizing it. And if you rewind the clock to a year ago, all of the discussion was about how TSMC couldn't do it, how the labor shortages were too intense, how construction was taking too long, and yet here it is, it's up and running. Costs are still a bit higher than in Taiwan, no doubt about that. But there's real diversification coming from that, and that's just the first of 3 plants that TSMC says it plans to build. If there hadn't been a CHIPS Act, there wouldn't be that facility.
Look at 5 years from now. Do you see the possibility of competitive chip manufacturing in the U.S.? And
I think there's no doubt.
Because if it's more expensive than elsewhere, that unto itself is a complication.
For sure. I think there's no doubt that as there's more chip manufacturing happening, costs will fall as ecosystem effects emerge and you begin to get some economies of scale. Right now, there's a pretty substantial cost differential, especially for leading edge chips between Taiwan or Korea and the United States. That's going to fall. Is it going to go to 0 over 5 years? I'm not sure about that. But is it going to decline enough that companies are willing to pay a little bit more to have a more diversified manufacturing base? I think that's plausible. And the fact that companies like TSMC are willing to make the bet on not just one facility, but multiple facilities over a decade in the US suggests that they buy the business rationale. Even if costs aren't exactly the same, they think they can make the case work.
Okay, so I understand the TMC piece of this, given their expertise and their success. I'm more questioning the Intel piece of this, which is to say that business has been challenged for a long time, and they have not seemingly gotten to the same point as TSMC. Do you see them getting to that point? And how much more money do you think the U.S. government may have to give them?
I think the key challenge Intel faces is not money per se. No doubt they're happy to get their CHIPS Act grant. the key challenge they face is winning customers for their business, and that alone is going to determine the success of their effort to build out their manufacturing business in the U.S. Will it work? I don't have a crystal ball. I think it's got a shot, which is why the company is continuing their investment. But it is a tough market, and TSMC is a pretty tough competitor, and so it's far from guaranteed. But if you're sitting in the U.S. government shoes, you'd rather make a portfolio of bets and see which company succeeds in the marketplace rather than just trying to pick a single winner and put all of your eggs in a single basket.
Do you think we have enough competition, chip competition in the U.S.? You know, there's been talk about potentially a tie-up between like an Intel and an ARM, for example.
Well, I would say those are two companies that operate in pretty different segments of the chip business. Intel's focused on chip manufacturing and designing specific types of x86 chips. ARM is in a completely different segment, selling intellectual property and licenses. And so, yeah, they're in the same industry, but they've got entirely different product sets. And so if you're looking at antitrust issues, you've got to segment beyond just the chip industry. I think there are segments where one might be worried about competitive dynamics. That's where you've got only a single player in a single segment. Then if you look at Intel and ARM as two examples, they're really in entirely different swim lanes.
All right. Chris, want to thank you. Appreciate it.
Thank you.
Thank you. Joe?
Thanks, Andrew. Coming up, blockchain investor Dan Moorhead from Pantera Capital joins us on Bitcoin's run-up since Donald Trump's election and where he sees the crypto market going next on a day where Bitcoin's pulling back, but closer to 90,000 now than 100. Squawk Box will be right back.
breaking news, Mexico's president sending a letter to President-elect Trump. She says migrant caravans are no longer arriving to the U.S.-Mexico border. She says, we always have shown Mexico's willingness to stem the fentanyl epidemic in the United States, and she says it is not with threats or with tariffs that the migratory phenomenon or the drug consumption will be addressed. So obviously a response to what President-elect Trump has said, that there will be 25% tariffs on anything coming from Mexico or Canada starting on the day that he takes office, that will be one of the first things that he puts into effect and into action until there is something to be done with illegal migrants coming across the border or with fentanyl. And he's reaching out and saying similar things about China, that he's going to be putting 10% additional tariffs on China until they address the fentanyl that they are sending to Mexico to come across our borders.
So it's not going to be tariffs or threats. Then what does she suggest?
I don't know. She says, first of all, it doesn't exist. Second of all, you're not going to.
Oh, it doesn't exist.
First of all, second of all, you won't get.
And the border's secure, as we were told many times. Bitcoin pulling back a little bit today. It's at 92,000. It got to near 100,000. Still up 30% since Donald Trump's election win earlier this month. Our next guest has had a front row seat to the crypto rally. Let's welcome Dan Moorhead, Pantera Capital Management founder and managing partner. And the firm out with some news this morning with Bitcoin's rise. Pantera's Bitcoin fund recently hit a milestone of 1,000 times the initial where it was since inception. And Dan is here. Thanks for joining us. And you were nice enough to, I guess it's nice, kind of unbelievable, to send us that original memo that you wrote back in 2013, where you were basically saying, okay, now's the time. It's pulled back. Bitcoin, it's time to buy it, pulled back to $65 from $130. And that's when the fund, it's time to do it. And you said, I'm personally going to buy 30,000. And this was the launch of the first institutional vehicle for Bitcoin.
Yeah, the first crypto fund in the U.S.
First crypto fund, and 1,000 times was passed, and now it's 30% above the 1,000 times at this point.
Still early though. I think the median institutional ownership of blockchain is 0. Most institutions have 0 exposure, and even the ones that are really progressive, really been working on it, have 1 or 2% of their allocation to blockchain. So I think we still have a couple more decades to go.
You've put that 95% of financial wealth has no investments in blockchain whatsoever.
They have no material investments. Some people have 20 basis points, 30 basis points, but ultimately I think it'll be an asset class with 8% investment.
So you would date the regulatory headwinds, you would say that goes back 15 years, basically, and now it's actually, are they tailwinds now?
I think so. I think most people in the industry just want clarity. They want rules written down so they can follow them, and it seems like the president-elect has a much more direct approach to promoting regulatory clarity. And if you think about it, the U.S. was very instrumental in making the internet happen in the United States. The U.S. government built the internet and then provided all kinds of regulatory safe harbors, and all the largest internet companies in the free world are in the U.S. In blockchain, it's the polar opposite. 93% of protocols are based, 93% of the market cap is based outside the United States. It'd be great to have that flow back.
And you called Trump the first pro-blockchain U.S. president in office.
Really?
Really?
Yeah, he bought cheeseburgers with Bitcoins. First time a head of state of the United States has done that.
You have heard about a possible strategic reserve. You think that's a possibility or a probability?
I think there are 2 versions of that. One is the president-elect has said that he will not sell the Bitcoins the U.S. already owns. The United States already owns 1% of the world's Bitcoins. That seems easier to do than getting passage to buy additional Bitcoins. But I think it's a great strategy. The U.S. is the reserve currency of the world, so we don't have another currency to save our reserves in. So saving in Bitcoin would be a great strategic move.
Did this come easy for you? I mean, were you a baby cub? Were you a cub, a tiger cub?
Tiger cub.
And suddenly you're a crypto maven. Was it hard initially, or so many people still resist? They still think it's a beanie baby.
No, and that's why I'm still so bullish. It's so many people are still so skeptical. And I was looking back at my notes. In 2016, I did 170 investor meetings all around the world trying to raise money for Bitcoin and crypto. We raised $1 million.
Oh, man.
What did you read that convinced you? Because I watch people on our people that work for this company saying there's no reason to believe that it's any store of value. And it's funny, they come up with the same old argument that it's not backed by anything.
Yeah.
As if anything that has been used for money, once we got off the gold standard, nothing's backed by anything. It's money. That's a characteristic of money. It's used
backed by the full faith and credit of the U.S. government.
Not really. Not when you can issue as many as you want. It's not backed by any. It's paper. It's fiat. It's much less. Money itself for 4,000 years has represented. There's certain characteristics that Bitcoin has 6 of them. Does it not? Is it even better than gold?
Yeah, no, it's better than gold, paper money, Visa, MasterCard, all of these things. And that's why it's such a great trade. But the intrinsic value stories, is, if you think about it, the intrinsic value of a Jackson Pollock is $40. But Jackson Pollock paintings have an 80-year track record of appreciating.
Well, now you sound like greater full theater.
No.
But with blockchain, because we know all the reasons. We've heard all the reasons why it is, because it's decentralized and it's a distributed ledger and it can't be double counted. I mean, there's a lot of reasons why it's, if there's a tangible amount, can't be destroyed. Can it be destroyed if you unplug the computer?
No, everyone has a copy of it. They just go on and keep doing it.
Every single person that's ever bought a Bitcoin.
That's tricky. Some people have done that. Probably 10 or 15% of all Bitcoins have been lost. Actually, probably more. It was 13% a few years ago. But that argument is all about expected value. I wouldn't bet my entire life savings that Bitcoin's going to go up, but it's been averaging almost doubling every year for 11 years. What if it does one more year, right?
Would you bet your life it's not going to zero?
I used to tell people it could definitely go to zero to try and be, conservative. I don't think it's possible now. 50 million people in the U.S. own it, 300 million people globally. BlackRock and Fidelity are selling it. It really has reached escape velocity.
But you're 745,000. I mean, I heard 13 million from Michael Saylor the other day.
I think it can go. It's going up 3 orders of magnitude since we launched our fund. I think it could go up a fourth, and that puts it at 15 trillion market cap, which it still seems relatively small versus 500 trillion of financial assets. That's doable.
Okay. David, thank you. Time will tell. Appreciate it.
Thank you.
Coming up inside this morning's big slate of retail earnings, Courtney Reagan's going to join us right after the break with a wrap-up. Squawk Box coming right back after this.
Ollie.com.
A big morning for retail results. Courtney Reagan is here. She's got all of the highlights on what we've been hearing. Hey, Court.
Oh my gosh, there's so much going on. The earnings calls are actually underway still right now for Best Buy, Dick's Sporting Goods, and Abercrombie & Fitch. But here's some highlights. So Abercrombie, the most recent release this morning, beating again across the board. Comps up 16%, also raising its full-year sales guidance. Now, Abercrombie has actually been the positive retail outlier for a number of consecutive quarters in a row, and this one no exception. Dick's Sporting Goods also beating across the board. The retailer's comparable sales growing more than 4% for the third straight quarter. It's also the third quarter in a row that Dick's has increased its guidance. So executive chairman and son of founder Ed Stack told me investors may think it's a little conservative, but the retailer is, quote, a little concerned about a shorter holiday season and geopolitical noise impacting consumer sentiment. Now, in light of the new tariff policy President-elect Trump just laid out last night on Truth Social, Dick's CFO Nadeep Gupta said on the call, quote, there is not much exposure in its supply chain from China, Mexico, or Canada. Meantime, on the Best Buy call, CEO Corey Berry said around 80% of the cost of goods sold that it sourced last time around, we talked about this, are from China and is still about the same. And then Mexico is behind that. Best Buy's quarter fell well short of estimates and shares under pressure here. On the call, Berry said she is encouraged, though, by early holiday results, saying, quote, for the first 3 weeks of November, enterprise comparable sales are up 5%. She said Best Buy is, quote, managing what it can control in what remains a volatile environment. Now, Kohl's also disappointed with comparable sales down much further than estimated at a negative 9.3%. Its shares under pressure by 18%. Its CEO calling out weakness in clothing and shoes for the quarter. Kohl's did announce that CEO Tom Kingsbury will be stepping down as CEO January 15th. Michael's CEO Ashley Buchanan steps in. He also spent about 13 years at Walmart and Sam's Club. That call starts at 9 a.m. where we'll get a little bit more color on the quarter, but not a lot to love in the Kohl's report this morning.
Definitely not. I'm trying to get a feel for what the holiday shopping season looks like. You said that Kohl's was talking about the first 3 weeks of November being better.
Best Buy was talking about the first 3 weeks.
I'm sorry, Best Buy saying that, and we heard the same thing from Macy's yesterday, that maybe the November comps were better. Now, that could be trying to put a highlight on, you know, digging around for a pony somewhere in the middle of all that.
Yep.
But what are you hearing from other retailers too?
You know, I think everyone is just worried about the lumpiness of the holiday season with this short 5 days, and they think that we're going to see this surge in the middle, or in the beginning rather, and then around this week right now when we have this Black Friday, and then potentially some quietness, and then a big surge at the end. And so there's a lot of sort of caution around, yes, things might be bumping up now, but we're not sure that trend.
Hang on to have.
And that's what CFO Best Buy was actually talking about on the call just now. Like, it's only 20% of the quarter those first 3 weeks.
Okay, Courtney, thank you very much. Folks, let's take a very quick look at the markets before we hand things over to Squawk on the Street. You'll see right now the Dow futures are under some pressure, down by about 150 points. We started out in positive territory at the beginning of the morning. Amgen saw some pressure. That may be what's pressuring the Dow right now. You can see the S&P is up by 16, the NASDAQ up by 72. That does it for us today. We'll see you back here tomorrow. Squawk on the Street begins right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl K. Today with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are mixed this morning, and so is the reaction to some retail earnings and the president-elect's announcement that he'll impose import tariffs on America's 3 largest trading partners. 10-year yield is higher, but it's still below 4.3. Our program begins with the Dow and the S&P tracking for their best year since 2021. Plus, some retailers are crossing the tape as the holiday shopping season enters full swing.
Plus those trade threats, the president-elect vowing on day one to impose a 25% tariff on all products from Mexico and Canada, and an additional 10% tariff on goods from China. And we're keeping an eye on shares of Amgen this morning. They're down ahead of the open. The company says its obesity drug caused up to 20% weight loss after a year, with no plateau, but seemingly not enough to please investors.
Let's begin with the markets one day after those fresh record highs for the Dow and the S&P, Jim, and the Russell, which couldn't quite get it on the close.
No, look, I think that these days are all kind of rotational, though. I watch a lot of the shows that talk about trading, and every day there's a obituary for one part of the market. Yesterday was an obituary for small cap. Now, there are some small caps that are deeply related to AI, to aviation, to these themes of Bitcoin that really don't have anything to do with reality and are not making money. And those are the ones that were excluded yesterday. Yesterday was not a mag day, and yesterday, David, you know, NVIDIA's up today because of Fugado. Fugado.
Yeah.
Are you watching Fugado?
Forgot about it.
Yeah, the marriage of Fugado.
Yeah.
But it does. Did you do it? I played with it.
I listened to it. I listened
What'd
to
you
YouTube. It was interesting. It was interesting. We'll get to it in a minute. We'll share that with people. But NVIDIA's up today. It was down yesterday. Tesla obviously was down yesterday in part because it's being excluded from California's EV.
What is that?
Rebates. Rivian up today because they're getting another $6 billion from the U.S. government.
But it's a loan.
But the market is going to be broadly lower, I believe.
No, I think Engine's going to be broadly lower
because of the latest on.
It was up this morning.
On posts.
It was up this morning.
What was up this morning? The market?
Tariffs.
Yeah, tariffs. I'm talking about tariffs.
Because I think that.
And what we make of it.
Didn't you think that China was going to be the worst? And then, I mean, weren't you surprised? It must be a coincidence.
What did you just say?
It must be a coincidence.
Yeah.
Come on,
No, I like that.
Thank you.
I like that. I mean, Carl, it is reminiscent of the days during and even prior to the first Trump administration when we would react to then they were tweets from the president or the president-elect even back in 2016. And the market would react, and then it's very much unclear exactly what the policy would end up being.
And that's, I think, one of the problems. If you go back to the big FedEx debacle, Amazon debacle, what would happen is you would try to figure out what the end game was, and the end game was just, hey, listen, I want a better deal. I do think that Canada, okay, so Canada, we have a great trading partner, and no one thinks that it's anything else. And then Canada gets slapped on the same thing as Mexico. And I puzzle over it because I think that one is about people coming to the country that he doesn't want, and the other's about
fentanyl? What?
Canada's not really known as a bastion of fentanyl. I mean, we have a lot of cities in this country that take fentanyl, but it's not from Canada. Now, Canada, I mean, if you take a look at what Cleveland Cliffs did, they bought a Canadian steel company. And everybody thought it was a good deal. The government thought it was a good deal, and maybe that's just the Biden administration. I'm just finding that Canada's quizzical. Not President Sheinbaum. I mean, she's a total hitter and is out there immediately saying, listen, we're not letting any of these caravans go.
She is writing a letter to the president-elect. She says that it's not with tariffs or threats that the migratory phenomenon nor the drug consumption will be addressed. But we are watching these country ETFs, Jim. Mexico, EWW down 2 this morning.
Well,
Canada's down 1.3.
I mean, that's auto.
Currency in both is down, obviously, versus the dollar. Auto is so important. Yeah.
Auto is very important. Mexico more than Canada. Canada's, there's a lot.
Things go back and forth sometimes across the border. The logistics that have been set up by many of the automakers.
That's why we can't
are
figure it
fairly
out.
complex.
Back and forth, you get
very hard to figure out, and who's going to get exemptions and who won't, and what will actually be the ultimate tariff, if there even is one. But, I mean, we've been down this road before, but, you know, it is a negotiation, and he's begun it, apparently.
Right, and I think that one of the things that is very challenging is exactly what we have up here right now. He destroys the currencies. I mean, he makes them cheap, and then we'd be able to buy even more stuff. I mean, you have a currency, and suddenly there's a Truth Social, and everything that you had planned on doing that day in that currency is wrong. I mean, these are hard to hedge against.
Right. Of course, the big kahuna is going to be what the Chinese do with the yuan.
Exactly. Look, I think that we have to. China, we already have a tariff on. The 60%. I think the reason why I think the market was not bad early on was that, remember, he was saber rattling on 60%, and his opening bid was not something that would tell you that they're not going to be 60%. I mean, maybe he settles it like 5. I mean, it's also not targeted. I mean, Mexico, the problem with Mexico is transshipment of Chinese steel. They make half the steel in the world, they're flooding the world, they go to Mexico lets it come in, and then it destroys the U.S. steel industry, it destroys the Nucors. It's bad for Cleveland Cliffs.
Why would you want to limit your options at the open?
I don't know.
Yeah.
I don't understand. This is little, we need a dose of Navarro soon. We got to get some Navarro.
Because that would do what?
Well, then you would know that that we have a nuclear option if we have to play it.
Well, they don't let Navarro out until they,
I think
until they
Navarro
need the attack dog.
Yeah, I think Navarro comes in when there's a resistance.
And then he just starts.
Well, you know, there's a line. The Chinese are saying nobody wins in a trade war. That's not Navarro's view.
I know.
There's winners and losers. I think we're missing Navarro. We're missing the hammer. Right now we got the glove. I need the
Jim,
fist.
I don't know. Others may be better to answer the question. Who are the winners and losers from the first 4 years of the Trump administration when it came to
Vietnam,
trade?
Malaysia, Indonesia. Go to Walmart, and you'll see all these countries that have clothes there made, and they don't. It's not all China anymore. Make you get some shirts. Get some really nice shirts from Jordan. Do you know Jordan has good shirts?
I've seen, yes, I have seen that they manufacture that they.
That's completely untrue. You
No,
don't know anything.
I have seen Jordan. I have. They're good with the needle.
You really know that?
Yeah.
Okay. It's a little surprised.
They do know how to sew.
They're great
Making
sewers.
chips is a different story.
Yeah. Well, right. But I do find that, look, these other countries were huge winners, and they, to an extent, are our friends. I mean, Vietnam is a friend, and it's not trying to steal our intellectual property. That's the Navarro view. Intellectual property theft. Well, there's 7 different sins that the Chinese commit.
But Carl, obviously many investors are trying to grapple with what the inflationary impacts will ultimately be if in fact there are significant tariffs, not to mention obviously the other side of it being deportations and what that will mean to the workforce and potential wage inflation. And here we go. So, you know, we've still got some time until the president-elect obviously takes office, but we're already trying to put things in the mix, but it's very difficult to know.
Nobody understood the sales tax issue. Nobody understood that. The Democrats put it out. Now, I took 3 years of economics at Harvard. I couldn't figure the damn thing out. I was like, okay. You know, you can't just say it's a tax. It's not just a sales tax. It's a regressive tax. But there were many different factors that made it seem like that was that was not well explained. In the same way that Goldman was used to say that Trump's his plan was far more inflationary, and the progressives hated the fact that she had read a Goldman, that Vice President Harris had read a Goldman Sachs report. I mean, the things that they were saying economically were so confusing. And there are people who come on and they claim that it was coherent. And I want to know where they went to school, who they studied with, and what the heck they learned.
Well, Yardeni does a good look today at how this is not 2016. Back then, core CPI was 2.1. It's now 3.3.
Yep.
The 10-year was 1.8. It's now 4.5, 4.4. Debt to GDP was 104. Now it's 121.
Right, and he talks about bond vigilantes, but it puts in the Treasury designate is interesting. But yeah, I know we're not where they figure, and that's why I think that December. I know December, there are people, the Fed governors, are pretty much tipped their hand, but the economy's fabulous. The economy's fabulous. That was another thing the Democrats missed. The economy is fabulous. They never said that. It's fabulous.
Well, I think they did. I think they tried, but they.
Well,
what you could argue is they didn't do a good enough job articulating.
Yeah, David's right.
Yes,
David's right.
And it's hard to convince people when the price of eggs is up a lot.
You had to go to Walmart. I mean, there's a great piece today
Jim,
about
even
Walmart versus...
yesterday I went to a place I used to go to lunch regularly and around here, and it was $17.
Well, there you go.
Something that was $12.
Well, there you go.
And I
You should
remember
run
the
for
12,
president.
even though it was 5 years ago. But I'm like, why? It used to be 12.
Well, at least it wasn't under lock and key. You had to call someone.
It's true.
It's like the automatic.
No, that's true. It was very good.
But Target, the piece
an of
the
enormous
journal
amount of
today was
money.
devastating. That was
Excuse me?
the Target piece.
The Target piece is tough. Talks a lot about losing share to Walmart and Amazon. Daiwa today cuts to neutral 130.
Yeah.
They were at 170. Over the weekend, pieces about how they just mismanaged supply chain.
Yes. So you started, yeah, that was bad. Well, a lot of it was because they did have port strikes, so let's give them that. But you're starting to see that it's not just the good and the bad, it's the good and the existential. When you go over the Kohl's quarter, now if you do -10 on the comps, say -9 on the comps, if you do -10 on the comps, then that is the death rattle. You can't come back. I did a big study on -10. Yeah, I'm really hyping myself today, aren't I, Chief?
Yeah, you are.
And a -10 is the point of no return. You can't get back.
You're referring to Kohl's. Comps down 9.3. We were looking for down 5. Between Kohl's and Best Buy, Jim, is that enough to offset A&F and I don't know, Dick's?
Oddly, Best Buy had a very positive line in a conference call a few minutes ago. Let me just quote that. Best Buy Enterprise comparable sales up about 5%. Now here it is. You'll love this. In the 3 weeks of November. So coming out, they are very encouraged by how our doorbusters and other Black Friday sales are resonating. I get the doorbusters thing every day. They're giving it away. And that's working, and that's why that stock came back from mine. You know, it's a club stock. We've been selling it candidly, but it did come back from mine from 86 because she was positive. Corey Barry was positive about the holiday season. So you get a little balance.
They talked about election distraction, right?
Yeah.
The kind of what Pepsi said, which David will never forget.
What? I won't.
Why were there no
People
election
ate
distractions?
fewer snacks
Why were
because
there no election
they were worried
distractions?
about the election.
That was good. How about, why were they not worried about the election at Walmart? Why are the people only worried
I
about
can't
it?
explain it. It was a unique phenomenon during a period of
on
time.
that side of the street.
Only
Yes,
affected
it was
certain
sunny on that
snacks
side.
that are made by Pepsi, and it was people who were very concerned. I would think if you were, concerned, you would eat more.
Well, you eat Uncrustables. You know, when you play golf, it's Uncrustables the way that's how you eat. Because it's you look
You're
at
bringing
a
up
one-handed
Smuckers now,
sandwich.
which is also going to be up this morning.
Yes,
on
although,
better than anticipated.
although
numbers.
Hostess was not what I
It was
wanted.
not Hostess that carried the
Uncrustables,
quarter.
you're out. They're actually basically out of Uncrustables. Bustelo is dynamite coffee.
How's
by the way.
RFK Jr. going to feel about Uncrustables?
Well, what, Bobby Jr.?
Yeah,
It's not clear.
he's not happy about it.
No, it's not clear. They're going to throw in. You should worry
There's a
about
lot of things that aren't going to be clear.
What is clear?
Dick's Sporting Goods.
Dick's was great.
There you go.
Once again, Dick's is just, see, there's a real category killer. You have to be a category killer, you gotta go home. It's category killer or go home, all right? Think of it like that. Kohl's is not a category killer. Look, I told you the Kohl's story about denying me credit,
Yes.
and that was not fun because there were 100 people behind me.
wanted
But
a pair of
Kohl's cash,
trousers.
David, no.
Yeah. Well,
They're not taking it at Walmart.
Sephora, Amazon pickup, nothing worked.
No, and yet Sephora, Kingsbury did Kingsbury's out. He did relabel when you go to a Kohl's, which I'll take you to my Kohl's. It's Kohl's Sephora, and Sephora knows your birthday, but people say Ulta knows your birthday.
Kohl's is less than a $2 billion market value now, guys. It's almost falling off our radar.
Mr.
Things to talk
R,
about.
they turned down a bit of a bid there. Remember that?
Probably shouldn't have.
They probably should have hit the bid.
Yes. Sometimes you just gotta hit the bid.
How about the sandwich that he bought for 17? That should be 12.
It wasn't a sandwich. It was all right.
All right, I'm taking note of that.
One of those things.
When we come back, we'll get to Amgen this morning. Shares taking a hit on news regarding the company's experimental weight loss drug. Also, some other news regarding the GLP-1s when it comes to Medicaid and Medicare. Futures are split here on this Tuesday. A lot going on. Stay with us.
Okay. La 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 la.
Hello, my name's James Howard. I'm an ex-liberal. I just didn't like the platform that the liberals have been promoting human trafficking, high inflation, wars, and you can understand why Kamala lost the election, because she was a human trafficker. She allowed 12.5 million illegals that are countable over the border. I think it's a lot more than that. Mostly men getting out of prison, raping our women, raping our children, killing our women. But that's what the liberal manja is, open borders. Miss Metcalf, she's getting ready to have a fit here. We're going to kind of watch her. I'm still saddened by her tears.
The AP has just broken some new news. This has just come out from the Associated Press. This is incredible.
It's
Trump
horrible.
administration officials have been sending babies and other young children.
Babies?
Oh,
God. I don't know if I can take any more of
At
it.
least 3.
God. Human trafficking.
Thank you.
If we would have just put a stop to it, this would have never happened.
Shelters in South Texas. Lawyers and medical
All
providers.
your tax money going to them.
I think I'm gonna have to hand this off. Yeah.
I make $25 million a year, one episode a week, and I'm crying over it. Spilt milk. We need human trafficking. Please. Please stop it. Hello, this is James Howard, Washboardjim, with a sneaky snake trading strategy, and everybody have a great day.
Yeah. Dow Jones down today, it looked like. Got a double bottom on hood. And that's got a holder, we drop more. We hit a double top on the yearly candlesticks. So I thought that was kind of a cursor that we were going to pull back. Yesterday. So we got more room to fall, maybe. Got a lot of volume on the video this morning. 8 million. What the? We got a lot of earnings coming out. A lot of earnings coming out. A lot of good ones. A lot of retail, brick and mortar. Dick's this morning. DKS. I bet you'd had a good bounce. What time is it? 28 minutes. I knew it would. Almost hit my resistance. We don't dick around. Best Buy this morning. Kohl's was this morning. Macy's was this morning. Macy's has issues. Then we got ADI, 10, TEN. And then the CloudLink, UCL. cloud they said might be a good one next year. It's bounced up a little bit. Revenues 25 million versus 30 million. 26.95 is the consensus. Earnings beat. Sales miss estimates. We got Abercrombie and Fish, AFH. I think it's AFH. ANF. Nice little sharp pullback off earnings and then bounce up to resistance. See, this was a pivot point area and it pulled right back to it. Previous high, triple top. So we got a gap. I'm going to set an alert right there at 154. And then tonight, we got CrowdStrike, Workday, Autodesk, Hewlett-Packard, Urban Outfitters, 3D. So there's some pretty big earnings here. Woo! KSS, kiss my ass. Kohl's, God. Watch I can't get my coffee. Watch Kohl's. My throat's hurting, man. I don't know why. Here in Missouri, things aren't as rosy as they are in your place. I mean, inflation in Springfield, and I'm thinking people are shopping at Walmart over these other stores because things are so damn high. Nobody's talks about it, but man, I mean, my trash bags are up like $6 a box for 40. That's just one item. Things around here are still up 30, 40%. And they will not go down. Once they're up, I mean, it's hard to mark something down. I'm doing my shopping mostly now on Amazon. I mean, I have to look for bargains. I can afford nice stuff, but I don't want to feed this economy too much money. Not till Trump gets in. I guess Trump's give Mexico an alternative. You better control your cartel and stop this human trafficking, or we're going to start raising tariffs up real high to you. And that's all Biden and Harris had to do, is just call them up and say, hey, you stop it, we'll raise tariffs on you. And you American manufacturers that moved to Mexico, too bad. So they're cracking down on the fentanyl plants over there right now. Shutting them down.
that is unrepresentative of the economic impact, according to OECD. All right. Hey, Jeff, thought on stocks real quick. Just looking at our own action since the election. We got the Russell breakout yesterday. That seems like a pretty big move. It seems like more of a value move. What does that kind of flash on your radar then?
It tells me to watch out. So last time Trump won in 2016, we saw small cap value stocks perform very well going into the last couple of months of the year. In fact, they led. They were the best performers, followed by U.S. large caps, then developed international. Then at the bottom were emerging market stocks. That's changed. That then changed in 2017, the first year of Trump's term. We saw the opposite. Emerging market stocks were up nearly 40%. Counterintuitively in the first year of Trump's first term, and that was followed by then developed international stocks, and leading at the bottom were small cap value stocks. So just remember, I think the story here is that economic momentum is more important than political momentum, and so if we continue to see momentum improving global economic growth, the more cyclical stocks and international indexes, and particularly emerging markets, could perform well next year as they did in 2017, despite all those tariff threats.
All right. Jeff, good stuff. I guess
Finally, someone with
to
some
make sure we hit it all.
brilliance.
Is, central bank wise, anything changing on your expectations there?
50 basis points tomorrow from the Reserve Bank of New Zealand. That'll be their second.
Okay, we got less than a minute.
Move in a row. We'll probably see the same thing from the Bank of Canada and from Sweden in December. So there's still a lot of momentum to cutting rates outside the U.S., even as the Fed considers the impact of Trump's policy changes next year.
The guy's got some sense.
China.
Okay. 2468. Who do we appreciate? China. Zim down another 41. Nike down. PLTR down 50 cents. Triple M down. Nvidia up. Baidu. I was talking about Baidu the other day. Yesterday. Was it yesterday or Wednesday? Monday. Dadgum, look at that baby go. Baba just now hit support 85.45. Ooh, look at that SPX breakout. This is going to be a... Okay. Where's my platform? Get ready for a put. Come on. Jim, you didn't have your platform up. Hurry up. There we go. (26th). Today I get my phone case. The put would be the 59.90. Shit, I missed it. I was too late fumbling around. Okay. Looks like I'm going to get another chance here. $59.90 put. $5.90. There it is, $5.90 again. I'm gonna put a stop on it. Oh, AMD, yep. Whoa. Don't make the mistake. Hey, little sister, what is going on? Should have probably could have grabbed another one there, but Jimmy will wait. And then I got hood. Zoom is down $6. I'm gonna put SPX over here. 580. Back to even. So we got a double bottom on Zoom off the 200. Would have bad earnings. Goldman Sachs neutral on Zoom. Maintains a hold on Zoom. Zoom, then we have an overweight. So we have different opinions. But I don't see a sell. Got 3 white soldiers on IWM. That could be a indicator for a breakout. Or just coming back to the top and scalping it. Come on. Well, it looks to me like a bullish flag here on the SPX. Swear to God, I had it on there. We're going to know any minute. I'd like to see it come back down here and do a double bottom take. I'm going to set my alert on right on top of the body of that candle. Back to, damn, I should have grabbed one at 5:30. That's what I should have done. I had a chance. $6.50. 690. Okay, if you're new to trading, take profit. If you're new to trading, I want you to learn how to scalp. Right now, this is called a double bottom. So that's an indicator maybe to get out of the trade. I sold mine at 610. God darn it. Now I'm pissed. What the heck? The thing stopped. I got out of the trade and then it jumps up 80 bucks. What in the heck happened there? 710. God gummit. Oh well. What did I do? I screwed that trade up. I don't know what I did, but I got out at 610. Should be out at 7. What'd I do? Oh, I got out at 710. Fuck. How in the hell? Huh. Oh well. Got out at 710. I was looking at the wrong call. $8.10. $8.20. That's strange. Huh. Now we're at 8:30. That could have been a pretty good trade if I'd bought that 5:30. I don't know, I just wanted to get out, but that was my bad. I don't know what I was. The double bottom's what I was looking at. What do you say, Meta? AMD. Mike, what do you think? Let's see what the TTM tells us. I got into the RSI chart. I stopped using my TTM, which I used for many years. We're out and set the two. Oh. Buy 100 shares? God. What the fuck? We got double bottom on AMD. AMD. December the 6th. Swing 142 strike. Taiwan, NVIDIA won't be the only winner. Oh, swing. Day traded swing. I don't think I like AMD here. Uh-oh. 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 back on 9/1, I alerted Mike Bitcoin. I'm gonna see where that was back on 9/11. 9/1. Man, that was a good call right there. 9/1 right there. Right there. It was at 56,000. And it ran 40 grand. Mikey. What did I say, 45 or 55? $55. I'm going to say 57. $57. IBIT. Meta just hit resistance of 572. Meta just hit a resistance of 572.59. BlackRock, oh, that BlackRock Bitcoin, yep. I got it now. I was trying to remember what that was. GME's popping. Well, AMD dropped more on me here. $30. You were right about that one. Trump's return should favor growth stocks. Trump team considers AI czar role. Musk reportedly set to drive. Ooh. Musk reportedly set to drive federal AI policy shift. I don't know about that. They might have a controversy there. That is putting the smartest man in the role. NVIDIA won't be the only winner. Amazon, Meta, others are spending war to source chips in NVIDIA and others. Yeah, that's a pretty good deal right there. Let's keep an eye on that. I'm going to keep an eye on this in here. I don't have too many of these contracts, and I'm going to load them up. You got a knife. Oh, that's AMD. On the 200 on the hour, so I'm going to stick with it. GME had a pop. Oh, what was that? SPX knife. God, AMD. Come on. I figured I'd get a reversal on that. I'm going to hold on to this. It's next week. Jim, would you go into the kitchen and nuke your coffee? Mike called that one right.
Almost perfectly in line with expectations. So we'll talk about that. We're going to look at CrowdStrike, dual trade, and the comeback story perhaps of the year. We're going to look at HPQ, Dell as well, and the AI discussion with earnings ahead. Workday too. We'll look at the technicals on those. Cynthia Murphy joins me this morning for an ETF chat about what to expect for next year. Looking forward to that. And then we've also got new home sales alongside consumer confidence data. Let's go there. George Tillis with me from Salt Lake again. George, the numbers of the morning probably not going to make a big impact. It doesn't look like it right now because everything's
George.
Expectations. 111.7 for consumer confidence. Street was looking for 111.8.
Yeah.
Prior was 108.7. Prior was also revised to 109.6. So that's a nice positive number there, but not a huge shocker. New home sales, maybe a little bit of a shocker there on the month over month. Pretty ugly figure. And it did come in about 115,000 light for new home sales. 610 versus 725. And on a month over month degree, declining pretty substantially. The prior, though, was revised higher on the month over month from 4% to 7%. Yeah, I don't think that's a typo. I'm looking at the month over month. And,
oh my God.
Sales. I mean, pretty big drop off there, George.
What the heck here? Biden needs to stop this, man. This guy is an idiot. Just stop the frickin' spending. Okay. Rivian stock slips, how 6.6 billion from Biden can reignite the EV maker. Are you kidding me? We don't need to be bailing out these companies. Take that $8 billion and clean a city up. Get the homeless off the street. I've never seen such much waste. President-elect Donald Trump will kill the tax credit, and I'm all for it.
It's also creating a situation where there's a lot of inflation still embedded in core prices because of housing expenses. So we do still have a housing problem, obviously, especially with existing home sales being relatively muted, coming at multi-decade lows.
It's a interesting couple prints with the home price from Case-Shiller that was up earlier this morning, 4% annually, which was smaller than the previous increase in August, suggested the prices have cooled off, and that buyers are maybe getting a little bit of the advantage. So maybe new home sales, maybe because the existing market's been so plugged up, if the prices have to come down at all, then maybe new home sales will slow, but this is a pretty big decline. So I don't think, I'm just kind of throwing stuff out there because it seems like a really big number, and I don't know if there's some kind of like abnormality to it with, you know, something like on the calendar of season or some event. Because I'm looking at Bloomberg, they haven't written anything about it, which is kind of surprising to me because it's a pretty big miss.
Yeah. I mean, based on the miss and the the percentage decline in the volume, there may be an issue associated with that, or maybe a one-time issue. But nonetheless, if you think about what's going on in the new construction market, that's where the sales really are. But those sales volumes have been declining and prices remain relatively firm. I know Case-Shiller printed a lower year-over-year number in terms of percent change, but the volume of production and construction
all of a sudden A&D's coming back up.
That's maintaining resale price maintenance is how you look at it, because the home builders themselves are really restricting the amount of supply that is being produced, and there are various factors, too many to go over in the next couple minutes or so, but nonetheless, the housing issue is just not being alleviated. If you look at not necessarily new home construction or existing home sales, but new contracts,
I'm in the green.
New building permits, they're actually at very low levels, multi-decade low levels. Again, for various reasons. So, overall, there's a lot of logjam in the housing market, but at the same time, there's a lot of buyers that have stepped away effectively because of, higher prices of the underlying financed product, but also higher interest rates. So there needs to be relief somewhere, either more supply, which is going to take some time, lower interest rates, or higher income. So, you have to pick out of those threes or some combination to alleviate the logjam.
Yeah, look, I think that's a very good description. Logjam is definitely the word. I don't disagree with anything on that. My only point is that that's kind of been the case we've known for some time, and the data haven't deteriorated too significantly. So maybe that's starting to come to fruition, perhaps, but it's the first housing print that catches my eye in a long time. I'm not an expert, but I think I'm not the only one. I'm going on X right now, and some good perspective from Mike Zaccardi, who just wrote that it's the worst since 2013, the 8th worst in the series history since 1980. So I'm not imagining.
Pissing me off.
It's a pretty bad number.
We're bailing out these
home builders are down right
car
now.
companies.
They take a little bit of a lower leg down. A lot of times home builders don't respond to these numbers.
All that money does, Rivian I don't think's in the union. But this is, man, what can I do? I talked about this one the other day when it was at $10, if I remember right. Yep, sure did. There's another one I missed. I was about to buy it. I got a booger in my nose. Somebody want to pick it?
This inability to actually alleviate some of that pressure by lowering interest rates. So it's kind of a the chicken the chicken and the egg scenario. So it's either interest rates are creating this log jam, or essentially the housing supply is essentially keeping interest rates relatively high because of inflation, and that's putting upward pressure on yields, and those yields are putting pressure on the housing market. So there's this sort of circular aspect that's going on in the housing market.
Yeah, no, that's a really good point. It kind of suggests you need some sort of exogenous injection to grease the gears a little bit, but nobody really wants to take that hit on either side. So maybe we're just kind of in a standoff period now where prices are going to have to come down more. That's kind of where I'm leaning on it because of the way we saw the Case-Shiller numbers slow down. It still is positive. So let's be very clear about that. Prices still have been generally trending higher alongside the market, but at a slower pace, so suggesting that maybe some of that log jam will have to be cleared by a real slowdown in prices.
Yeah, definitely. And the thing about it is there's this whole element of the competitive aspects of new construction. I mean, going back to the Great Recession last time around, there are fewer local home builders, and they've become these larger players in the space, the Lennars, D.R. Hortons, and so with those larger players, especially in growth areas of the country for new housing where people are moving, Sun Belt states and so forth, they basically are keeping supply constrained and increasing prices. And so they're actually making more money with selling fewer units. And it's just based on the inelasticity of demand. And so with that said, that's another element to certainly consider that I'm sure a lot of folks don't really realize or talk about. But there's a lot of those smaller home builders that were either bought out or went under, and now the new construction markets are really concentrated in just a few home builders. Some of the bigger players out there, Toll Brothers being essentially on the higher end, and looking at KB Homes on the mid to lower end.
All right, thanks, George. Good perspective. Appreciate that, GT.
Okay.
Interesting print for sure. Definitely. So something to keep an eye on. The market doesn't usually totally lose its head around housing data because it's generally kind of moves in kind of big, slow frequencies, but certainly worth thinking about. Thanks, George. Let's go to Jeff Pierce and let's switch gears. Let's talk tech. We got CrowdStrike coming. This is going to be a big one, Jeff. This has been really fun to watch. This has been a real fascinating trade. I think credit to our Kevin Hinks is deserved here, who I'm pretty sure was like buying up CrowdStrike the whole time, the way he was talking about it. We're at 364 in CrowdStrike. We're only $30 away from the all-time high.
Exactly, and I think to your point, this quarter is going to be extremely important for the company. We asked that question. You and I talked about the stock before their Q2 earnings, and would this be a buying opportunity? I think the market has said yes, it was, right? However, the thing that we need to remember is that the incident happened July 19th, really close to the end of that quarter. So a lot of that fallout that we could potentially see, if there is some, is going to be in this report. The CEO said in the last earnings report that because the incident was in the final 2 weeks of the quarter, when a meaningful portion of their sales typically close, it delays deals into subsequent quarters. However, he said a vast majority of those deals remained in the pipeline. So that's what investors are going to be looking at. How many deals closed? Did they offer any discounts to customers to get or renew contracts? And then, of course, litigation costs, specifically around Delta, and how that's going to affect their guidance going forward. As we look at the report, expectations are revenue up about 25%, around $182.26 million. Earnings per share around 81 cents. That would be down a little over 1%. If we look at subscription revenue, that's expected to be on the upside, up about 28%, at about $936.5 million. Professional services expected to be down about 7% at $49 million. Annual recurring revenue expected to come in around $4 billion.
Take me off your damn call center, I'm going to whip your ass.
5.5. Outside of just the focus on kind of this recovery from the outage, investors are of course going to be focused on that revenue as that number is expected to come in with less growth than what we saw in the same quarter last year. They're going to be looking at new products, any indication that customers are spending more money now. And then, of course, if we look at that annual recurring revenue, which is a big deal for this company, across all their products, it surpassed $1 billion in the second quarter, growing more than 85%. So, of course, that's going to be something that investors are closely watching also.
Yeah. Seems like as long as people didn't leave, they're golden, right? I mean, that was kind of the Occam's razor, sort of like armchair everyman take that I think worked out pretty well, that logic. And they just had, and I think they were able to basically do it without like deploying some big like sales force to convince people to stay. I think most of it was just sort of kind of swept under the rug in a way. I mean, there's obviously the airlines were pretty, I'm looking for the right word. I was going to use an inappropriate word. They were ticked off. The airlines were not happy, Jeff.
Yeah, certainly, and that's going to be an overhang, right? The litigation part of it, we know that Delta, for example, has said that it cost them about $500 million. So certainly that's going to continue. Now, to your point, and kind of the reaction from the market here is that, I think CrowdStrike is really well positioned, right? Historically, we've seen companies really kind of get their cybersecurity software and from different vendors. CrowdStrike has kind of stood out because of the amount of offerings they have. They have almost 28 different products. They tend to kind of get a client that buys into all of their products, and that makes it for a stickier client. I think that has helped them along this way. Now, if we look at this report, I think the final focal point.
I mean, even on AMD right now.
Revenue, both their $10 billion that they expect in annual recurring revenue by 2031, but also just the fiscal 2025 revenue forecast. That needs to stay the same or be raised. I think if one of those things happens, then investors will be, I think, relatively calmed down from any negative effects from the outage.
All right. Yeah, it looks like market's pretty confident, man. Really impressive V bounce. I know the broad market's been doing well too, but I mean, look at like a Super Micro or something, that had real kind of like major unwind. For CrowdStrike, it was sort of a response, a multi-day thing, and the market, I think, probably handled it pretty logically because it punished them in the moment. Wasn't without a dip, pretty severe dip. Everything tells us the category they're in, general market they're in, is strong. So as long as they don't lose customers, it should be kind of back to business as usual.
SMCI double bottom.
Yeah, I mean, when you're looking at the cost of cybercrime at about $9.5 trillion for the year, and maybe $10.5 trillion in 2025, you can see why investors are pretty bullish on the fact that this company is going to be able to drive that revenue. And as long as they can, the other side of it is that they have launched new software to try to combat this in the future. And as long as they can kind of prove that going forward, this is something that investors should not be concerned about, and that they can handle the litigation side of it without any real headwind from that, I think investors are going to continue to be happy with what they've seen and mainly get over the outage. I think that's largely baked in, that's kind of behind the stock. But again, this quarter, what we hear from the company is going to be extremely important this quarter.
Okay. All right. Thanks, Jeff. A good perspective there. Like that. CrowdStrike 363.61 this morning. Tim Biggin, options strategist at Buy Alerts. Looking at the shares, looking at the options rather.
Was he buying it?
CrowdStrike came back. What do you think? Do they deserve it?
Yeah, it's kind of a what crisis, It's like what happened is completely erased here, but I think there will be some effect, certainly, from that, mid-July sort of, problema, we'll call it here. But you can see on the chart, the stock has absolutely ripped higher after making that big-time low there. So I think it's getting a little overdone to the upside, not only on a technical basis, certainly the stock getting overbought as it approaches those highs there, but on a valuation basis, you talked about, sales, but we're looking at a stock that is now trading 25
Yeah, I don't know
times
about
price
that.
to sales, so built absolutely for speed here. I think unless they knock it out of the park, you may see kind of a pullback towards that 20-day moving average, which is right around 330. That also equates to the expected market maker move of a little over 9%. Based on the option prices on the stock. So I'm just taking a cautiously bearish stance here, selling this week's 330 puts, buying next week's 330 puts, paying a little bit under $1.50 here. Just as importantly, selling over 100 IV, hedging with under a 70 IV. So have that nice term structure vol edge, have a nice P&L sort of range here from under 300 to over 370. This trade should work out profitably. So unless we get a massive move, that flattening of the term structure vol will actually be as big a benefit as hopefully a slight pullback towards that 330 level as well.
All right. So I think that's a pretty decent approach because you give yourself some flexibility on it.
Yeah, you always want to have, flexibility in these trades, certainly. And as I get older, I'm losing flexibility in other forms as well. But also next week, you can certainly turn it into a vertical of some sort to bring in even more premium, defray that kind of low.
I'm gonna look at IWM here.
So I don't mind paying $1.50 or so for a earnings-based calendar spread trade on a stock that's pushing towards the 400 level. So a very cheap comparative trade to begin with as well. So I think CrowdStrike probably
27th.
has gotten a little euphoric here just based on the fact that everyone's completely forgotten kind of about the previous issues. I think they will have some meaning still and probably put a little bit of an overhang post-earnings in the stock price going forward from here.
All right. So the put calendar and CrowdStrike at 362 right now. Where's your celebration point, Tim? What's the perfect level for this if you want to just close the whole thing out?
Yeah, anywhere towards that 330, strike would be ideal here. So between really 340 and 320 would be a beautiful spot post earnings, and we'll absolutely jump in and take all, if not some of it off there, and realize a very nice kind of probably a 4 or 5 bagger if it gets to that point as well.
All right. I feel CrowdStrike is in a pretty good spot. Like, if you ask me, I don't think it's going to get hit like that. But if you are bearish, I like the approach and the way you're going through the trade. And just also recognizing kind of the skew and the options bias to the upside. So respect the fade. Thanks, Tim.
Yep. You bet. Anytime. Take care now.
All right. Appreciate that, Tim Bigham. Option strategist at Buy Alerts. Let's talk ETFs when we return, taking a look at some strategies in 2025 as we close out this year. I think earlier in the show I actually said 2025. That was a mistake. It's still 2024 for about another month.
God darn it, back down to $1 like that. Fuck. I was up $100. Damn it. Damn, computer's acting weird again.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
Jesus.
We adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
I don't like it when my computer's not working good.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Meta double, what is it, AMD double bottom.
You'll love Carl's
Meta hit my resistance.
But there's a
Apple at the 200.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments
Damn.
for me too.
Let's move on, shall we?
This sucks.
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Believe me, when it comes to investing, you'll love Carl's way. Take a left here, please. But there's a... Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stocks coming off a little bit. Russell now down 1%, but we're going to zoom out for a moment and talk about exchange-traded funds, ETFs. Joining me, the pro Cynthia Murphy, investment strategist, TMX Vetify. Great to see you, Cynthia.
Hey, Oliver, glad to be here.
Welcome back to Chicago.
Thank you.
I was
just in time for the cold.
Yeah, exactly. I was just in your hood in SF for Impact last week. We were talking a good bit of ETFs. I know you met with some folks out there too at the time. Is your base there? What did you kind of take away? Like, what are folks hot on going into next year? Because I feel like this year it's been opposites. It was like first it was all about bonds, and it was like crypto and two opposite things.
Well, and the funny thing is too how much it has changed just in the last month since the election, right? So, you know, in October at Verify we hosted this big event. It was a fixed income symposium, and the message was 2025, the year of bonds. Let's go back to fixed income. Bonds are going to behave like good bonds, and correlations are going to be fixed, and duration is the next play. And boom, the election hit. The whole outlook is different. Now we're worried about reflation. Now we're worried about, you know, longer, higher for longer, you know.
None of it makes sense.
Yeah.
None of it makes sense.
Even, you know,
what these people are talking
The whole
about.
fixed income outlook is up on its head. So we're talking back to some of the things we've talked a lot, like crypto, gold, you know, AI, tech. All these things are kind of back in play for 2025.
Equal weight, maybe some of the value stuff too a little bit here. We got the Russell breaking out.
Yeah, it's you know, I think that concern about concentrate.
They're worried about inflation under Trump. I got some more of this at 84 cents. I mean, this market's way overbought. We haven't had a correction in a long time. They're using this as an excuse. And they know it. I know it. Like I said, this economy around here ain't flying. This has been nothing but a straight uphill climb. And the printing machine is going to stop. All that money we've printed, and all $30 trillion ever since 2009, that's just deficit. That's not counting unfunded liabilities that have been promised out, which is probably about 200 trillion in this period of time. So we're at 37 trillion right now. And all that money goes straight to the 1%, almost 80% of it. We are way overbought, way overbought. I mean, we had so many years where we just went, we were in a Darvis box. Then that stimulus package came out that Obama printed up. And ever since then, we've not stopped. And this could keep just flying and flying and flying if you keep electing, if you want to, well, it'll come to an end eventually. But the liquidity is so much. Then we're print another $6 billion to hand it over to the car company. And just nonstop. It's nonstop. We're at 92 now. AMD, I'm getting slaughtered on. The market is definitely is acting like it wants a little bit of correction for Trump. The way they're convincing themselves. Probably keep adding to AMD. Hi. Intel got analog devices stock surges, earnings beat. Intel receives 7.9 billion. Analog, what is analog stock? Come on. I'm about done with this piece of crap. Shit. Come on. Well, battery had me a burrito. Got 2 red trades right now. That's beautiful. That SPX pullback right there off the snake. So it's getting ready for a boom. You got a double bottom. I was up there a couple $100 there, man. Just sold them. We'll just hold on to them a little bit longer. So that's kind of like a bull flag wedge, but it's fat. And we hit the 63. I should have sold them right there at 63. They were at $1.05. But if I can get it back up past the 63 and run it up to this top here, right about in there, right off that top, that's good little pivot point area. Where I get out of them now, as we hit the 63, something out a buck. What should I do? Hey, little sister, what's going on? Get away from that man. What are you doing in my bed? You're disgusting. Nailed it. Okay, I got out of it. Thank you. $360. Man, that was an exciting trade. Once we go hit a bag. I'm telling you. I gotta turn on the heater for one. I had to go put on some right under. That one made me sweat under my arms.
We're kind of breaking out of both of them, so kind of an interesting move here. Look for us to push into that overbought area, looking at support and resistance more closely. If we do break out to the upside further, +1 standard deviation channel comes in near 41. To the downside, we've got our green line. Don't be surprised if we retest that support near about 38. Beyond that, lower level of our trend line comes in near 36.50 or so. That would be one more point to watch.
All right. It seems like it's already kind of found a little bit of support here, given the wick of that candle came down to kind of test that and found support. So I feel like that is a leg up for HP going into the report. I think Jenny is also correct, though, that it's got a lot to prove. But it seems like the chart is suggesting it's more likely to do that than not. So
for the record, I use printers too, so I don't know what you guys are talking about.
Okay, yeah, there we go.
Printing?
Yeah, what are you printing?
Off work stuff. I work. I don't know what you guys do.
Fair enough. Okay, charts, right? Print out charts. All right, last one, we got Workday software. Jenny and I think one that, I have another one that I'm familiar with at work that Tom White helps me out with.
I was going to say, speaking of things Tom White helps us with, actually, though, Workday from like an HR and back-end software standpoint is the best. I mean, I don't know if you ever have used PeopleSoft, which is horrible.
That's what I'm saying, yeah.
Workday is the best. So yeah, kudos to Schwab, because Workday is one of the most user-friendly.
And like every other major corporation.
Well, yeah, and also like having some pretty serious developments in the quarter. They're actually partnering with some of these like strange, I just wouldn't have guessed that they would have deals with, like the University of Arkansas. They announced.
There you go. That's what kids use. The students. That's what you use PeopleSoft in college.
Well, good thing that now people at Arkansas can use Workday, because it's a much superior product from using both of them myself. This name is definitely less to prove because we're lower on the year. I mean, we've also been definitely falling victim to some of these software weakness with Workday, so not surprised to see it slightly underperforming. We are expecting revenue to rise about 14%, which would be a moderating pace of growth from about 17% that they saw a year ago. Earnings per share expected to grow modestly, but again, they've really been able to unveil this cutting-edge HR and payroll solution software with Strata. University of Arkansas, also they've seen healthy traction in the U.S. public sector market. So in the to-be-reported quarter, they announced several partnerships, which I think is definitely a sign that there's other corporations that are appreciative of the ease of use for their software.
Hold on. Yeah, I'm already sold them.
Okay, in this name, totally different coverage from analysts. You got 9 holds, 1 sell, 29 buys. Average price target does imply about 9% upside at 293. But also trades at almost 36 times now. It's the most
They got to get back in them.
forward basis of all these names.
Sure.
But it's put up the least growth, at least on a year-to-date basis. And we're
kind of a weird little.
That's kind of a problem.
Not a great spot. Okay, the price target though, analysts don't expect too much. 9% is not that juicy. Rick, it's been positive, gappy, basically since the last earnings.
Another chart with really important gaps in price levels here. So downtrend for a while, gap down on earnings. Look at this repeated test of resistance around 235, then gap up. We retested that same area. Old resistance became new support. It also gives us this kind of blue trend line and the start of our white trend line. So we have moved up. We have retaken all our moving averages. We kind of crossed above this green line once again that marked the post-gap low point that we established that day. Now, kind of concerningly, though, we made our way up to this previous high over here, this red line, another of these important gappy price areas here, and we so far kind of have failed to take out our previous highs. We're stuck near our volume profile point of control right here near 268. RSI showing some bearish divergence here as well at our 2 peaks, but still more bullish. If we zoom in, look at our support and resistance here, we can see the +2 channel comes in right here near our old resistance area, our red line, and our blue upper wedge line. So around 280 to 290 or so gives us this range to watch. To the downside, +1 channel.
Wow, 115, 116. That would have been a nice trade.
I kind of think this one's maybe the most.
That's left another $120 on the table.
Like anything's possible for Workday.
Yeah.
That's left another $140 on the table. It hit my pivot point. Mike, you see that pivot point right there on that chart? In that flag?
Thanks, Rick. Appreciate that, sir. Thanks, Janet. Coming up, got Mark
Nina, gonna take a look at the session, which hasn't changed too much. Drop.
Accelerate your market knowledge and shift your perspective. Full real-time example trades, full hour of trading. I'm Tom White, uncovered you. Catch me on Fast Market. Tuesdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Morning Trade Live. Let's check in on the session here. Joining me, Dan Grant. Here with me in studio. As head of trading. Their title's not up, Dan. What is it?
I'm a senior specialist in retail trading at Charles Schwab.
There you go. Thank you. All right. And Caroline Wood's going to join us. All right. So that being said, we were just talking out in the hall about some of the stuff that's going on with MicroStrategy, because obviously you see a lot on the desk. No names, no faces, no numbers. So take me through what you're seeing.
Yeah, so some of the double layered ETFs, the MSTX is specifically the one that we're seeing just very large bets and a lot of activity in. Going from $50 2 weeks ago all the way up to $220, all the way back to $100 today. Just a big, massive movement. So as Bitcoin, as the dollar has been rallying into this, as we're seeing the blow off top in gold, and then went huge pullback yesterday. Same thing for Bitcoin, right? The speculators are coming in, trying to find the price, and then they drive the price higher, and now it's back down to
MicroStrategy down 5% today. MSTU, MSTX
should be down 10.
MSTX is one we can see more volume on here.
Correct.
Yeah. Both of them are going to be down huge. So then, how do these people deal with margin and stuff for these products?
So the MSTX is 100% requirement, right? You can't take leverage on that.
Okay, so only big fish are swimming in it.
MSTR, correct. MSTR, you can take some leverage on it, but it's limited.
Right. Okay, got it. But for the levered funds, that's 1-to-1 margin.
Correct. And you're already getting double 50%.
Makes sense.
Leverage, right? You don't need any more leverage. You shouldn't need any more leverage than that.
We're talking crypto here.
Yeah, we are talking crypto. In the fall with the Bitcoin and for crypto and the gold kind of dropping down as the dollar strengthening is kind of key, right?
Do you find that those within the last point in this that are in these big MicroStrategy levered funds and stuff, are they seem like they've got cooling heads on this volatility the last 3 days?
It sure feels like it. Because it's you're not really using leverage. You're using double leverage. So you're not borrowing money.
Boom, baby.
And it goes straight up.
Right.
And then
so you're less worried about downside.
If it comes right back down like that, you're not really out anything. You don't have a weak share.
It's different than when you're applying leverage in a real
correct.
In a risk way. This is just all your money is, it's an ETF, so right? It's your risk is defined.
Correct.
I mean, not defined, but yeah, it's different. Oh, okay. So
define how much money you have in your account.
Correct. Exactly. Yeah, exactly. No, but that is important.
Yeah.
Because you can't go deep negative as you would with real leverage.
Yeah. And we're going back to that, and I'm really interested to see what the FOMC says today. What the minutes say.
That's true. Caroline's with us in. Caroline.
Hey there, Oliver. Yes, so just kind of checking out some of the movers in this morning's action. We do see the S&P higher today.
130, baby.
We're seeing
104 to 130.
Discretionary utilities. Tech, the Mag 7 is all higher today, but that's being offset a bit by weakness in healthcare, materials, financials. In terms of some of the biggest movers, Smucker, actually the top performer on the S&P 500 after earnings beat. Revenue came in line, and they actually boosted their full-year outlook, despite the fact that some macro pressures are causing people to snack a little bit less. So the peanut butter and jelly maker up about 7% right now. But in terms of some of the worst performers, we see Amgen down big on some disappointing or mixed weight loss trial results. If you take a look, Best Buy is another big loser after the earnings miss, although they did say demand is increasing in the fourth quarter, but investors aren't giving it a pass because of the earnings miss, so that's weighing on the S&P 500 today. Retail in general all lower, even despite some of the beats that we saw from Abercrombie & Fitch, say, from Dick's. We're seeing some red arrows there. Of course, Kohl's the biggest loser there. And then if you take a look, automakers under pressure today as well. President-elect Trump had talked about a 25% tariff on Mexico and Canada, and that's weighing on GM, Ford, Stellantis, is seeing GM down 7.5% today, Ford down 2%, Stellantis down more than 4%. I will say Rivian did turn into positive territory. We talked about that one this morning on the loan, so that's up about 3% right now. So some pretty notable movers, and also the home builders under a lot of pressure today. We saw a huge pop in home builders yesterday as we saw that tick lower in yields, but the new home sales coming in 17% lower in October as mortgage rates surge. We also saw prices increase, and that's weighing on Lennar, Toll Brothers, Pulte, D.R. Horton, KB Home, all under pressure today.
Yeah, that's a good reminder that the home builders still are lower after that print, which likely was skewed by southeast hurricanes. And we talked about the big miss on that new home sales, but finally we got some reporting from sources that suggested that the hurricanes did hit southeast pretty hard. So that makes sense. Thanks, Dan Grant. Thanks, Caroline Woods. Appreciate you guys very much. Thank you for joining Morning Trade Live. Trading 360 with Nicole Pedalese coming up next. I'll see you at 2 p.m. for Market On Close.
I just like the women on here a lot better, man. It's apples to oranges about the women that are on this show compared to CNBC. Let me use this one here. I want to use my clean one. I made some taco burritos. We hit the 200 EM SMA. Applied Digital APLD is knifing here. Boeing hit my target yesterday. I got out of it yesterday early, but target 190. Morgan, these people, I mean, I'm telling you, they're invested in Boeing. Boeing, when I first started trading, was a market mover, market indicator. If Boeing was doing good, the rest of the market was doing good. Same as General Motors, the auto industry. They measured, back then, they measured a good economy by if appliances were being made or if cars were being sold or. But now, it's a totally different thing because all this liquidity has been thrown in the market. But that was it. I mean, if Boeing didn't do good, the market tanked. If General Motors it didn't hardly move in a way, but they always talked about the car industry. We got the Fed coming out today or something? Oh wow. Update. 737 400 cargo plane in DLH crashes in Lithuania. 1 dead. And the stock, they don't care. They don't care how much crappy this company is. It's refusing to move. Baby, why are these? Probably not going to be good. No, not good. Hike, I'll tell you where it's going to go just by one line. Yeah, we might. Well, $80. Well, 80.78. Another $5 dip.
Really want like these large screen TVs. Maybe they're waiting on Black Friday. Tough times here for at least some of the retailers. It's such a mixed bag. Thank you so much, Jenny Horn, markets correspondent. Great to see you. Thanks. Let's get some insights, the news shaping the markets. For that, we welcome in Michael Brinking is with us, senior market strategist here at the New York Stock Exchange. Big picture on the market, records yesterday, pullback today, but at least on the Dow, not on the S&P. Some of your thoughts.
Yeah, well, thanks for having me back. Yeah, so look, I think, coming out of the Trump election, we had that honeymoon phase where you started to see some money come off the sidelines, some unwinding of hedges. That led to that initial rally. We had, as we started to see some of the kind of appointments to the cabinet, markets started to get a little bit more concerned. There was some differentiation that began
shut
to
up.
happen at the sector level.
You know what, buddy? We're cutting you off. The spending is going to be. You're going to learn not to be so dependent upon the federal government because you've got way out of hand. Do you understand me? We're putting a stop to all the fraud and abuse that these politicians have made millions, hundreds of millions of dollars. I don't see how you can be a politician and come out $300 million richer. So we're putting a stop to it, you dingbat.
Which I think will be going into place on day one, according to what we're hearing from his team or some of the messaging. 25% on Mexico and Canada, 10% more on China. Are we okay with that? Is the market digesting that, or is that something fearful?
No, I think the market is digesting.
I'm more worried about getting nuked.
Was very interesting, right? In that yesterday the market response to Scott Bessent was that he was pragmatic, right? He was a fiscal hawk. That he may be a voice of moderation. I felt like the timing of Trump's announcement yesterday may have just been a signal once again, like, hey, I'm calling the shots here, right? And in terms of just in the response to what we saw yesterday, you're seeing kind of a modest response within equity markets today, more so in currency markets, which makes some sense, just kind of given how much trade happens from Mexico and Canada with the U.S., right? So, big impact, weakness in both of those currencies, right? But I think, markets are also viewing this as kind of the opening salvo, right? Kind of in terms of kind of immigration and things of that nature. And this may be kind of a negotiation tool.
Yeah, and I saw General Motors, by the way, Stellantis. I was reading earlier this morning how they were down because they do have factories in Mexico. Another thing that was really off topic, Rivian getting a Georgia plant with the help of the Biden administration. That should bring on jobs, so that was an interesting plus for the USA. That being said, we'll get the Fed minutes later today. What's the direction of the Fed, do you think, December, January, and for 2025?
So I think what the Fed has been in sort of signaling to markets over the last couple of weeks, right, is that that they're potentially going to slow the pace of rate cuts, right? They're going to move cautiously from here. They're suggesting that the ultimate destination of those rate cuts, we may not see as deep a cutting cycle as we had previously thought. Right, but we've seen markets already kind of readjust to that, and the Fed is kind of catching up. Right, the big question, kind of really comes around kind of what that neutral rate is. I think they're trying to find that. And in terms of the December meeting, right, I mean, markets are a little bit better than a coin flip in terms of getting a cut. We heard from Cash Carey, who said that's very much on the table still, the cut. But I think, the determinant factor of that is going to really be, the jobs report in about a week and a half.
Yeah, looking forward to that. We have a shortened trading week. We'll have Thanksgiving. We have a half day on Friday. So people should note that, right? It's not a full trading week this week, so maybe it'll be lighter. Maybe there'll be more volatility. Sometimes that happens on lighter volume. But big picture, how do people make money? They want to make money. What do you tell them?
Yeah, I mean, look, I think we don't give investment advice, right?
Right.
It's kind
but what are some of the trends or things that might work?
I mean, continue to work with your investment plan, right? I think you participate in that kind of expansion of breadth, right? You continue to be involved there. If you look at things like the Russell, right, there is some differentiation underneath the surface there, right? And a lot of the gains are being driven by the regional banks, the industrials, right? Those are all both beneficiaries of the Trump policies, right? So those trades can continue to work. I wouldn't necessarily kind of go down the quality scale and chase some of the things that are just moving, kind of in this kind of overall momentum move, right? So it's still finding that differentiation. And then in terms of what we're seeing kind of in the mega cap tech stocks.
Here, we were right here, and I said, ooh. I said, what's next? I said, boing. The perfect snake setup. I called this thing out. I said, watch this. We had that pullback right there. I said, this looks good. You see that hammer? So you had snake, breakout. And I said we had 3 black crows. Could be an extension that would bullish. That's bullish looking. That's a bullish breakout of the snake. So what you don't jump in it right there. You wait for the pullback to the top of the channel of the snake, and then what happens? You get a boom with a double top. Out of the trade. My breeder just pissed on me. Now we're pulling back to the 200. That's your first support. Ooh. Did you hear that? Did you really hear that? Tesla. I think we'll hit the 200 right around just a little bit under 341.33. Whoops, I meant 3. Now I love burritos. That burrito was the best. I'm going to keep making them like that. It's a falling wedge. Ooh, got some grease on my key, on my B. I think they're going to come back. He was just here to assess it yesterday. I put out 6 mouse traps, and I know where they're coming from. This is the first year I've seen mouse in there, but he's dead. Found his little nest. So Randy, we're hitting that 200 right now. I wouldn't probably take this trade until you broke out of that flag. Unless you want to take it here and take a risk instead of stop. This is where I'd buy it. Tesla. IWM bounced from $1 to 118. I didn't trade it. I thought about it, but I really did. I mean, I'm well, let's not brag. I don't want to brag because that usually fucks me. I do not support human trafficking. They got a big old caravan of people come running up through the border right now. I think Trump told the leader, you better do your job down there because we're going to stick a high tariff to you. It said 60 unaccompanied children were in this caravan without their parents, with just a note and an address. Two-year-olds. I just don't know, man. I can't live in a country like that. Tesla breakout. Randy. You can call me a misogynist all you want. I don't support human trafficking. It's not true. $1 to 131 on the IWM.
Utilizing options.
Yeah, and we joke about
Damn,
what our
you're
kids
beautiful.
say or how they do things, but the truth of the matter is, if I were to have followed and invested in all the things that my sons, they were New York City kids. They represented, New York City, the heart of New
There it
York.
is, Randy, right to where I said it would go.
What was hot at different times? What was working? Whether it was Snapchat at a certain time.
Absolutely.
When Adidas took over Nike, it was really evident when the Yeezys came in that Nike went out of favor, and then Adidas popped back up. And Chipotle is home cooking as far as they're concerned. So if I bought Chipotle when they started going to get it themselves, they're in college now.
Don't be scared of it now. We hit support.
That's the point. You really look to these younger folks. They have the cash to spend. They have to spend their parents' money. And what are they spending it on? And it's really interesting to watch some of the trends of the young folks. Rick,
absolutely,
some of your thoughts. Oh yeah. Go ahead. Jump in there. You want to say anything?
Yeah, I'll jump in there, baby.
Real quick. Yeah, sure.
I love you.
Me too. Well, my son actually has one of the best performing
Nicole,
portfolios
I
that I have because of the
got
way that
real
he
jealous.
picks securities and being just in tuned, layering on the things that I've taught him as well. So I think you're right, and it's important to pay attention to that, and why it's important to pay attention to the trends that you see around you, because ultimately the stock
I
market
love you
is
too.
companies, right?
She's a beauty. But Nicole's much beautiful. Nicole, I have a confession. When I found out that you were married, it broke my heart. I tell everybody in the community that I love you. I'm really hurting on AMD. Not bad. I mean, I don't got a lot, but it's not look good. Thought I had me a snake. So, Tesla, the 350 strike. I'm gonna buy Tesla. I'm gonna buy Tesla 310. Randy. November the 27th. Strike 350 at 310. Do you have a problem with that? You better not. Better not have a problem with it. Upstart, that's another one. Earnings. Ging gilly 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 wash wash, ging goo, ging goo. Oh, Ayla. Oh, Ayla Shayla. On the first day of Tesla, my true love gave to me a partridge in a pear tree. Now, ladies and gentlemen, 241 on the IWM is now at 146 from a buck. Tesla. Things getting ready to squeeze to the upside. Randy, did you buy it? Yes, you did. Keep a good close eye on it. If we break the 63, I think it's off to the races. And you got a 1, 2, 3 at the 50 SMA. There's your first resistance. Okay, I've had enough of you crap. We're happy to have you in here, Mike. We missed you.
Buy it as is or customized to align with your goals. All at your
Thank you very
fingertips.
much. That's really nice.
Schwab
Thank
investing
you.
themes.
Yep, 360, Randy, 365.
Stocks in just a few clicks.
Cut the cord on the way.
Got it.
It's Market on Close.
We nailed it, Bubba.
Me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device.
Shut up. I told Anthony to shut up.
Joe Biden is asleep. Kamala is at a dance party with Beyonce. 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 Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. 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 Party with Beyonce. 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 Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. 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 Party with Beyonce. Beyonce. Carry on. Dance party with Beyonce. Beyonce. 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 Dance party with Beyonce. Dance party with Beyonce.
That's all, folks. $365. Randy, did you take profit? Or are we going to go higher? We're at resistance. $370.
I'm Twilight Zoning. I'm hearing Twilight Zone music. I friggin' can't handle it, man. I want off this planet.
You will listen to
I
it.
want off this planet now.
You'll listen to what I tell you to listen to. Chicken trade, yeah. Did you take profit? Oh, he took profit. Good.
Yeah. I know you can't speak to individual stocks, but what about within small caps? You know, there's small cap value, small cap growth. There's different sectors within small caps. Are you hearing or seeing elements that may make some parts of it work better than others?
This is good news. This is good news. Why GM stock is getting crushed by Trump tariff threats. And Ford isn't. Okay, get ready again. Tesla. Randy? Here we do it again. Damn, I'm good. someone would have sat there and a rookie would have said he wouldn't have saw this. Okay, I don't think a rookie would have saw this resistance right here. That resistance. Now we got 3 black crows, so I'm going to jump in this trade. This is going to be a tight stop. 315, baby. $3.15, baby. I'm up a $15 a contract. $15 times 5, 20 times 5. Oh, there we go. Now what do? You learn how to sell it. See. 340. One more, come on. Give me just 10 more cents. $10 more cents. Give it to me. 350, baby. I got tickled yesterday. Does anybody know who Timothy Sykes is? He followed me. Okay, time to exit. 350. Bam! Out. Randy Mound. You're still in it? I'm out. I'll take $35 a contract times 5. Man, that's about my 4th fart today. I've been sitting in them, but they're not stinking.
Fascinating.
What the heck is that? What is this? Oh. I'm thinking about going to this hotel. So AMD calls here. Damn computer. I'm thinking about shutting this down. Or shutting down the platform and rebooting it again. Oh, Tesla here again. Randy. Now, how many times have we touched? This is the third time. Okay, we got a Head and Shoulders. This is the right shoulder, so this should, if it's bullish and it breaks out this time, we'll break this resistance. I'm wondering when the market's going to start defecting on Elon, or are they going to kiss his ass now that he's more or less assistant to Donald Trump? Or are they going to be too scared? Because he'll just tell you to F off like he did Bob Iger. No, my ear itched. So I'm going to get back in Tesla here. If we get a double bottom, there it is, right there, 305. $350s at 305. Double bottom, higher low, snake breakout, pullback, wedge. I don't want to erase all this shit. I'm going to just leave it like it is. We're at 320 right now, and I'm in at 305, 310. 310? Fuck that, I'm at 305. Got a hammer. God, you... I can't believe this computer the way it's acting here. Could be a lack of communication.
of other names under the umbrella that are popular, right? Tommy Hilfiger, Calvin Klein would be in there, as well as I remember a few others that are very notable that are good, right?
Yeah. So they're spinning off all but
BURL.
And they're really trying to focus in on those.
That was
two
another one
brands,
on the watch
which
list.
Are, they make up like 95% of their revenues now.
For earnings.
And they've done a really good job in the last few quarters to really leverage their operating efficiencies, focusing on those two brands. And their top line isn't growing significantly, but their EPS is, just because they've really become more efficient and driven margins higher while focusing on those two brands and kind of spinning off the heritage brands.
Yeah. David, what did you think about the Gap?
Yeah.
The Gap reported a pretty good quarter last week. Old Navy still has work to do. Old Navy's numbers are still not very strong. The company really needs to report stronger sales growth because Old Navy does generate most of Gap's income. But for the most part, Gap is turning around under the CEO Richard Dixon. We've seen all four concepts at Gap now have returned to positive comps, which is good. Because in the past, Banana Republic and Gap especially were struggling, and Athleta has been struggling for some time. So we have seen better results.
Well, that boy looks like he's been slapped around a little bit.
So that's good news to have the comps improved in all four.
God, talking about someone looking ugly.
Navy was the jewel, right? I mean, they did so well in the Gap brand. The namesake store didn't do as well, but they do have new.
God, I'd hate to wake up to that every morning.
I also saw a report last.
I think I just found the ugliest man in the world. Here, let me see if I can fix him up a little bit. This guy. Let's start right in here. Yeah, that looks a little better. Oh, God, I can't look at him no more. Oh, thank you, Nicole. Shit, I better have a panic attack. He looks like that dude. He looks like him. Oh, that's funny. Someone in the room posted this picture of this guy. It's funny. Ugliest man in the world.
named highest in client satisfaction by J.D. Power for 6 years in a row. With investor checking.
So what is a guy when he...
checking account. Plus,
we know what a misogynist is. What is it when you beat down on a man like that? Mansogynist?
move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more.
I just wish I had half his looks.
The
Randy,
built for investors.
follow the leader. We are now at 145. I beg of you, break it. 145, Randy. Should I sell? I got 5 of them. Not a big day for making big money. But it's a day we can make good money. It adds up. Well, $350. I'm out. They'll probably go up more. $355. I'll take it. Fudge. 370.
little bit, and then the key area of resistance and what we've been pretty much trading around, that 6,000 level, we just haven't been able to really break above that in a significant fashion yet. But overall, it's been I would say a mixed market, decent market. You'd like to see a little bit more of a broader participation, to say the least here. But once again, we might be in that type of time frame where it's just slow, and that slowness could continue to have us melt to the upside here, but it might not be as aggressive or as sexy as a lot of traders would like to see.
I hadn't realized it, but it looks like we're on a pretty nice little up-day streak for the S&Ps if we were to close green. ES, I'm seeing what is going on 7 straight green candles. So not always do we see the market move this way. Like, for example, you could go back to November 6th, which I believe was the day after the election, and that one green candle, I think, is bigger than all 7. So it's been kind of quiet, consolidating.
Oh.
But we haven't really seen any...
Don't make me mad. Alex.
flush of it, a recovery of it, and then it's over.
It's like that for the last, 7 sessions, right? Overnight, we see a lot of weakness. You wake up in the morning, we're flat.
I honestly thought you were going to say the last 7 years, and I was going to agree.
It seems like kind of like that action. Look, even the headlines that could be a little bit scary, especially for mega cap names or those that have multinational type of exposure, international exposure, especially on the export side of the
These
equation.
guys are way too much thinking about it.
Weakness. Buyers continue to come back in, step in, because we are the best house on the block. The dollar continues.
How about you if you just short the market, if that's the way you feel about it? If not, just keep your mouth shut about tariffs.
December. So, flush at night. Try to go green during the main session here, but you still want to see that volume. I'm a big volume guy, right? We look at price action. That's going to be the first thing, obviously, you want to kind of focus on. But volume, I'd like to see that actually complemented. Now, if from a technical setup like we have here on the chart, you could also then make a case, hey, if we break through 60-20,
I'm going to go cook an apple, make an apple.
Continue to extend to the upside.
I'll be right back.
The valuation is going to allow us to do so. I think that's the other big, question mark, but you go into a seasonality period of low volume, which could actually, cause, excessive price movement to the upside or downside. You have the holiday trades. Everybody's looking for that bullish trade. What's the next area to actually catch a bid in this market? And then we have the reset happening in January. And so, barring any type of black swan type of event, and even if the Russia-Ukraine conflict still escalates, but is in a manageable fashion, I think right now we're kind of, I don't want to say we're in the clear, but the ball is definitely in the Bulls' court for right now.
There's not a lot of risk that you can see. And I think that's the same. I would agree with that. And that actually, to me, you never want to be looking for the monsters in the closet kind of a situation, but it's actually usually when things are calmest that's actually when the storm comes, but it can come in years from.
Can I show you what I caught today, Room? Ladies, Randy, you'll be very proud of me. I'm going to show you what I caught today. And it wasn't herpes. YouTube, if you give me $10, I'll show you what I caught today. Yeah. He didn't have much to say. I'm going to send this to Vegas. Oh. I have to save it. Where in the hell? Oh, it's in pictures. Or is it in documents? It's there.
Just not in equities.
Yeah, there's a lot to go with that conversation. I'll just kind of leave it in the balance. But clearly, Europe has been, somewhat of an economic disaster when it comes to some of the energy policies they've made, and then the battles they've picked, given that that's where they got their energy as of recently. So there's some stuff they got to figure out, and I think that's why you see dollar strength. It's not just tariffs, but it's the U.S. continues to be the best house on the block. And if the block gets shakier, it's still going to be the best house on the block. The only way that's going to change is somehow Europe, Asia, and the rest of the world has some sort of synchronized growth. And then also you have to simultaneously believe that the U.S. isn't participating in that. It's very, very difficult at the moment to get there. That doesn't mean that the dollar isn't going to oscillate around and it can't have, a trading range. But one of the conversations Oliver had on Market Overtime was with Brent Johnson. He has this idea, this dollar milkshake theory, which I don't think is totally unique and revolutionary, but it just makes a lot of sense, the idea that there's always this demand for dollars, and then if you add more protectionist strategy and things to trade, it just reduces the supply of dollars for those elsewhere. Because it's not like Germany and, let's say India, if they ever did trade, that they're settling it in euros. They're likely settling it in dollars, of which both those countries do not print.
Yeah, to a certain point, right? And obviously we have BRICS too. They're trying to build this whole thing out, and I think we're all skeptical of how successful that's going to be here in the near term. Maybe long term, you might see a little bit more diversification when it comes to the delivery currency, if you will, when it comes to trade. But for now, it's obviously still going to be dollars.
And it can't just be governments. It's also going to be the businesses and the people participating in these markets that want to change into that. So I think ideally, if you're one of these countries, you'd love to have some sort of other alternative system. Easier said than done.
Oh yeah, a lot easier said than done. And then you
Dell guides up. Oh, I don't know. We could go over the preview a little later, but I think Dell is one of those names that it either blows it out of the water or it just moves in line. I mean, again, it's tied to the chips, the computers, all of that, just later stage, and it is pricing in quite a decent amount. Like, it was pricing in $14, I think. Yeah, and the stock's at 140, so there you have it. It's pricing in a lot for what it is. Like 10% min.
$296.64 is going to be, if I got in on there, added. We got on the daily, and then it's an automatic run up right around 1790. We got a head and shoulders right here, pretty good run. Had it hard right around 1794. So that's where I'm gonna put my resistance line for right now. Pull back and find support on the bottom of that candle right around 1670 for a double bottom. Then we got Dell. Dell's had a pretty good run, had a hard sell off here. Looked like earnings sucked. Then all of a sudden it got better. So same here as that. Something's kind of fishy about earnings here. We got a head and shoulders right here. So I hit my first support. I called this here line right here. This is Dell. This is in my recording that my earnings report. Definitely broke resistance. So it has to hold that resistance right there or it goes ahead and pulls on back. Now it's got earnings coming out on Dell. So I'm going to keep a close eye and read up on news on Dell. See if there's anything this week, probably work on it a little bit tomorrow. If it does start to move up, it could, well, I don't know, man. I just have to keep a good eye on Dell. For right now, it's going to be right around 150 is going to be our resistance. Support, it's going to be the 9. Keep it up off the 9. There's a gap right there, so that's going to be your support, that gap. That's got to hold. If 140 doesn't hold, then we drop on down more. But that's a pretty solid support. You got a gap right here. And if that doesn't hold, then it's automatic drop down to that gap fill, which I'd go long at 133.9. Now, I'm very cautious in the market just because I want to be. I'm not too happy about geopolitical things going on right now. So, like I said, I sold a lot of stuff. And I just don't want to take a lot of chances. Not until this kind of clears up. Hewlett Packard, another resist. So I drew that trend line.
Events too, so that could have had an impact.
And they can revise this one.
Yeah, so the revision, so last month it was actually at around 4.1% on a month-over-month increase. They revised that up to 7%. So it seems like there's more of a realignment when it comes to the data set rather than a complete fracture in the market. And I would say we should suspect that with a lot of other economic data points coming out over the next couple of weeks.
And we're seeing that even in consumer confidence. I don't think the numbers super stuck out to me. They did firm up a little bit. The market didn't really know how to digest it. It's actually when the volatility started to pump up a little bit.
LLY had a breakout pre-market
of about 20 points from a range of 5 points, which is notable.
Well, it was a misprint. Did you see that?
Oh, initially?
Yeah,
They
so
corrected?
the revision came out as a 2.1 for consumer
Oh,
confidence
wow.
because the site was down. So that was also another reason why.
That doesn't help.
We saw
That's
the
some
loss.
kind of news.
That can definitely influence. We've seen that happen on earnings at times too. FOMC minutes later on this afternoon as well. We're gonna take a short break. Then we get back.
Short
Emma
interest.
and I are going to look at CrowdStrike. This is a big time mover this year. They got earnings after the bell today. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis.
375 on Tesla.
Insights on every changing trend in markets. Available anytime, anywhere, on any device for free.
Yeah.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rank.
Randy.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth
Randy was
management,
nervous
advice,
down here at the
invest on my
200.
own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Weren't you, Randy? You were scared down here, weren't you? Tell the room you were scared. Randy. Randy. Are you still scared? Hike. See, Mike's in the room, so I'm not going to play any music. I've had a lot of requests for me to sing.
I cannot accept that course of action.
They wanted to listen to Tiny Bubbles. So I think I'm going to go into the kitchen. And I got a little bit of honey. I'm going to see what it tastes like inside of instant coffee. And I'll be right back. Hike.
52% revenue growth in the second quarter. So subsequent decline, but still 25% growth. Subscription revenues expected to come in at $936.6 million. As you can see there, professional services expected to come in around $49 million, and then annual recurring revenue, a key metric for the company, is expected to come in at $4 billion, with remaining performance obligations of around $5.05 billion. So shares only up about 0.2% right now heading into this print, but I will say Jay Woods was out with a note earlier this week kind of previewing CrowdStrike and did point out that they've rallied for the past 5 quarters after earnings with an average move of about 9%. So we'll see if they can make it 6 in a row when they report after the bell.
Yeah, and really, if you took out last quarter, it's closer to 10%. Last quarter's dragging on it with its measly 3% jump. So 5 of the last 5. And then, of course, if you just looked at the performance versus the estimate, I don't see a miss at any point in the history.
Tesla
So
trying
it's
to
one of
pop
those
fire.
companies that's done really, really well from an execution standpoint. Save that one measly outage that just took down the entire world's technology in July. I found it fascinating as you talked about the 80% performance since August 5th. That's 4 times better than the NASDAQ, yet it still hasn't got back to its highs. So it goes to show just how much damage was done. Caroline, I know you keep track of sort of how analysts shape up on this one. I was surprised to see that not as many kind of jump ship.
There she goes.
When that outage happened, as you think. I still saw, I think, like 80% of them say buy still.
Ladies and gentlemen, Tesla's about ready to break out. Randy, we're at 395 from 305. That's $90 a contract. I've got 2 of them. There's $4. Randy. Inside on Bubba. What the? I just hate to wait, man. It's 3 seconds, 2 seconds, 1 second is a second too much. Come on! Jeez. That took 15 seconds. It's way too long. Okay, I'm going to shut this platform down for a second. It's acting real slow. Much better. That right there saved me 15 seconds. I can't stand having something slow, man. I got to every second. I know how much a half a second matters. And when you're down 5, 6 seconds trying to get something charted, and then 15. Snake, breakout, pull back, boom. Now we've got 3 white soldiers on Baba. I'm helping this other guy out.
Be mindful and keep your eye out on that. We did see a little bit of a move to the downside. You had some buyers really, stepping into this name here. So maybe there might be something on the radar. I don't know, but they've done a phenomenal job. Now, if we kind of bring that chart back up to the, you get a little bit, nervous because we are kind of consolidating maybe in a little bit of a wedge pattern between 490 and let's say 450, right? So you'd like to see a nice little breakout to the upside. That candle, along with that volume spike yesterday and showing that buyers stepped in here, kind of signifies that there's still maybe some more strength into this name here, Alex, over the next couple of weeks. Once again, we don't know why that volume spike is there, but that is something to kind of keep on your radar. That's actually more than what we've seen on earnings announcement days.
When you see something like that, my first thought, and look, this is speculation, so discount it as such.
Right.
When we get these next round of, some sort of big fund or something, we're going to find out somebody built a position probably, or took one off, but based off how the candle looks more like somebody building a position and selling one.
Yeah, and I'm gonna look at flows.
How can you tell if someone's building a position by a candle?
On the radar for somebody here, but once again, they don't have that much when it comes to competitors.
If I just hear him right, how? What is this? How to identify buyers and sellers in a candlestick. What is... How to find signs. I gotta stay that.
If it actually does go higher, this is going to be a winning trade, right? So it gives you a little bit more edge in the market rather than maybe buying a long haul vertical or just going outright along the stock here. So it's kind of a risk reward,
I think it's interesting in the context of yesterday, too, where you had this massive volume spike, a move lower that was bought.
Oh, here's some good news. President Trump's FCC chairman, Beardman Carr, just said he may block George Soros' acquisition for 200 radio stations. They think George is funding these illegal immigrants that are crossing this last bunch. I bet you if you asked a liberal who George Soros was, they wouldn't know. They're so damn stupid. Back from running? You ain't gonna tell me you jogged. Not with your hip. God, he's ugly. What the heck?
Again, Dell is cool again. It's on the move.
Yeah.
Talk to me about what's been going on recently, though, because the stock seems to have peaked out back in May and hasn't quite been able to recover.
Well, I think if you look at companies that are in this, hyper-converged market for artificial intelligence, AMD, Dell, Supermicro, a lot of these companies going back to, even February, late February for companies like AMD and Dell, Hewlett-Packard Enterprises as well, they all caught a bid and they've been drifting to the downside. And I think what we actually had was really just a significant multiple expansion in many of these names. And then, of course, we're seeing a pullback and a sort of a recalibration of valuations.
Dell.
Which are more normalized for
Earnings Dell.
Because obviously, if you look at the beginning of the year,
I like this station.
It looks like at $176
I really do.
from around $78 to start the year, and the earnings per share and even top line sales actually really haven't reflected that, both on a trailing basis nor on a forward basis. So essentially, I think things are more normal for Dell. Considering this is not necessarily just a computing infrastructure company, but they're also a software-defined service or a software-defined storage solutions company with their EMC division, but they have their traditional PC division as well. But the server market, if you look at the high-performance servers, they're estimated to be about 75% of sales going forward. So there's a lot riding on Dell, especially being a legacy, hardware and now an infrastructure software company that competes with Hewlett-Packard Enterprises. But if you look at the quarter they're about to report, you can kind of see what I'm getting at, because the EPS estimates are $2.06. Now that's only higher by about 9.5% compared to $1.88. But sales are expected to be quite robust, over 11% to $24.5 billion versus $22.25 billion for the same quarter last year. So I think what's happened here is if you just look at the EPS growth to sales growth, even on a forward basis, they're actually expected to be in the single-digit range versus this quarter, the double-digit range. And I think that's more normal goings for a company like Dell, which again, still has about 45% of the PC market share. And one of the things I noticed is obviously there's been a lot of demand for the high-performance servers for Dell. Their profit margins have actually expanded in the last year compared to their 5-year average. But if you look at their cost of goods sold and the gross margins, you can actually see them actually down compared to their 5-year averages. 23% gross margins in the last 4 quarters, and they're 27% on average in the last 5 years. So it looks like Dell is playing catch up in terms of manufacturing the high performance servers, and that's effectively compressing their margins. So I think this will be an interesting quarter in terms of reporting, but there's a lot going for them this quarter, especially with sales and earnings being in the double-digit range.
One of the thoughts was that the SMCI or Supermicro kind of losses in terms of confidence customers might have the winner could be Dell. So it sounds like what you're describing is they're investing for that, if that is the case. Am I hearing that right?
That's exactly right. That's exactly right. That's what I see. If you just look at the margin compression, at least the gross margins, as well as last quarter's over $3 billion in selling and general administrative expenses. So that's potentially, again, why we saw that decline going back to earlier part of this year. But there has been a nice steady uptrend. If you look at the price action since July, and this also corresponds to the market because we know that July and early August was bad, but it's been a slow and steady uptrend, and that again is more indicative of the valuation of the business relative to the single-digit sales and earnings estimates. Now, lastly I'll put out here is that if you look at the free cash flow for Dell, it's actually quite robust. Right now, the forward earnings multiple, in other words, the forward PE ratio, is around 16 times earnings, but the forward price to free cash flow is only 13 times. So a lot of times when you see free cash flow margins less than earnings margins, that also presents maybe a value opportunity, and I think that's important to keep in mind while we go on earnings.
Great setup. George Tillis, Senior Markets Correspondent for the Schwab Network. Looking forward to this one after the bell alongside CrowdStrike. Looking forward to it. Bring back in KG here. Let's talk Trade Dell. This is a name that is a lot more volatile than I think you would have thought, given sort of the legacy nature of this particular company. But as George kind of laid out, a lot of investment into this AI server build out, etc. Don't quote me on exactly what it is that they're making, but they're making something you need in the AI world, and that's given it this added volatility and added growth element.
Yeah, and mainly it's kind of the cooling racks, right? And that's exactly what SMCI has been able to provide here. We know what the issue has been for that company. So can there be some tailwinds? Can they actually get some competitors, market share? I think that could be the case here. And the trend has been nice since those lows. I have to admit there. I mean, we have seen a nice little grind to the upside. Let's see if the fundamentals are going to be able to respond to that. Now, when you get to that 148, 147 and a half-ish area, it becomes a little bit more difficult because now we have this kind of a flag pattern or even just a triangle, triangle pattern taking place. Kind of talked about the valuations. Yes, the margins look fairly good, but what if they were able just to meet the street's expectations and some of the air comes out of the balloon, if you will, from this enthusiasm that we've seen from the stock? We might see a little bit of a reversal or a small retracement back to the downside here. So,
and for that context, that's what happened 2 quarters ago. It only beat earnings by a couple pennies, and the stock got hit for almost 18% to the downside. This is one of those names, if history serves as any guide, which it does sometimes it doesn't. It doesn't need to just meet the expectation. It kind of needs to hit them out of the park.
Yeah, it definitely has to be able to hit it out of the park here for this name here, and they could. If they come out and say, look, we've seen a huge uptick in new orders because of the situation that's occurred. Now, they might not call out the company by name. Sometimes companies just don't want to do that. But if they actually do come out and say, look, we are actually seeing a rapid acceleration of growth right now, we are seeing a little bit of tailwinds. But if they're not able to, this trade example is really trying to capitalize on potentially a pullback, a very small spread here, looking at buying the November 29th, 143, 140 put spread, buying the 143, selling the 140, doing this for a debit of $1.50, max loss $150, max profit $150, kind of a 50-50 shot.
380.
Exactly, 50-50 shot on this earnings announcement here. Let's see how it's going to be able to play out.
Instant pain, instant gratification perhaps as well. That expires on Friday. You got Thanksgiving interrupting, and you got this earnings that's probably going to set the score. With like 9% volatility, it's very reasonable to go in with the expectation that this is going to be, push and max winner or push and max loser. And I think a trader who's looking at this strategy would know that before they put it on.
Exactly. Once again, it's kind of a 50-50, and then you can take the trade-off as soon as the earnings announcement is done. We also just have to keep in mind, too, we have an early session ending on Friday as well, so you've got to manage the position. It's not going to be a regular close on Friday.
Yeah, looking forward to this earnings event, as I said, after the bell later on today. Thanks to Andy and George and Caroline for joining Kevin and I. Thanks to Kevin Green in the studio with all the insights on the 3 different stocks, too. So exciting stuff. Thanks, as always, for tuning in to Fast Market every day here on the Schwab Network. Coming up next is Next Gen Investing. We'll be right back.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor
Schwab.
The checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With investor checking, you get the award-winning fee.
I don't know who J.D. Powers is, so please.
All designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available.
Niall, that's support again.
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing
Part number 5.
Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
I finally made a burrito that didn't make my fart smell. I am today. What the? Okay, what'd I just do?
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
Oh, that's what it did.
Analysis ahead of the biggest events for the economy.
Oh, that's funny.
From bell to bell and beyond.
Watch live
and on demand.
I was wondering what the heck was going on.
7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we're seeing the session fairly mixed today. I know we were discussing the way we were seeing somewhat of a pullback this morning, but I have to say that pullback has held actually relatively all right. We're down about 0.5% in the Russell, basically unchanged in the Dow, and then higher in the S&P and NASDAQ. So mixed session, no doubt, but weakness today led by the small cap Russell, which has been the outperformer over the last several weeks.
Yeah, it's kind of an inverse session of what we had seen, but if you just look at intraday performance, I mean, we're way off the lows in the Russell by about 20 points going back to that first hour of trading, which is pretty significant considering they're only down 11, so cutting those losses by a factor of 2/3. And then looking at the S&Ps, I mean, this is about as high as I've seen them at any point throughout today's session. So back to 60.31 in the ES is a really, really nice move. I know that, before the open they hit 60.40, but since the market open, we're essentially on session highs here in real time. And this is after some weakness overnight. So overnight, Jenny, there was some post on Truth Social from Donald Trump regarding tariffs and what those numbers might look at. There was a flush in the market, market digesting those headlines. As the Asian markets open, we really made a U-turn and have not really looked back. So a market that took out yesterday's lows overnight, but has mostly been strong since. I know it's mixed, and this brings it back full circle to what you're saying, which is the market we've seen recently has been a more broad, small cap, cyclical stock driven rally. So the other 490, other 493 have been leading the charge. Today is more of what we had seen for the last few years.
Resistance.
Big tech, Magnificent Seven out in front.
Today feels more reminiscent of what we've talked about for the majority of the narrative of 2024. Yeah, I totally agree. I feel like even I today have been talking mostly like these post-earnings moves in retailers, which have not been exactly so promising. But then you look at the rest of the biggest names in the market, your Nvidia's, Tesla's, Netflix, Microsoft, Meta, Alphabet, Amazon, and Apple, all higher on the session. So that's why I think we're seeing some strength, of course, with the NASDAQ looking out ahead here, and the S&P also basically on par with the NASDAQ. But on this show, we'll step away from the overall market discussion. We'll be focused on our individual movers here. We'll kick things off with upvote and downvote. We'll be charting and trading those upvoted names. And for FOMO today, we're talking one of these retailers, unfortunately, moving to the downside. That is Kohl's, as it did name its third CEO in 3 years and reported some disappointing third quarter results as far as its financials are concerned. We'll also be diving into the airline sector, as Citi did raise its price target on 3 of the largest airlines, Delta, American, and United. And we'll close things out with under 30 today. We're talking Rivian higher on news of about a $6.6 billion Department of Energy loan for its Georgia plant. So mixed picture today as far as our coverage is concerned. It feels very much like a classic shortened week, where it feels like we're looking at some of these names we don't discuss maybe as often as normal because we're relatively news light. Although I guess all things considered, we did get some Trump news overnight, like you mentioned. We do have big tech higher. It's actually not as boring as it could be.
Yeah, there's a couple names that we talked about on Fast Market that have earnings in the case of Dell and CrowdStrike that are pretty big movers, I think, and we'll see ultimately when that happens or not. Also, I would say when you consider the fact that normally you have 5 days to spit in the economic data. Well, Thursday, holiday. Friday, half day. There's typically not a lot of news on those half days. So they've compressed like 5 days worth of data into like the next 24 hours. There is so much data coming out from Fed minutes this afternoon to GDP and PCE and everything, and then before the market tomorrow. So tomorrow could be interesting. But then after that, especially if the data is relatively benign, definitely could shut things down. Fun show, though. As you said, some names we don't always talk about, so looking forward to it. Let's do upvote, downvote, not endorsements, not recommendations. First one on the list, energy company, Chevron.
So Chevron, the second biggest U.S. oil company, so it's a major component of the energy trade, although not one we look at a lot on this show. It's up about 1.25% today, rising after Citi upgraded shares to buy. So Citi noted that Chevron has not kept pace with either Exxon or the S&P 500 this year, and that worries over its bid to buy Hess may get derailed over legal challenges for the overall guano field, which have weighed on the stock price, thus creating now a growing discount to its larger rival. So they think that the relative value has started to emerge. They also said the downside now looks protected while the upside remains to be significant. The analyst did raise this price target to 185 from 145 and did highlight the exploration, and it could be a big catalyst for the shares if they continue to really go into these new regions and continue to expand their overall capacity. Oil is still down about 10% over the last 3 months on concerns of really global demand and geopolitical tensions, but oil companies have received overall a lift from the election earlier this month, and there is the view, at least per this analyst, that the election, what we're expecting to be more lighter regulation, will lead to, of course, more drilling, obviously lucrative to these oil companies. So this name, very much loved. You got 3 strong buys, 4 buys, no holds, no bears. I mean, that is as strong of a conviction. I know there's only 7 analysts, but still, not anyone saying even be neutral or slightly underperform.
Yeah, not exactly a next-gen name. But I will say, though, despite kind of the big bad oil companies and the next-gen, is not necessarily loving this particular space, really being pro these sort of green energy companies, etc., these are some of the companies that are investing the most in alternative energy. They're the ones that have the most to lose. So it is interesting as you kind of watch that. But you mentioned kind of the drill baby drill plan of the Trump administration. New Treasury Secretary has that 333 plan, of which 3 million barrels of oil increase is a part of. So I always say the thing about energy companies, particularly these big oil companies, is they're the most stoic of all, just because they operate in such a volatile environment from a commodity that moves around so much. If they get too high in the good times, they're not going to be prepared for when things inevitably aren't going well. And we've seen, just in the last 5 years, some of the extremes. We saw $120 oil or thereabouts with the onset of the Russia-Ukraine conflict. And during COVID, we actually saw negative active month futures at one point in crude oil, which is just insane.
I forgot about that. That was a wild time. I mean, the rest of the market was like in disarray as well, but that was ridiculous.
Yeah, that's perhaps a once-in-a-lifetime situation where you're going to see something that, in theory, you're actually being paid to take.
Yeah, and that is in itself, I mean, a wild fact. And then all these names, I mean, are nowhere close to like their highs. I feel like the energy trade has been somewhat on its own tandem, but also has its own issues, headwinds and tailwinds to deal with. So it's been an interesting one. One of our leaders today. Our next name today is Intel. Intel has not been a leader this year, and I think that you'd have to be living under a rock to not be aware of some of the disappointment this stock has faced. Today is not really an exception. We're down about 2.8%. The government, though, has finalized its grant to Intel. So on Tuesday, the Biden administration did announce that the Commerce Department has awarded about $7.86 billion through direct funding from the CHIPS and Science Act. Now, per the Secretary of Commerce, did say that these facilities are going to fundamentally change chip manufacturing and the strength of the chip industry in the U.S. It's a huge step forward, they said, in strengthening the U.S. semiconductor supply chain. So along with this funding, Intel did agree to not conduct stock buybacks for 5 years, with some undisclosed exceptions. The company had already paused its buybacks, though, in recent years. That wasn't too much of a hurdle. And Intel did say, as the company does implement the next phase of capacity expansions and the acceleration of the process technology roadmap, they plan to continue to prioritize reinvesting in their business rather than stock repurchases. So according to a senior administration official, the reason Intel didn't receive the full $8.5 billion was due to a subsequent $3 billion secure enclave contract given to Intel to make chips specifically for the U.S. military. So you'd think this would be good news. All things considered, though, shares are lower today.
Timing's everything, right? Because if you went back to sort of the lows, it's up like 30%. If you just simply went back over the last quarter, 3 months, it's up 20%. That doesn't tell the story. 3-year performance down 50%. Year to date, it's down roughly about that as well, a little bit more than 50%. So you look at this particular name, it's probably going to require some patience if you're looking for some sort of meaningful recovery. I would have been shocked if this company just overnight was back to some of those levels from earlier this year, just because they laid out such a defensive strategy. It was almost like they were taking the ball and going home, or a turtle going into the shell. And it kind of, I think, highlights just how dire things actually were for Intel, as crazy as that seems. But, in some ways, if you're an investor and you are still involved, like, it just seems so unfathomable that an industry, in the case of semiconductors, could be doing so well and your company could be struggling so much. And it was one that had the strongest position in the market coming into this.
I know, and talk about what a run. Phrase it is, it's defensive. They have at no point been offensive in any way, or like more proactive in terms of like the AI build. And I know they've touted their various investments and the ways they're building into AI. And I mean, frankly, it's always interesting. It just hasn't moved the needle enough. A consistent underperformer on this year with not really any sort of signs of that reprieve. Our next name today, though, also falls.
Airlines had a great run.
Chip world, and that is Analog Devices, which was actually initially rising this morning before pulling back actually seeing a very similar session to Intel. So this changes the story, because when I looked at this name pre-market, things were seeing more upside. Now we're of course not, but they did actually report fiscal fourth quarter
you're
earnings
loud,
that
chick.
outpaced expectations. Their CEO did mention that after a brief decline in overall bookings in their third quarter, orders did pick up steadily throughout the fourth quarter,
It'd be a tough one.
particularly in the automotive end market. And they did highlight that while macro uncertainty continues to limit their pace of recovery, they do remain cautious.
There's that
optimistic for
ADI.
a strong growth year in fiscal 2025. However, they do continue to see this business momentum, solid execution, but again, I do think that when you hear commentary like unprecedented customer inventory headwinds that drove this historic revenue decline, it does.
Now, this is a hell of a sell-off.
Shares lower today. So I initially saw this report and was like, oh, shares are higher. I guess we brushed that off. But I guess we didn't hear, as we're seeing in real time.
Yeah, this is a company that really goes under the radar given how big it is. You don't hear this talked about the same way you even hear like a Lam Research talked about, for example. But it's a $100 billion market cap. It is a massive company that goes relatively unnoticed. A really strong performer when you look at how it's done, not only just this last year, but over the last 3 years. So not as high beta as some of the other names within semiconductors, but kind of makes sense. It's more on the manufacturing side of it, less so the design side. So one to watch for sure. Huge move for its own, I guess, context or relativity in terms of this 2.7% decline. It looks like a giant candle. It's not that big of a move, grand scheme of things, but it looks like it because the stock.
It is a big move, you dummy.
That's a good point too. I know we're down about 2.7%, but I mean, it's
$20.
not selling off by any means. We're still up about 9.5% on the year, so still hanging on to a year-to-date gain, which is, I think, important when you look at the winners and losers of the overall tech and AI trade. But our last name today here is
It is?
Lilly. And you talk about a winner on the year.
Damn, why couldn't they wait until after
pretty substantially from those highs.
Biden got out?
The Biden administration will propose that Medicare and Medicaid cover obesity medications, a proposal that would extend the access of drugs to millions of Americans, first reported by the New York Times. So the new proposal sidesteps a restriction that was passed nearly 2 decades ago that prevents Medicare from covering drugs for, quote, weight loss. So specifying these drugs would cover to treat obesity and prevent its related conditions. The drugs would include Wegovy from Novo Nordisk, as well as Zepbound from Eli Lilly. And this name, very much loved, very much, I'd say, like one of our most discussed and most paid attention to names of the healthcare space over the last years. You have 25 buys, 6 holds, and no bears. But again, we've pulled back pretty substantially. This name was at one point like unstoppable.
You adding Tesla calls again?
Street conviction earnings calls, but since we've pulled back about 18% from highs. So finding this new range, the 200-day moving average still ticking solidly to the upside, but the 50 has started to take a bit of a nosedive here, which is what makes, I think, this stock kind of interesting today.
This is such a fascinating space because this was one of those companies that if you would have just taken the name off, you would have thought was an AI company. But this weight loss drug space had similar type of growth taking place. Now, I think some of that is seen to have peaked out. Some of that is seen to have perhaps had pushback if there's sort of changes in terms of just trying to shore up the health of Americans broadly. That said, if you got a whole new revenue stream because a whole new set of insurance providers are going to pay for this, it makes a lot of sense if you're one of the premier offerers of this particular product. So 5% rally today, and it's pulled back a little bit. Year-to-date volume weighted average price is just over $106 a share. And interestingly enough, that's exactly where this stock basically got to today, peaking at 807. So something to watch, just over 800 there. Perhaps some overhead kind of resistance. And when you take into account the entire trading activity for the year, volume weighted, that's essentially the average of the last year, which is crazy considering the stock came into the year below $600 a share.
It is crazy, and I will say, even though we've pulled back, I mean, it's still a definite winner in the overall healthcare world, which has seen some more mixed price activity also post-elections. This name continues to be a winner and having a pretty decent day today. We'll actually be looking more into that chart of Eli Lilly, as well as the chart of Intel, 2 names that have been seen maybe as a respective winner and loser in their given spaces on the year. We'll also be looking at some example trades when we come back. Stick around, Next Gen Investing. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals. We'll be looking at the charts with, of course, our chart master, Richie Pat, of both Intel as well as Eli Lilly. I will say that these names are both unintentionally so, actually, one of the laggards of its space, one somewhat of the leader. We'll start off with a laggard here, as this is more of the bad news story. We've retested this lower range. We're trying to see some upside here. Today's move obviously not helping, but gosh, it has been a story of pain for Intel this year.
Yeah, for sure. And it's one of these charts where it all depends on kind of where you start looking at it. Because if you were to start looking all the way back here at these highs near 51, you're down significantly. You're down almost 53% from that point. If you're to start looking at it from here, you know, you're doing a little better. You're up like 30%. And you know, it's kind of just assessing what's happened recently and what's the kind of general price regime here. So now we're kind of seeming like perhaps we have bottomed out here, kind of this stair-step type pattern of range-bound consolidation, push to the upside and break out above the resistance, range consolidation, push to the upside, kind of a similar pattern playing out so far here. Really not any strong growth or anything. And unfortunately for the bulls, it's looking like perhaps we're failing at breaking out of our long-term downward sloping white trend line there after we topped out near 2638. That's our red line there. So right now we're holding on to support at the confluence of our two moving averages, yellow 21-day and orange 63-day exponential moving averages. But you know, still pretty rough chart overall. And probably most people didn't begin right here, as to my earlier point. Probably a lot of people are not feeling great about a lot of this.
I think a lot of people were hoping that they began right here. They probably were like way back here, because I feel like this name was seen initially as maybe a beneficiary of the AI hype cycle, but that has not been the case, clearly. As far as the momentum here, I will say to Intel's credit, they've picked
Tesla
up
ready to bounce?
12% of a recovery just this month so far. So are we seeing RSI give us any divergence, or is it just falling alongside price?
RSI compressing in a triangular pattern from our two extreme points that we saw recently, this high reading in the overbought area and this low reading in the oversold area above and below those thresholds of 70 and 30 respectively here. This RSI reading was quite low to the downside. It was like 15 or so. And remember, RSI only goes from 0 to 100. So after this severe gap to the downside, we were seeing very
it has to hold here.
Nevertheless, we can see that you could draw an upward sloping trend line.
Has to hold here. It drops to 341.60.
Strongest trend line, but just trying to show the general trajectory that we've got here. For right now, though, we're pretty much sitting right on that 50 midline that separates bullish and bearish momentum. Not a very strong lean one way or the other, in between two boundaries that are converging toward each other. So kind of matching our triangular price shape here. I wish I had a better conviction reading to give you here, but it's kind of just uncertain right now.
Because I feel like with some of its falling price, it's also been not really the headline news story it used to be when we'd see like Intel fall. Now it's sort of like every day it falls. I mean, not obviously this month, but I think you get almost accustomed to seeing some of this weakness, unfortunately, for Intel. So now when we watch some price levels here, I mean, what are we keeping on our radar? We are now into this period of the Santa Claus rally, where some of these names should be catching a bid here, but obviously that's wishful thinking for Intel.
Sure, and when we look here, we can see that, kind of for our purposes, we're more focused on the recent price action because we did have that severe gap to the downside. So that kind of provides us with the high water mark, respectively, to look at to the upside, and unfortunately the boundary if we do keep falling here. So the upside, a little easier right here. We've got our longer-term white trend line there. We tested near the highs today, near around like maybe 25 or so. Then this high point right here, our red line, 26.38, and then the gap all the way over here, that low point before we had our terrible gap down there, 28.89. So those are some marks to watch to the upside. To the downside, kind of our ranges that we had here. So this range between 23.50 to 22 matches up with a volume node here. And then ultimately we have our blue linear regression line of best fit, matching up with our range lows near about 18.90, 19 or so. And finally, if we were to look at a longer term chart, we can see that a lot of the volume is indeed down at these low levels. You can see our volume profile point of controls near 30.50 kind of matches up with a lot of this range bound trading. But the long term look doesn't look too much better. Unfortunately, we're down quite significantly off of those highs that we saw near 69. Pretty rough move.
I would say the long-term look is even worse because it illustrates really how far we've fallen and how consistently we've been sort of trending well below those highs once seen back, years ago at this point. So great look at Intel today, unfortunately moving to the downside. But now we trade this name and saying you were taking on a contrarian.
2 more minutes and the Fat Cats are coming back. 2 more minutes and the Fat Cat's coming back.
Two and a half, 25.5 call vertical. This is more of a function of pricing. This is the strategy.
35 minutes to full Mac minutes.
Reward, risking 150 to make 150 and have that break even near the current share price.
I'd say wait.
A little bit below the current share price at 24. So you find that by starting with that 22.5 call, add in that $1.50 debit, and you're left
I'd say wait.
That's the break even. 150 in max profit, 150 in max loss. Need a move though. Need this above 20.
Will Elon Musk buy MSNBC?
Max profit risk below 22.5. So straightforward, I think, Jenny.
Ask Rachel Madcow.
Definition, equal risk to reward, break even near where it's at, and it's bullish, so it makes sense you need a stock higher.
Right, so needing to see again some degree of improvement as far as its price. And today's move would not be helping, but perhaps we could see this name catch a bid in the overall enthusiasm into the end of this year. So now we shift gears and look at a respective winner in this space, and that's the healthcare space. Eli Lilly has been one of the strongest outperformers, been pulled back though pretty substantially from the yearly highs, about 18% roughly. So it's been a plethora of news that has weighed on this name. I also think crowded competition that's entering the GLP-1 space altogether. This was at one point one of the leaders. I think that right now they're struggling to maintain that top dog position. But as far as this chart's concerned, I did notice myself that the 50-day moving average starting to trend a bit lower. So curious your thoughts here.
That's a good observation. I don't technically have that one here. I have the exponential moving averages, but it's the same thing that you're noticing too with our longer term moving averages. That's more concerning. The longer term the moving average, the more significant it is when it rolls over. It's like perhaps if a speedboat versus a battleship, which could turn faster, but which is more significant. Obviously the battleship turning around is a much bigger deal. So it also means that the shorter moving averages are more prone to fake outs. So when a long-term big one flips over like that, it's worth starting to take notice. You can see that kind of happening with our long-term purple 252-day EMA. However, at the same time, now today with this big jump up, not only did we break through our downward, rather steep purple trend line here, we also recaptured our purple 252-day EMA. Now we're kind of bumping up to our yellow 21-day EMA that you can see right here, and this 795 line, this blue line, all these highs from over here, and then after that, after the breakout, it was low points here. So this is a chart with a lot of very significant horizontal levels. We'll kind of dive into more of those as we move on here. But for now, still trending downward, breaking out of the bad trend line, but still within kind of this not very great downward sloping channel between our two white dashed lines.
Yeah, and this name, unlike all the tech names we look at, and even, I mean, like most of the names I look at, frankly, are higher on a month-to-day basis. This name is not. Even down 4% with today's 5.5% move to the upside, which speaks to some of the recent pain. So with RSI, what is momentum indicating here?
You know, this is an interesting example of momentum here. Look at this period all the way back over here, kind of matching up with the price activity here. So we had a
Randy, 341.90.
Momentum was in the overbought area, but also trending downward. So kind of a strange mixed signals there. And you know, we say all the time, bearish divergence, slowing momentum is not the crystal ball that tells you when a decline is coming here, but it's also not a great sign. And then when you do get the bearish signal, which was right here, which was the cross out of that overbought area, in this case, we did see a pretty rough decline here. So another key thing is that we kind of had a double top here, a repeated test of that area near like 970 or so, kind of failing over and over around at that point here. Notice how much worse momentum was compared to last time as well. Didn't even really match up with the trend line, still going downward here. Now, more recently, reverse situation, bullish divergence here, price making lower closing prices, but RSI actually trending upward. Now we're getting close to crossing above the 50 midline and our downward sloping red trend line here. So that would be a really interesting breakout. So we're on the move to the upside, but we still have some work to do.
Okay, so some work to do, I think, is a good way to depict this entire chart, frankly. So now when we watch some levels moving forward, again, a name that's seeing a nice bid today, but still has some work to do to recover some of the losses we've seen just over the last month. So what are we watching for price?
Yeah, often our volume profile study reveals these important areas that maybe weren't as clear at first. Now we can see that we've been trading very close to our point of control, the area of heaviest trading, the heavy volume area, near like 770. So this was a supportive area potentially. We broke through it somewhat here, but we kind of held on to the old lows and to our -2 standard deviation channel there. And then we got our bounce here. Now we're really struggling to retake that 795 level. So kind of this whole area right around here between like 710 to 730 or so, that would be a supportive zone. But in the near term, kind of the area we're at right now, this is a key point to hold, kind of one of these pivot points. If we do move to the upside, right here, low point, then high point near 860, and then a gap near 900. Those are some key areas.
Okay, yeah, and this one we'll keep on our radar as well. The developments in the infamous GLP-1 space, of course, which has been so beneficial to these companies with this exposure. But appreciate it, Rick Ducat, our chart master. And now we trade the SNP, Alex, and considering it has still held on to a really nice rally this year, I know we've seen a retracement from those highs, but I mean, all things considered, a pretty nice trend. When you look at and zoom out, walk us through your thinking for an example trade today.
Yeah, big move today, obviously, so that kind of complicates things a little bit, but it is off its highs. So I looked at a neutral bullish strategy going out to the December monthly cycle, and then Rick talked about that level around 770, 775. Noticing that level as well, I use that as a structure point for this particular strategy. The 775, 770 put vertical, December monthlies, $1.25 credit is a quarter of the width of the strike, so it creates a 3-to-1 risk reward. You can see that over there. Max profit is 125. Break even would be 773, 75, and then max loss is 375. So you simply just take that $1.25 away from the short strike of 775, 3-to-1, so you're risking 375, chance to make 125. This strategy is fairly straightforward. Again, you don't need the stock to go higher, Jenny. You need to hold the line and stay above 775 over the next month.
Yeah, and I think this one without any catalyst really in the near term, other than, of course, just like the slew of economic data we get tomorrow, where we should be pretty catalyst light, but this name obviously can move on its own conviction, up 5.5% today. We'll leave it there for our Chart Master segment, though. Coming up next, it's time for FOMO. Today, we're looking at a name you might be feeling a FOMO way to the downside. Unfortunately, Kohl's, which has pulled back about 16% on the session, actually off of session lows, but seeing a blistering move following its third quarter report.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Randy?
Accelerate your market knowledge.
Jimmy called it.
Shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you.
We're at the 200.
To go at 12 p.m.
Scale some out.
On the Schwab Network.
Yabba dabba doo.
Welcome back to Next Gen Investing. It's now time for FOMO. Today our FOMO move is to the downside pretty substantially. That's Kohl's. Although I will say that it came off of session low, so it was looking a little bit more brutal earlier in today's session. But joining us now to discuss more about some of the weakness that is at least being guided for from Kohl's management is Caroline Woods, Senior Markets Correspondent for the network. So Caroline, what happened here? Because we've seen a very mixed picture from retail so far. You have your winners, your Walmarts, and your losers, your Targets. Fortunately, today's move makes Kohl's one of the losers.
Yeah, certainly so.
Kiss, kiss.
You took the glass half full approach that Kohl's is off earlier lows, but still down about 16%. Following an earnings miss, a slashed outlook, and news that the CEO is stepping down. That crossed the wire last night. The company is
If I ever got to meet that girl.
pressured consumer, and despite the fact that they did see.
If I ever got to meet that girl. I'd have to say, Caroline, with your eyes so blue, would you like to go out to dinner with me too? As I look from afar, and I wish I was there, Caroline, I really care. Thank you very much. Now she's back, and she's wearing black. I might have a little heart attack.
Thanksgiving, given the late Thanksgiving, they said they'll focus on maximizing those big holiday shopping days. And actually, notably, they're reintroducing fine jewelry in about 200 underperforming stores that have lost traction. So interesting to note there. But in terms of that updated outlook for 2024, Kohl's now expects sales to decline between 7 and 8%. Previously, they were expecting a 4 to 6% decline. Same-store sales are expected to fall between 6 and 7%. Earnings per share now expected to be in a range of $1.20 to $1.50. Previously, that was $1.75 to $2.25. And then I mentioned that the CEO is stepping down in January. Ashley Buchanan, who's current CEO of Michaels, will take over on January 15th. It's actually the company's third CEO in 3 years. But all of this definitely weighing on shares today. Off earlier lows, as I said, but still down about 16% and now down about 46% year to date, only about 8% away from the lows.
It looks like analysts are losing their patience.
We're retesting the snake.
This one too. I saw a lot of price targets adjusted. Not a lot of buyers in this name. I mean, this is supposed to be the space that's outperforming this sort of value hunting type of a store. TJX is doing well. Amazon does well. Walmart does well. Costco does well. I guess that's where the dollars are going. They're no longer going to Kohl's.
Well, I do think that Costco and Walmart would be more staples, right? We did see Target under pressure, specifically for apparel as well. But I think that this just highlights the shifting consumer preference that we've been seeing. There still are winners.
GME still strong?
They're just being more choiceful or choosy. Those are the real buzzwords right now. And we're not
Raybo,
seeing them.
long time.
At least on apparel and shoes at Kohl's. As I said, they did see some strength in other areas of the business, like Sephora, for example. We know makeup, skincare has been popular. So I do think that, you know, it's just underscores this shifting consumer preference. And unfortunately, Kohl's is not in the winner camp when it comes to that. You mentioned analysts kind of losing their patience. We did see JP Morgan already, who had an underweight rating, slash its price target to the street low now of $13 a share. That's down from 17. So if you take a look, Kohl's is currently trading at $15.43 right now. So JP Morgan sees room to the downside here. But about 56% of analysts are on the sidelines for Kohl's, and they were heading into this report. So there wasn't a lot of bullishness on the street for this name. If you take a look in terms of the median price target is $19 a share. So we'll see if additional analysts kind of make some adjustments based on these results. But there's not a lot of bullishness right now around this name, and we're certainly not seeing a lot of bullish activity following these results.
Yeah, and no kidding. I mean, I feel like at this point it's like Kohl's lacks an identity. You have names like, I mean, Nordstrom, which is more high end, Burlington, which is lower end, Ross, lower end.
Always clean. Hello. Yeah, what's up?
Hi, this is Sam. How are you?
I'm all right.
Good to hear that. Well, the reason we are reaching out to you is that you have health insurance with Marketplace, right?
Yeah.
Perfect. It means you qualify for additional healthcare benefits for 2025. So I need to confirm, how old are you?
I'm 95.
Sorry?
I'm 95 years of age. Oh, fuck, you hung up on me. That's about rude. What the heck?
It can figure out its identity, to your point, and turn things around. I know we've said a lot of negative things around it, but the stock intraday is, already, quite sizably off its lows by almost 10%. So it can bounce back pretty quickly if there is any signs of optimism. That said, I looked at a bullish strategy because, the moves happen to the downside here. Certainly it can go lower. Not going to say it can't. That said, you're kind of selling into the hole here if you're looking to get bearish. So maybe the FOMO is a little bit of a bounce back here, normalization in Kohl's. And so looking at buying a call, not necessarily wanting to define any profitability here, because if something were to happen where Kohl's turns it around, perhaps maybe there's a lot of upside to be had. It's 10 call, January expiration, buying a little bit of time. It's fully in the money, so the extrinsic value is very, very limited. It almost acts as stock replacement in the sense of how it performs theoretically. I know there's differences between calls and stock shares. We go through this every time. Expiration date, dividends, voting rights, etc. But with this, it has defined risk, a little bit of capital efficiency, and for whatever reason, if Kohl's were just to plunge, go to $7, $8 a share. Once it gets through 10, that's max loss for this trade. So it does take $500 in risk, which is a sizable portion of the stock price of Kohl's, but has no upside profit definition. So this stock gets back to 20.
We might be here, Randy. This might be the spot.
It's true, and again, yeah, there's been a lot of negative commentary about Kohl's, but maybe they could see a fantastic demand this holiday season, and we could see things turn
Major
around.
support.
It's unfortunately been more of a long-term story of pain than just this earnings period, so I have a bit of skepticism. I agree with Al.
Intel of the clothing world.
It really is, and I mean, it doesn't help that you also have leadership that just keeps like leaving or being ousted. I mean, 3 CEOs, as Caroline said, in 3 years is not a vote of confidence as far as like your investments are concerned. But we'll leave it there for all of the Kohl's talk. Now, coming up next time to talk a bullish note from Citi on airlines, Delta, United, and American, why they actually see some upside in American after being easily the worst performer of the group on the year. We'll dive more into that note coming up next.
American Airlines are pumping it. $2.84. That's some new music.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on
I'm going to say they're going to start nipping on Elon soon. They've been kind of quiet about him. Kind of suspicious of that.
Tools, curated education insights, and trading specialists.
Hold on, here.
However complex the strategy.
Okay, I'm even here.
With a range of opportunities, you can trade brilliantly
That's up
with Schwab.
$50.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the airline space as we are coming up on actually what's expected to be the busiest travel days of the year. So we do have lots to look forward to as far as the airlines are concerned, and Citi also giving a more bullish take on the entire space. United, actually the leader of the group on the year, pacing for its best year on record, which is amazing. So joining us now to discuss more is Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab. So Jeff, I mean, what stood out to you about this note? I did note that they seemingly like American, which has been, I mean, the disappointment of the space.
Yeah, certainly something that investors for American are wanting to hear. As you pointed out, Citi seems pretty bullish on these U.S. carriers, Delta, United, and American, really citing some of the structural shifts toward the premium travel, which is what we're seeing a lot of these airlines kind of push towards. They also cited the strength in travel.
Okay, yeah. I mean, if this doesn't hold, get out.
Cards, loyalty programs, and some of the higher free cash flow numbers we've seen out of these companies. Citi says these trends.
We could double bottom down here.
And better earnings quality are creating a bigger moat around network airlines. Delta, United are still Citi's top picks, but as you pointed out, American Airlines, which has lagged, is getting some love as well. The analysts see the potential for them to grow without any additional infrastructure investment. They did say that some gains over discount airlines could be temporary as low-cost carriers adjust their capacity, but they think that the network carriers' post-pandemic market share improvements in earnings and revenue appear largely structural. In terms of the price target, Citigroup maintained a buy on Delta, raised their price target from 65 to 76 for United, kept the buy rating with the price target from $98 now at $122. And for American, they raised that price target from 16 to 19 and kept the buy rating as well.
Yeah, it looks like this is Stephen Trent over at Citigroup. In terms of the analyst that covers them, you mentioned Delta, you mentioned United, you mentioned American. Looks like they also like Alaska Air as well. When you look at this space, Jeff, I think it was Warren Buffett that, largely was pretty downbeat on investing in this space, just how it's so difficult to make money. Outside of, the Deltas and United, a company like American has really kind of proved that case. It's very indebted. And it doesn't seem to, really meaningfully perform for shareholders. At least it hasn't over the last few years. What are your kind of thoughts broadly as you kind of tie this into the note? And we know big holiday season and everything coming up. Usually that's a big time for these different companies.
Yeah, I mean, it's important to remember a lot of these airlines have shared the same headwinds, although they've all had their own specific stories. You mentioned American. I mean, this company has really lagged the group, and they admitted in May they overestimated the strength of domestic demand. They cut their profit outlook in 2024. But
278.
Kind of trying to turn around their customer base, looking for hiring customers like the rest of the group. They recently got some good news in Q3, beating earnings and revenue. Their guidance was raised for the full year. They saw a load factor that was a record number we haven't seen since 2013. So things are shaping up. If we look at headwinds, the reason these companies are trying to push for these higher margin revenue streams, you've got labor costs, you've got operating costs, the oil prices, regulation, labor, the ball, really been on top of the fact that they've had staffing issues and cancellations. And then, of course, there's this consolidation. That's why we're looking at these specific names. I mean, the top four airlines control about 80% of the U.S. market, and they've really been able to come back strong, erasing a lot of their debt because of the boom in travel we've seen since 2022. And, of course, we've got the holiday season coming up, which is, I think, going to be very important as investors kind of watch as that travel still as strong as they're hoping.
Yeah, especially because I feel like everything we've heard from these companies, I mean, despite like the overall divergence in performance between like your American, United, all of them said they expect a really strong holiday season. So I'm unfortunately going to the airport tomorrow. I'm hoping that it's not as bad as everyone's saying, just for my own personal investment, obviously, but we'll have to see. Obviously, this is going to be very critical for all three of these companies, but appreciate it. Jeff Pierce, contributor here on the network, and we'll leave it there for our airlines discussion. But coming up next, it's time to focus on under 30. We're talking Rivian today, as it did secure some more money from the government, and shares are actually up today about 2%. We'll discuss more of the latest with Rivian's all-over saga volatility coming up next.
Boom, boom, boom. Go, 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 go.
Power your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips.
Still in it, Randy.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Do-do-do-do.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
You breaking your rules? What'd you do, add-on?
Welcome back to Next Gen Investing. It's time for Under 30. Today we're looking at Rivian. Joining us now, George Tillis, Senior Markets Correspondent for the Schwab Network. George, this name needs some good news, and investors in it are hoping that you might have some for them.
Well, if you look at the news, actually, it was actually pretty compelling for Rivian. They did receive a $6.6 billion conditional loan guarantee to increase their production. And this is what they
From who?
desperately need, because
From the federal government. It sucks.
the guidance the company provided in terms of total production last quarter when they reported, and by the way, they reported back on the 7th of the month, and actually missed both on earnings and sales. Their total production for the quarter was about 13,000 vehicles, a little over that, with guidance between
That pisses me off, man.
52,000. So they seem to have been really stuck around the 50,000 vehicle production capacity limit.
That really pisses me off.
To achieve scalability. So if
Trump's going to put a stop to this. We don't have that kind of money to spend, especially on a startup. It's bullcrap.
and by
Well, it don't look like it's going to work.
This, essentially is a good start for Rivian to increase their production rate.
Okay, it's the last support.
For their business, but also get scalability. And they really need it, because if you just look at, price performance, the stock is down for the year. But if you look at the 3-year price performance, the stock is down close to 90% because they can't produce enough cars or trucks, SUVs. They do have the powertrain contract for those Amazon delivery vans, which again is quite large, but they essentially need to produce more vehicles because the last year, just the last 4 quarters, they actually lost $5.5 billion on only $4.4 billion in sales.
God.
So they're in desperate need of increasing production, but they were also in desperate need of financing deals outside of equity financing, which they've been using to essentially, run their operations.
It's a waste.
More production in line, which they are. But that's been costly for shareholders, and that's why every time you see some good news for Rivian, you can see some pretty meaningful moves higher in the short term. In the long term, or even in the intermediate term, the share issuances have been really suppressing price performance to the upside because they keep increasing the supply of shares.
So George, I do know we got some news yesterday that Tesla and Rivian had settled, I believe, outside of court proceedings with regards to the fact that Tesla had claimed that Rivian was poaching its employees. And usually I don't care too much about this, but I mean, could this have any impact? Because right now Rivian's also at a point where they are not at a place to be handling these lawsuits. I mean, I have to imagine this was at least perhaps a good thing that this case was settled outside of court and done with, because again, cash is a going concern for Rivian.
Well, that's a good question, actually. When it comes down to disputes over whether or not, you're poaching workers from other companies, at the end of the day, it's a free market.
If this doesn't hold, Randy, I'm going to get out.
So people have choices, whether it's illegal for them to solicit employees that are currently working for Tesla. I'm not a labor expert.
This has to hold right here. You're probably already out by now. I don't even want to listen to that. There it is. I'm wondering when they're going to start in on Elon. See, I don't think the government should pick and choose. That's called socialism. That ain't capitalism. Keep your defense contracts, but that's it. Don't be putting money in chips and shit like that. Let the private sector do it. It'll be so much better. I mean, $7 billion could house a lot of people for years. And get them crackheads off the street. They can keep doing their thing what they're doing with shares and raising money like they've been doing. I have no clue why the federal government got involved in this, unless the lobbyists from Volkswagen got involved. I want it to drop. I want to short it. I'm still in my Tesla here. But if it doesn't hold, I'm going to get out. $100 and some. There's a doji. Calm down, Jim. Don't get pissed off. The volume is just not, oh, okay. What'd you say, Carlox? 335? 350? Oh, no, what was it, 335? Yeah. Yeah, I'm still in. Oh, I'm not, I'm going to get out here. Hold on. We could drop more. I hear something? Hey, LJ. Your mic's on. How you doing? LJ Prevo. Your microphone's on unless you want to talk to me. How you doing? I can barely hear you. Huh? Very good.
Sorry, can you hear me?
I can hear you now. You were kind of muffled there earlier.
Can you hear me?
I can hear you good now. Yes.
Give me a second.
Yep.
Let me fix it.
$251. We're kind of coming back up. Blanket. There we go, Randy. Now break. We broke out of it. Oh, car company. $260 now. $262. All right, Randy, we're getting back. We got to break out of the box. Much better. Could get out now with a smaller loss, but I'm going to hold this thing. We got 1, 2, 3, 1, 2 bits. So we're in the sweet spot. Break it. Need the 9 to cross the 21, but we need to break this here clearance. Then it'll probably pop, pull back, and then boom. That or you get out of here at small loss. I'm almost even now. I don't know what's going on here, but this thing had 274. Oh. Man, that was starting to look good. That sucked. Should have got out. I listen sometimes to this Black Panther room on Twitter. I can only handle a few minutes of it, but I do kind of sit in every once in a while and listen to them. She's talking right now. Mr. Give me 350. Mr. MSTR. Oh, you called 350, didn't you? That's where my trend line is. Oh, I gotta watch my stock here. God. Down $150. 250. Mister, I was gonna save that. That's it. I screwed myself on that one. She can fall down a lot more. What would happen? Okay, they gave Elon such a hard time for buying Twitter. What happens when he goes to buy MSNBC? Are we going to go through that whole thing all over again? Or are they going to come to the understanding like nobody can stop Elon and finally understand how good he is? Because that would really be a parallel. Might have to just take a loss on this one. I'm still good for the day a lot, but I mean, I don't like doing it. It can drop still more. I mean, I said 1:15. I got 45 minutes. Think. Has to hold right here or I'm going to get out. It's 3. Then you got 4. Okay. 226. What the hell? Let's see what happens. I added on. And if it doesn't work for sure, because we're down here to double bottom.
the big name with TJX, and then they have Home Goods and several others. But Home Goods is expanding and doing very well as people are starting to spend some more money on some discretionary items for their home.
Right, understood. Yeah, TJ Maxx there. Amazon,
Double bottom.
About people wanting convenience. They want next day. They're paying for Prime. Prime is doing well. We think of
I got a
Amazon's
255
web services,
average.
right? I mean, Amazon's such a big play in so many ways, right?
Yeah, I mean, Amazon's not just a retail play, right? I mean, they're like you said, the servers and everything. Their advertising and their web services have done extremely well and are expanding on the cloud and everything. So that should continue to do well. Obviously, the Amazon Prime has 180 million members, and they're very, very strong. Like you said, people want their goods next day, and they're able to just, buy it, and they're just really happy to have it show up on their doorstep.
I'm gonna get out of these things.
With the TJX play, still some people still like to go in and browse and find a bargain. And that's what they're doing, at TJX in their stores. There's a big turnover in merchandise, and a lot of people like to go in there and, kind of search for an item that they've been looking for, and they can find a good value price at TJX.
Tell me a little bit about Whirlpool. That's a name you like. And when I spoke to the Pulte Homes executives, they were telling me how they use all Whirlpool appliances in the homes, in the model homes.
Yeah, I mean, I've been, I picked Whirlpool several months back when it was close to 100. It's now up to close to 120 right now. The stock has moved up. It's lagged behind the S&P big time over the last 5 years. Really hasn't moved at all. But they're still 50% off their highs back in 2021. So I think they should be doing pretty well.
Yeah, and it's you think about being a dividend player too, right?
Yeah, the stock right now is paying a dividend of 6%, which is very competitive in the market right now, and I think the market may do extremely well going forward.
I feel like you've come on and you've had a lot of bullishness. There was a time that you were worried, but then you sort of came out and really seemed much more positive, and we've had an incredible year and a lot of great returns. So now, are you taking that bullishness into 2025?
Yes, I think the market's going to do very well in 2025. Obviously, the market's looking favorable. We're getting this Trump bump, obviously. And I do think that the markets are going to return somewhere between 10 and 15% next year as well. I do think that we're going to start to see the market broaden, and we'll see some small and mid-cap stocks move up a little bit more than they have. But, AI is still the name of the game right now, and we're doing really well. And I continue to think that we're in the early stages of AI. And I think we're going to see stocks like NVIDIA and companies like Palantir move even higher.
Yeah, PLTR.
It's going to kind of catapult this market.
Dadgummit.
And right now, hopefully,
I've fucked up in this
we'll see what
trade.
happens with the new administration coming in. Hopefully they could,
What have I
move
got
the
this for?
economy, bring inflation down, and hopefully
Oh,
the
no.
stock market will stay pretty hot as well.
Yeah, understood. I mean, and you've picked Palantir and NVIDIA in the past over the times that you've been on, many times that you've been here at Schwab Network. When we think about Mag 7, I mean, Palantir's not in the Mag 7, but it's certainly been a great performer. NVIDIA has wowed Wall Street, hit new highs again. How about some of the other names? I mean, we just finished talking about Tesla maybe more favored in the Trump administration. Dory Wiley was saying versus maybe a Meta or a Google Alphabet. Do you look to these Mag 7 names and lean towards some more than others?
Well, I've been, as you know, over the last year, I've been very, very positive on Meta. I continue to be pretty positive on Meta. That's one of my favorite, Mag 7 stocks. But again, they all could do very well going forward. Tesla, you know, I've been a little bit more apprehensive on Tesla than in the past, but obviously Elon Musk has a good relationship with Donald Trump, and that may affect, you know,
Yep. I agree.
some regulations, and it may help Tesla in the future.
Yep.
So, you know, Tesla
100%.
has a long way to go probably in its growth as well. It's hard to know, which one's going to be the best stock, but I think all these are quality companies and will do extremely well moving forward.
Hey.
Yeah, you did mention the Santa Claus rally too, that you think will be coming.
Yeah,
Andrew,
there's a
great
lot
to
of
see
money.
you.
There's a lot of money still on the sidelines, believe it or not. I think there's still going to be a lot of money coming in at the end of the year, and I think that we're going to see the market rally as we head into 2025.
All right, Andrew Aaron, Synergy Advisory Management Group. Great to see you. Thank you so much. Coming up, we're going to break down President-elect Donald Trump's tariff plans, the impact could have on the market. Maybe good, maybe not so good. How so? Watch list. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade,
Yeah,
Schwab
that's
has
it.
cutting-edge tools, curated education,
I'm going to take a good loss on this one.
trading specialists ready to help, however complex the strategy.
There's my, I don't know why not put that up there, but
You can trade brilliantly.
wish I saw that earlier.
Cut the cord on the way you get market news. It's Market on Close.
I was going to keep on, I'm going to wait until that's triggered.
For the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a few stories here for you to pay attention to. We'll look at the Fed minutes in a moment. Kohl's fell to a 4-year low after its CEO, Tom Kingsbury, announced he'll step down. He said, we are not satisfied with our performance in the 2024 year, noting a sales decline in earnings. The company expects a 7% to 8% net sales decrease for fiscal year 2024. And Kingsbury says the company is taking aggressive action to reverse the downtrends. And the store Michael's CEO, Ashley Buchanan, will take that position on January 15th. And he then will go out of the CEO role. And
Yep, there's the VWAP.
there you have it. And then we take a look here at the Fed minutes. So the latest Fed meeting showing that officials see more rate cuts ahead, but only gradually, because some of the members said the Fed could pause its easing if inflation rises again. The 10-year is still sitting at 4.32, where it was pretty much at the top of the show. I would say the one notable move in the market overall is probably on the NASDAQ and here for tech stocks, because that has sold off in the last few minutes, if you look at a 1-minute chart. So as we get back here to the big picture, Trump detailing his plans on imposing tariffs and imported goods in particular, and how that could impact the market, what we need to know. Joining me now, Adrian Yamaki's with me, founder of Strategic Wealth Capital. Thank you for being here. So there's no doubt that tariffs are a part of the plan of the policies of the incoming administration. They've noted that. In fact, I heard some reports it will happen on day one. We started to hear about 25% on Mexico and Canada, 10% more on China. Some of your thoughts right out of the gate.
The tricky part for investors right now is to figure out there's a buffer between what Trump has stated on the campaign trail and even now what he's stated will happen before he takes office. That's one piece of it. The second is what he actually has the appetite to implement, because now that we're getting into who's going to approve the tariffs, who will it affect, it's much more complicated than on face value it might seem. For example, the U.S. imports huge amounts of commodities. We're the biggest importer of raw steel. So if we think about the U.S. manufacturers and how that will negatively affect their profit margins, and then if we go a bit further, how it's going to affect consumers, because at the end of the day, we pay the tariffs. Trump doesn't want to, he's very anti-inflationary, and he does care what markets move. So he's not going to implement, I don't think he's going to be as bombastic as he has stated in his campaign promises. And then the last part, which I think people forget, is what's actually going to be implemented, what Congress will pass.
Right, understood. I mean, some of this, we are seeing the automakers coming under pressure because they do have factories in Mexico, for example. And the idea here, announcing President-elect Trump that he would do 25% tariffs on Mexico and Canada, and that would almost be punitive or retaliation over the illegal border
It's coming back some.
that are happening here in the United States. So, you know, maybe it's tough talk, maybe.
Who threw this? Who was it? Does anyone know? Who was it? Anyone know? Don't throw shit at concerts, huh? Who threw this? Who was it? Does anyone know? Who was it? Anyone know? Don't throw shit at concerts, huh?
Good job, Zach. I got hit with a beer bottle one time. Split my head open.
Is threatening to apply actually come to fruition. And remember, both Mexico and Canada, I mean, they're...
And the guy that threw the bottle got his ass whipped. But I didn't have to say a word.
Kept by the Biden administration. The TCJA, for example, is likely to be extended. But is there an appetite for...
Man, right when I think I'm getting somewhere with this.
...taxes either for households or corporations? I mean, some of the conversations I've had today...
It's definitely not going to my par here.
From over 20% to 15%, let's say. Could that be in the picture, and would that be good news for investors?
Yeah, I think the Tax Cuts and Jobs Act, you know, if we look at Trump's immigration policy stances, tariff, and tax, the one that's most likely to be implemented is going to be the taxes. So the Tax Cuts and Jobs Act, which sunsets at the end of next year, 2026, is very, very likely to be extended. The SALT cap, as it stands now, which is the state deduction, tax deductions, is going to sunset, meaning it will go away. We don't know if that's going to have a cap or if it's going to be eliminated completely, but it's fairly reasonable to assume that there will be some relief from that, and that helps investors and that helps individual households. And the corporate tax, again, that's something, all of these programs cost a lot of money, and Republicans in Congress are very mindful of this imbalance and this spending. So again, I think we'll expect that the Tax Cuts and Jobs Act will be extended. This gives us more time for Roth conversions and other types of moving forward of income. But the bigger wall of the debt needing to be paid, I mean, it's going to be paid by people who are alive today, either distributing from 401k and deferred comp, or people who are going to have high earnings. So it's going to come from somewhere.
And overall, do you think people will feel good, feel happy, feel accomplished, feel like they're making money, feel like they have a job? Because so much of success is really contingent upon that sentiment.
Yes.
How do you think people will feel in 2025 or 2026? Because that's when he'll have a Congress that could support some of the policies. I don't know after that. So they've got to move quickly on some of their ideas. How do you think people will feel?
That's such a great question.
Depends if you're a liberal or conservative, I guess.
In the last few weeks since the election, just
one party doesn't care about jobs, and the other party does. So she asked a question about jobs. That the ones that are wanting jobs are going to feel good, but then the other half, more worried about pronouns that don't work. That are getting paid to protest. It just doesn't want to do it. Right when I think it's getting ready to.
They're facing higher costs, they may pass on some of those costs to the consumer. And that wouldn't necessarily make sense.
If I get $2.55 out of this, I'm lucky.
It's more expensive, I get that. And you did notice about certain industries that will be more affected, heavily affected, based on immigration or deportation.
Randy, you were right about the VWAP.
I think you mentioned hospitality was in there. There are a few sectors that are front and center for you. I don't know if you're worried. Are you worried, or you just want to see what happens?
So if Trump were to implement what he stated he would for mass deportations, and this is why I don't actually think this will happen, it would have pretty negative, I mean, severely negative consequences on the economy.
No, it would not.
I mean, 13.7% of this construction industry is powered by illegal labor.
Oh, really? Are you so illegal labor, huh? So you're counting in the criminal element on your figures? Illegal. I don't think you know what you're talking about, honey.
Our costs, it's pretty broad. So it's going to affect those businesses. They're going to need to pay more for their labor, and all of these costs will be passed on to us.
Oh.
Like
it's not passed on to us all right now with the hundreds of billions that we've spent on them already for lodging, healthcare. Probably a third of them can't even work. They're either too old or can't speak English.
And I think that's the important thing is is how are people perceiving what is going on? Are they actually
Now you're talking.
seeing what is in reality happening economically, or do they just feel as they're making this?
I can't take it anymore. I really can't live in this country much longer. I have too high of a standard of morals. I got to be away from all this illegal crap. And that's going to probably be on an island. Buy me an island.
Ratings will be, and many Democrats in this survey less so. This survey did find improvement in the big picture when you put everybody together, so that certainly makes folks feel better. But there was still that disconnect by, it's not bipartisan. I mean, you see like the Democrats are feeling one way and the Republicans are feeling another. But we will see. Adrienne Yamaki, great to chat with you about all of this.
Good to see you.
Still ahead, Technical Tuesday. Ben Watson is standing by, and he'll tell us the key trends to watch. S&P 500, which just hit a high recently. Disney, Vail, he's all over it. We'll be right back.
We got an ascending triangle.
Every morning, every trade, always live.
We still might have a chance.
Analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. It's time for Technical Tuesday. We have stocks and trends and what you should be watching in the charts. Ben Watson is here, Senior Manager Education at Charles Schwab. Good to see you, Ben Watson. Thank you for doing this. I appreciate it because I know you're a pro on these charts, and we've been watching the S&P 500, and it's been hitting new highs. Yesterday hit a new high, 60.20. Right? And so now what? What are we watching for here?
Well, I'll tell you what, Nicole, you're absolutely right. This has been trending higher. We've been watching this kind of rock solid 200 period simple moving average moving in that kind of almost 45-degree angle to the upside here, but running perhaps a little bit of resistance today. We saw a little bit of a push yesterday. Now, today on a gap-up rally, banging its head right now around that 60-12 mark, maybe back up towards that 60-20. So this kind of becomes an area of demarcation, right? The Rubicon for the market to cross here becomes that 60-20 mark, which would potentially put it en route to get to maybe a symmetrical target around that 6,200 level, which is symmetrical off of this support level that we saw about that 5870 level about a week or so ago. Now, the other side of the coin is, if we get a bounce down from this resistance, this could be the beginning of potentially a double top, although the momentum and sentiment indicators that we're looking at aren't necessarily suggesting that. RSI still moving higher. You see maybe momentum kind of squeezing a little bit as this gets towards that top, but it's still positive. We've got positive momentum, we've got positive sentiment, and it's banging its head on a resistance level, which is the potential for a breakout. But at the same time, holiday shortened week, we could see it pull back and retest again, Nicole.
All right, so thank you for that. Folks are, I guess, we talked a little bit about a Santa Claus rally a moment ago. People are always love to see highs for their 401ks and IRAs, but certainly got to watch all those levels. What about Disney, a name that you often talk about? And this one's on your list today. Very curious to see why.
Yeah, I'll tell you, this has been a very interesting reversal move off of those August lows. A gentle climb to begin with following this last earnings announcement. Just about almost a month ago, we see a big kind of booming move to the upside and some follow through, which has been relatively unusual for this name. Now, from a technical analysis standpoint, it's squeezed into a little bit of a symmetrical triangle. 3 days ago, we saw a breakout of that symmetrical triangle running back towards this 117 resistance, which, if you go back to the left, was really kind of a resistance level double tested back in the early portion of this year, running back towards it. Now, a bit of a pause today. We're seeing momentum falling off in that MACD just a little bit. Boy, I'll tell you what's staying solid is the sentiment indicator, the RSI, that relative strength index, staying up in that overbought range, not getting overcooked or to an extreme, and still seeing some movement today. But there is a little bit of a test, a little bit of price discovery with those long shadows or wicks on these candles the last 2 or 3 days, which may suggest buyers are trying to feel out where there is this resistance. Is it at that 117? If it breaks out, you've got to run perhaps quickly to the peak there at that 124, 125 area, Nicole.
All right, and last but not least, another fun place, a destination resort, and that would be Vail Resorts, MTN for Mountain. Some of your thoughts on that chart, please, Ben.
I'll tell you what, this has been downward like a ski slope for some time. I mean, the majority of the year, we've seen that 200 period moving average, kind of a gentle bunny slope to the downside. Although, on the other hand, off of the early November lows, we see a pretty quick rebound, not quite breaking out of that 200 period moving average. In fact, touching it on a shooting star blow off yesterday, kind of touching up to that 191 mark at the 200 period moving average, bouncing back down. So this could be an evening star, bringing this little short intermediate term uptrend to an end. Doesn't necessarily.
That's a shooting star right there.
The next challenge becomes, again, that 190, 191 area.
See that shooting star here?
Positive momentum, the MACD.
Shooting star here.
Also moving higher. If they can get through
shooting star
issues, they've got some Thanksgiving opening dates that are already in the books. It looks to be weather-wise a good year. That could speak well to their earnings, which is just a little over the horizon here, Nicole.
All right, Ben Watson, it's great to see you. I'm glad you were able to join us.
Still in them.
Tuesday, where we got to see the S&P 500 and Disney and also Vail Resorts. Ben, thank you for that. Any final quick thought, big picture, anything on your mind ahead of Thanksgiving?
You know what? Travel safe and have a wonderful and hopefully very filling Thanksgiving, Nicole.
You as well. Ben Watson, thank you so much. Senior Manager, Education, Charles Schwab. Thank you. Still ahead, we'll bring in our panel and talk all about those Best Buy earnings. Hot or not? Are folks waiting for Black Friday and Cyber Monday? We'll be right back.
sucks. I think I'm gonna end up taking a loss on
What's up,
this.
All Nation? It's your number one
Fucker was
broker
almost
with best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
This is a trippy man.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Right now I'm down 450.
I'm Nicole Perkins, host of Trading 360 and the Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
It's an ascending triangle down at the bottom, which is bullish. That's why I'm staying in it. Right out of a snake. We're in a snake. And we just now finally broke out of it. I'm ready for a nap.
Managing Director Equity Research at Wedbush Securities, and Sean Dunlop, Equity Analyst over at Morningstar.
Watch this sucker go away all the way back up here to 41.
There was a time where people would walk around in Best Buy and sort of shop there, get ideas, and then go on the internet and buy things. Then I felt like that.
Who does that, Nicole?
At this point now, maybe people are
It's kind of sneaky.
wait for the best value because they want to make some big purchases. Maybe they're waiting on Black Friday.
We know how you shop now.
What are some of the takeaways? What stood out to you, Seth?
Sure. One of the big takeaways is that consumers are.
You didn't like that, did you?
Events much more. So between those events, sales are down around the events, like Black Friday, like back to school. We're seeing stronger results out of the company's sales. So that's one key trend. The second key trend is laptops. We're seeing strength in laptop sales as the replacement cycle builds. But outside of that, most other categories are seeing declines in sales right now. So consumers are really value-oriented, only buying innovation or buying on deep promotion.
Wow.
Are you surprised to see that the other categories showed weakness, Seth?
Not very surprised, to tell you the truth. Now, the level of decline did improve in certain areas, such as mobile phones, which is encouraging. We're still seeing severe pressure in areas such as appliances, and TVs are weak as well. So it's really emblematic of that consumer that's feeling discretionary spending pressure and is really shopping only for needs or shopping on a discretionary basis when they see something they really want and they're saving up for it.
Right. What are some of your thoughts here, Sean, as you take a look? We look at same-store sales. We were just talking about some areas that showed more strength versus weakness. What stood out to you?
Yeah, it was a really interesting quarter. I mean, we have this environment where consumption spending was up nearly 4% in Q3, but you've got a really big divergence based on what you sell and at what price point. So for a company like Best Buy, we saw appliances down nearly 20%. We saw some of the higher ticket items, a lot slower sales growth. As Seth alluded to, we saw 7% uptick in laptop sales year over year. That's certainly a point that's encouraging. But in general, consumers have grown really discriminating, and they're looking for value, and they're waiting for promotions, and they're doing that by and large across the board. Now, Best Buy's been really well managed through a period like this. They've managed to stymie the bleeding on the margin line, even as they've underperformed in terms of sales. It will be interesting to see how long they're able to keep that up, and the extent to which sales pressure bleeds into the year to come.
Yeah. I mean, is it concerning to you that Best Buy sees same-store sales falling now for the 12th consecutive quarter? I mean, when does it get good? When does it get great? Seth?
Yeah, it certainly is a bit concerning. It's a volatile spending environment we're seeing. Quarter to date for the fourth quarter for the company, they actually are seeing positive 5% comps, but they're expecting the remainder of the quarter to be soft and end down for the full quarter. So as we look to 2025, I think there are some green shoots, laptops being one. Other categories that were big categories during the pandemic are going to need to be replaced. And if we see interest rates come down or the housing market improve, consumer confidence continue to improve, we very well could see comparable store sales turn positive overall for the company in 2025. So not all is lost right now.
Yeah, one concern too, folks, is that they do have operations in Mexico, and they could be subject to some of the tariffs that are put on. Does that make things even more expensive when people are busy looking for values and bargains and special holiday shopping deals? Does this affect how people may shop there? I mean, that is sort of a concern. Sean?
Yeah, it's a really interesting question, and that was something that I certainly wonder if the market was reacting to from the earnings call. I mean, obviously earlier this morning we had the president-elect come out and talk about some of the tariff plans for his administration in 2025 and beyond. Corey Berry came out and said on the call that 60% of Best Buy's cost of sales come from China, and that the next biggest importer is Mexico. So there's certainly an interesting dynamic to monitor. It's practically impossible to measure, given that we don't know what exemptions would look like, what the pace of rollouts would look like, who within the supply chain would bear the cost. But I think it's fair to see that as pointing toward potentially higher prices for consumers, pointing to potentially margin degradation for manufacturers and for retailers like Best Buy moving into the new year. So lots to keep an eye on. Certainly some downside risks as well. Although, as Seth alluded to, there is a world where we generate positive comparable store sales growth in calendar 2025.
Over at Wedbush, neutral rating, 12-month price target $95, not much higher than where we are here. Seth, you said the weak sales were offset by solid margins, and they have to keep those margins. Can they do that?
It's going to be tough to keep those margins if they can't turn comparable store sales positive. So it's only so long that you can outrun negative comps and maintain your margin rate. There are only so many costs that you can cut in a pretty high fixed cost model. So we need to see the comps turn positive for the margins to expand in 2025.
Yeah, understood. So you have neutral and a $95 target. Sean, where do you think this stock could be headed?
Yeah, we've got neutral to $94 targets. It sounds like we align with Scott on a lot of this stuff. Agreed. You can't have declining comps forever and defend margin. They've done everything that they can from an operating and managerial perspective. We'll be interested to see how this progresses over the next couple of quarters.
Yeah, good to see you both. Sean Dunlop of Morningstar, Seth Basham at Wedbush Securities. Thank you, Seth and Sean. Good to see you both. That's going to do it for us here on the watch list. I'm Nicole Pedalides. Thanks for being with me. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Keep it right here. Market on Close is next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Somebody got into my account.
Binge watch the market with Schwab Network. Tune in 24 hours a day.
From Springfield, MA.
SchwabNetwork.com.
Tuesday, November 26th at 1:42. 16 minutes ago.
Anytime, anywhere, on any device.
I switched my password.
No place better than the
I don't know how they did it, but they did it.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
Okay, we need to break to 63.
Trade desk. Our team of
I might come out a winner on this.
And sharpen your skills with immersive.
God, I can't believe it.
Crafted just for traders. Also, you can trade brilliantly.
No. I've lowered my average down quite a bit.
Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. We've got stocks for the most part up, with the Russell down, giving some back today. It's been a little bit of a sleepy session, pretty much within most of the ranges that we were at earlier this morning around the open, but a few things that are notable, some stock-specific stories, a couple sector stories, and just kind of monitoring some of the more unwind of a few of the big trades in the last couple weeks. A little bit of action on bonds, but yesterday was a bigger move. A little bit of action in the dollar.
It's either this one or this one.
We are kind of getting a little bit of that macro policy.
It should be a little above even here.
Back and forth. But generally this week, the move has been most notable for yields down, a dollar up 20 bips today. Not a big flip back. And the 10-year futures down.
Market's flat.
18 bips, so yields not up a ton. Not a big reversal there either. So the takeaway from the weekend into this week so far has been the shift in the bond market, shifting the dollar. So there's that. Then there's other stuff like the big Russell breakout, giving a little bit back. Maybe some expected technical give back. Small caps have been wrangling with that all-time high level for so long that maybe a little pushback after breaking out and putting a new one makes some sense. Really, there's not a lot of clear, powerful narrative right now. We do have economic data, but it was kind of skewed by some hurricane stuff earlier this morning with new home sales, a big drop there.
224.
To sales dropping substantially. And so we did get a little movement in the home builders. That's one of my movers of the day, ITB, which has been down, but again, kind of muted action. ITB lower by 2.25%. That's not a lot.
They sell it now, but we're above the 63, which this can easily drop. I mean, this is the way it's been all the way up through here. I've been stuck in this thing. I'm down 300 right now. Should have bought more at 2 and I'd be about even.
Strategy, same story. Seemed like as soon as we got all of the hype talk and some well-known pundits that maybe are inverse indicators started talking about some crypto stuff. I won't name names, but kind of aligned with the top. MicroStrategy at 350 right now. Probably some support you would think around this level. You can kind of see the gappiness to the upside. The other one basically being at 275 to 300. Anyone's guess when the kind of madness will end or if it ever will. But it's one of the most interesting things to watch, no question about it. So, especially on kind of a sleepier day, MicroStrategy giving some back and Bitcoin doing the same is starting to register a little bit. You're not going to hear the end of it if Bitcoin ends up turning around without breaking its long-term bearish divergence. I will be insufferable, so let's hope that doesn't happen. Because I don't want to have to come out and get all super negative BTC, but for all of this massive run-up, we still got to a momentum indicator lower than the ETFs. So for a high momentum asset, that's kind of surprising. BTC just below 92 right now. I mentioned the bond situation, giving back 20 bips. Not a big deal here, as we are going to get an auction as well. We got the 5-year too, so it's just not a lot of fresh catalysts for bonds unless you want to speculate on the policy front, but that's kind of anyone's guess. So the yield curve's been getting pinched.
They're still expensive.
Flattening. That was my baseline indication for the last 2 weeks of what to look for in bonds. Yesterday on Risk Radar, changed the red life for bonds to
225. Come on, baby, break.
A deal of push back and forth that might happen here as the Fed probably doesn't need to cut in December. But again, that's where we'll update the thesis tomorrow with fresh economic data.
That's a good call off the VWAP.
Also, BTAL, the anti-beta fund, which is up today. That's pretty much where you go. Exactly what it sounds like if you don't want to trade high beta. Of course, that's been a losing strategy for months. But it's something to watch because BTAL has done a really good job showing when some of the euphoria fades a little. If you think basically for the first kind of half of the year, there was actually a decent performance, and then when markets got hit, BTAL actually did really well and was outperforming the S&P at some point. But as things have gotten really melty and risk has turned into like animal spirit style speculative action, this fund has underperformed, given that it shorts the long beta stuff. So seeing it perk up a little bit today after getting blasted the last 3 days. Again, just kind of something to think about in terms of the kind of chop we're getting after a big move coming into this week. I got Jenny Horn with me here in studio to kick things off. Let's talk some chips. Jenny, semiconductors have been somewhat lackluster. NVIDIA too, by the way, just slipping back down from earnings. Today, kind of the most interesting news that was coming from the government and kind of solidifying who's going to get help, who's not.
So who's going to get help is who objectively needs it the most, which is Intel, which is, I mean, we need to get some news. The Biden administration announced the Commerce Department has awarded $7.86 billion through the CHIPS Act. Now, these facilities are going to fundamentally, they said, change the way that we manufacture as well as the strength of the chip industry here in the U.S. But I do think well, they mentioned it's a huge step forward. It is less than what had been expected. So along with the funding, Intel now is not able to conduct any stock buybacks for 5 years with some undisclosed exceptions. The company it is reasonable, and they had already paused their buybacks. So frankly, that shouldn't be a huge concern. Intel did say that they're prioritizing their reinvestment in their business rather than stock repurchases. I also think good commentary to add there. But initially, we had expected closer to around $11 billion in those federal loans to Intel. The agreement was non-binding and subject to, of course, diligence and milestones. So
federal loans.
Figure, I was reading.
I'm so fed up with these.
That said that maybe they were getting less because of their business practices.
You're giving failing companies loans. That makes no sense. Government, you're in our way. Can't you understand it? The government cost me $1,100 more a month to run my business in 4 years.
The CHIPS Act, but Intel
The biggest increase I've seen ever.
Because they already have all these developments in Arizona, I think that that's seen as a win. But these are all more long-term stories. What gets Intel out of this pain right now? I'm not this.
Yeah. You know, the stock isn't responding. Also, Rivian didn't rally earlier, too, and they were the recipient of some government lending as well, some favorable action. Okay, Rivian's now up, but yeah, it's not an obvious panacea and for the shareholders. It more seems kind of a mission that, like, they're sort of really limping along right now.
Well,
limping is the word.
Even Intel CEO had said that they were expecting to receive these cash reward.
They're not even building many cars. I mean, no comparison to, if you're going to loan money, give it to Elon. He'll get them cars put out a lot cheaper than what these Rivians are.
Long time to move.
Boy. We will find out with time
China.
if this was money well spent or not.
No kidding.
But it seems like there's a distinct chance it may not be, and otherwise you would think the stock would be up. If the government gives
AVGO is down.
$8 billion, and it's
That's that one that ran all the way up, didn't it, Mike? AVGO had that big run. Oh, they already took it off. Well, it looks to me like I'm going to have to. I should have got out at 227. What was I going to look up? Can't remember what I was going to look up now. What was I going to look up? Well, traders have short attention spans. This one does. What was I going to look up? Oh, AVGO. Apple creeped up on us. Chipotle got a new high today. I mean CCL. Where's CMG? Did it not come on? What'd I do? We've got CrowdStrike earnings tonight. Or is that tomorrow night? Tonight. It's had a pretty good run, too. I don't think I'd buy it here. I'd wait for a knife. It's had too good of a run. It's up $130 in 3 months. Starbucks employee system down after software provider suffers ransom. Oh, that ain't going to be good for Starbucks. Locations are reportedly calculating employees' pay and hours worked by hand after a ransomware attack on the third-party software provider disrupted how the coffee shop's employees view and manage their schedules. I think we're getting too technical in life. We need to make things a little bit more simple again. I've had so much stuff break on me this year. I just don't want to buy no more. This has been the worst year of my life when it comes to breaking stuff. Combined. And I don't hardly break anything. Yeah, I'd say this has already had its bounce. It's 215. Double top on the SPX.
I just see no chance of that happening.
All right. We might
might as well go there. And I love the way you like to dance. I love to dance with you, Peter. So let's go a little sidestep here. What's your take on the crypto stuff this time around, in particular MicroStrategy?
You know, every serious economist that I talk to so far, I can't find anyone who really thinks that this is something the Federal Reserve, who is running it, or the U.S. government running a deficit, should be buying crypto. I've seen all the things. Well, if we just buy crypto now, it goes to $1 million. That's great, but there's no guarantee of that. I think there's been a huge, lack of a better word, pump and dump effort, really putting it in. I'm not sure I would fight this move higher because there is the potential. You do see a lot of, people in and around Trump's orbit who are crypto people who will try and push for this. I think ultimately they're going to be disappointed. And also, if you take a step back, right, if all of this is about understanding how Trump thinks, Trump likes to be in charge. I don't think he feels or will feel that he's in charge of crypto once he gets there. And I also think as he gets read in more and more on national security issues, he'll be less enthusiastic about crypto. So I think that's where the disappointment's going to come from.
I think that's a very interesting take, especially because you guys at Academy, you're surrounded by military folks, ex and current, and that kind of mindset of control I think is really interesting, because what I was thinking about was kind of his personality, the way he kind of judges things based on how good they perform, which I mean is a fair way to view the world. And so right now the price has been going up a lot, and I feel like he's probably asking people, hey, what's it at? What's it at? And he's probably finding associated when it's going up. But if it goes down, he might just go, I don't like to be part of a losing game.
Right, I could easily see that. And again, I think he likes where he's in control of an asset. We've now been up, he was clearly a big part of the impetus going higher. I don't know what he's done to make it go down 8 or 9% in the past week from almost 100,000. So yeah, I suspect his love affair with it ends a little bit, both on a personal level because it doesn't fit his sort of style. But I think he, like you say, he likes to control. He likes to be behind the story. And I think he's also going to realize maybe from a national security perspective, some of this isn't as good. Again, who knows how much was donated. I think there's going to be a lot behind the scenes. I just feel that the crypto market has really set itself up for disappointment as this administration takes shape.
What?
Anything that you watch on the chart that would suggest when it's unwinding, or anything with MicroStrategy that becomes a tail-wagging dog risk?
I've been on the road for the last 2 weeks, seeing a lot of clients. I haven't dug into some of my favorite things, but I am fascinated by the single stock leverage ETFs. I have no idea why we approved those. I think we've talked about them before. They are path dependent, so over time, investors will underperform an outright investment in that if their own leverage. If you can margin, if you want to buy MSTR and margin, go ahead and do that. I think those leverage ETFs, there's a huge path dependency because every day to rebalance, they effectively sell high, buy low. So far, no one's cared about that. I think that's just going to add so much volatility.
You better take a loss on these.
The upside, and I think we're starting to see the potential for that to really hurt to the downside. And, we've seen some of that in NVIDIA, but I think MSTR is going to be that on steroids.
I think I'm out of luck.
Hey, when you do talk with clients, tell me about generally the discussion for 2020.
Matter if I get real lucky here.
Guessing the policy game, is it that much of a driving force? Is it more the Fed combo? We've hit a few things here. What do you think ultimately drives the bus?
Yeah, one of the things I've been most excited about, and you've probably seen this in your own conversations, but, I've traveled across the country, all sorts of, clients, and I would say there's some areas where people are a little bit upset or despondent about a Trump victory, some where people are almost giddy about a Trump victory, but as a whole,
I'm giddy about it.
What are they supposed to do for their corporation? What are they supposed to do in their investment portfolio? I feel like a lot of the really nasty rhetoric's disappeared. There's a real rational thought. There's a lot of give and take, and I think people are hopeful about two things. A, can we reevaluate some of the rules we impose on ourselves when we're, the sole superpower now that we're an economic threat with China? So where can we drill? What can we do? And I also think everyone, no matter who you voted for, is a bit curious to see how
Who is this guy?
Plays out. I think we're all kind of like, okay, could this work? I don't know that anyone's committed to that, but that does feel like one area everyone's like hopeful. Hey, maybe we do find hundreds of billions of dollars of wasted money that would help us along with impacting things.
Do you think we could lay off
what the hell?
1 million people and the private market absorb that workforce, Peter?
Maybe. We just spent $5.6 billion on a failed company. Maybe the whole Green Deal was a scam. Maybe we wouldn't have this inflation if they didn't go and spend $7 trillion right in the middle first of the day. Maybe if our borders were closed, we'd have more money in the bank. There's a lot of wasted money out there. That's just a little bit of it, my friend. Maybe if we had Trump in there, there'd have been no wars and we could have saved hundreds of billions of dollars. Maybe.
Strategy at Academy Securities, and he left us on a nice transition to talk restaurant stocks next. If we do get some more activity in the office, what are folks gonna eat for lunch? I've been struggling with that here since they shut down our Amazon store, but our next guest has got some solid trades for you in restaurants.
Is a Cheesecake Factory a restaurant? I thought it was a factory. Restaurant and bakery.
Download the Schwab Network
Whoa.
app and join in on
God.
the latest market trends. Anytime,
How dare you.
anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
CTORY.
Those for it.
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Consumers been looking pretty good. Let's talk some restaurants, though, as it has become a competitive space. Nick Setyan joins us from Wagbush, Managing Director of Equity Research. Nick, a few of the stocks we're going to talk today are doing great, and the other two are doing horrible. What right now is kind of the distinguishing factor of a successful sit-down restaurant business?
You know, since the start of the year, it's been relative value offer, and that continues to be the main driver of transactions. We've seen, Chili's win with the 3 for Me at $10.99. Comps that are in the double-digit range. Applebee's has finally answered with their own, value offer at a $9.99, price point. So that's really the direction we're still heading in.
Obviously, Kava has been a major highlight. Shares of 250%, and that's in the year-to-date. Chipotle's up 40% during that time, so it doesn't seem like they're totally taking over their marketplace. I guess the kind of hot thing, though,
right back.
is
Got
this
stretch.
company as a stock. Is this the hot restaurant company still?
As long as the fundamentals continue to outperform, I think the stock is going to work. So you have 30% plus EBITDA growth. But probably are some conservative estimates for the out years. And so, given 10% plus type of transaction growth, 30% plus annual EBITDA growth rates, there's really a dearth of other options if you're a growth investor. So I do think it's going to continue to work.
Pretty amazing. Valuation-wise, what's tolerable? Do you have to take the valuations and normalize by that growth rate to see something decent? Does it otherwise look like it's like a software stock inside of a food trade?
Yeah, it's definitely the most expensive, company-owned model out there. And certainly when you think about, Chipotle at its current size commanding something like 30 times EBITDA, paying something like 90 to 100 times for Kava at a very, very early stage of growth, again, particularly given the relative growth rates, I don't think it's that out of the ordinary, particularly if you're a growth investor and you're used to looking at those types of multiples.
Pretty amazing stuff, what it's been able to command in the marketplace right now. Kava, the growth trajectory, should they use this as a mandate to just open as many new stores as possible right now?
Absolutely, and I do think that the governing factor is going to be rating managers, right? So that's probably the toughest task for any growth restaurant, is to make sure you have the right talent in place for these new openings, and they're doing a great job of making sure that they can promote from within as much as they can. But that's really the governing factor.
Okay. A few that are underperforming in your coverage. Jack in the Box is down over the last year. DIN, Dying Brands, down quite a bit in the last 2 years. It seems like you've got hope for these to recover. Jack in the Box first, real quick though. I mean, in the world of like fast casual and healthier stuff, it does kind of feel like a bit of an outdated brand, or how do they keep up?
Jack in the Box's problems are that it's mainly California, right? So QSR, fast act.
No, I haven't tried Kava yet. We don't have one around here.
The margin impact that,
I sure would, though. If I'm ever in a city that has one, I will. I'm still in Tesla. I'm gonna see if I can get it back up,
concepts have all underperformed,
but I'll probably have to get out.
Versus some of the other categories like fast casual and full service. And so Jack in the Box is bearing the brunt of that. That continues through April 1, and hopefully as we anniversary that,
I was down 250. I should have sold it.
And obviously the pricing will come down as well. But it really is a fast act casualty. The most direct fast act casualty is Jack in the Box in the restaurant space, and hopefully as we anniversary that next year, the stock will perform better.
Okay. Dying Brands, Fuzzy's Tacos gonna save them, or is it gonna be Applebee's and IHOP?
Dying Brands is primarily franchise, so 100% of those locations are franchise. So they were a little bit behind the company-owned models, mainly Chili's, in how aggressive they could be on value, right? So you basically have to get all the franchisees on board for any offer you have. Well, they're finally in the game with this $9.99 burger and chicken sandwich. It really is as good of in terms of size and quality as the Chili's, the three for me. So at a $1 lower price point, and they're going to revamp the value offering early next year in such a way where you both have price certainty and some compelling products at those prices. So I actually think especially given the very easy compares next year, going over this year's bad year with the incremental value both at IHOP and on Applebee's, Dine is well positioned, and they generate a ton of cash flow. So they have refinancing in the middle of the year, which has precluded them from buying back a lot of stock at these cheap valuations. And once they get that refinancing out of the way in the second half of next year, I think they're going to be able to buy a ton of stock.
All right. Like that.
Well.
Case here. Okay. Not to be forgotten. IHOP, Applebee's, maybe some Jack in the Box comeback story too. Making me long for California.
What happened there? Pause.
Position. Be right back. S&P's picking up a little of the pace.
Trading at Schwab is powered by Ameritrade.
Oh, there it
bringing
is.
you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
S&P is now about 28 points, maybe 29. Highs of the day. Shane Skinner joined us, manager of trader services at Charles Schwab. To look at some of the levels here to keep an eye on, Shane. So we're getting a nice kind of like grind here to the upside. Make sure you got that mute off. Think. Slam that button, maybe.
Terrible at that. Apologies. Yeah, just a slow, steady churn upwards today. Fairly uneventful. No real crazy movements. That opening range, first 30 to 60 minutes of the day, moved around quite a bit for, to the downside. It caught some support early on. And
yeah,
just been, like you said, sideways and up, right, or upwards and to the right.
There ain't no sideways about it.
Bulls have to be happy with the action they're seeing.
Given that we're at all-time highs, is there any obvious levels, resistance from a technical perspective? Or are you going with like big dealer positionings? Where are the strikes to the upside that are getting active?
Yeah. So I took a look at basically every expiration in SPX from now until the end of the year. And the December 20 expiration on SPX, as well as the VIX 18, the monthlies, right? Just overwhelmingly more open interest and activity going on there than anywhere else. Just some quick numbers, for example. These are today's S&P levels. Expect that 60-15 to 60-20 level to the upside to probably be our max. We might settle back down to 60-10 to 6,000 maybe, but it seems like we're nestled in a pretty comfortable spot. Put to call ratio and volume on the day has not been, it's been very well balanced. It's basically been 1. So you're seeing a healthy appetite on both sides of the market. Those are the days that we typically see sideways and, like we said, up. So no surprise on that.
6K kind of seems
like. I see what he done.
It's no longer a threat.
That's a good idea.
So
I remember
if you
that.
look at the SPX monthly chart, 6,000 is basically the level. Like there is a massive amount of positioning in SPX calls and puts simultaneously, fairly even too, almost as if there might be a straddle of some sort going on there. And so if we take a look at this chart right here, this is the call open interest for now. Yeah, from now until the end of the year, all SPX, okay? These squares, different colors or different expirations. The only reason why I plotted so many and put this up here was because look at those pink levels. I mean, they take up the whole chart. It's like nothing else is really being traded in terms of the amount of open interest relative to these monthly contracts. So, we talk about and emphasize how much the front month matters or the front expiration can matters in these situations when looking at gamma, especially notionally. But, something as far as December 20th from now,
with positioning this big, it's having an effect. And so these blue levels are 4,000 and 5,000 respectively, and you're seeing a similar setup, just sort of flipped on the put side at 4,000 and 5,000. And then the next biggest level is where this green arrow is at 6,000. So it seems like what we might have going on is some kind of a potential collar of some sort, maybe going on down here at 4,000 to 5,000. And then 6,000 is basically the next big level going into December's monthly expiration. So between now and then, expect 6,000 to probably be a very strong level that we seem to stick around. I'm not saying we can't break from it and go lower or higher, but at the same time, the amount of positioning in this stuff right now, the notional gamma at that 6,000 level now is greater for that expiration than any of the other expirations between now and then. So you're talking
incentive by
billions.
dealers and big institutions to keep it there.
Yep. And if you notice too, looking out, it's basically 6,000 is the level, and then you go 50 up or 50 down, and then another 50 up or 50 down in terms of how much gamma is out there to the upside and the downside. And I'm with you. I do see, from what I can tell, the put call ratio in these isn't too skewed to the put side. We're at about 1.5 on the open interest right now is the ratio, and about 1.84 on the volume. So it does seem like puts are trading a little more than calls. That doesn't necessarily mean you're going to go to the downside. What's interesting though is when you tie in VIX and VIX monthly expiration and what we're seeing there. VIX has been relatively quiet. It's been, subdued, if you will, for the past couple of weeks, essentially since post-election, right? And we're kind of seeing a drop-off here in the monthly position to the downside in the puts. It doesn't seem like anybody wants to really go much lower than 13, where that max put open interest is. And basically, it's non-existent below that. So, to me, if no one's willing to continue to take that put side of the market, and we continue to see all this call side build up here to the top side, I mean, VIX might be something worth paying attention to here in the next month. The max pain level sits at 17.5 when you're trading near 14 right now. It's not a small move from 14 to 17, and then the closer you get to 20, the harder it likes to touch. So definitely something to watch, the VIX monthly and the SPX monthly as we go into this month, given how much money is on the line.
Nice, good stuff. Like that perspective. A couple big areas there for S&Ps and VIX that overlap. All right, love it. Give me a thought on CrowdStrike. We do have earnings coming up. I know you're looking at some of the options trading there. It's been quite a comeback story. 60 seconds, go, Shane.
Yeah, key focus is the 350 max pain level. That's where we see, again, the most amount of long option holders experience pain.
Randy, you in a losing trade?
Both sides, puts in calls, and sort of seems to be the sweet spot sometimes for the dealers to hedge. So 350, keep an eye on for the downside. If that were to give, it's a mixed bag from there. 325 to 330 seems to be sort of the sweet spot. 330 also aligning with the downward move on the market maker move. Toss right now. If you're looking upside, you're going to try to get
proof burritos.
360, 370. If that can break, that max call open interest up at 400 is huge, and going into today, that's the largest volume as well. So the question is, did people continue to pile on long options, short options? What if the people creating the volume
Don't leave, Randy.
doing today? And depending on that, we could see another situation like Qualcomm, where this thing just goes straight up to that max call open interest level after the earnings report. But if it can't catch enough support once it gets
Come on, guy.
the hedge slowly unwinds back into the other way, and you float back down, right into this sort of 360 to 370 range we've found
I'm
ourselves
done
in
with you.
here. So that's sort of the look in either direction.
Seems like the odds are kind of skewed towards upside, but also probably a big hurdle to get across for 400. It seems like some magnetism on the call side, people itching for for continued recovery. Thanks, Shane. Good stuff, good perspective. Nice look at the levels for S&Ps, as well as CrowdStrike. Coming up, we're going to talk IPOs. Is the pipeline getting greased? We'll then get an update from Jenny on the airlines ahead of the travel season coming up.
Dow jumped up. I think next year I'm definitely going to be trading a lot of the SPY, the SPX, Tesla. I don't want to trade too many of them. I've had a pretty good year this year by not being just being cautious. I haven't had too many real bad trades, but this is going to be not a bad one, but bad enough.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
I'm going to wait until tomorrow on these.
Investments for me too.
I'll just hold them.
No can do.
Don't want to sell them. I'll wait.
Where are you going?
I'll eat the loss if I have to.
Schwab.
Who knows, tomorrow it might bounce back up and I'll get closer than where I am now. Do do do. Hey.
A lot of investors are thinking it could be IPO boom time again. Little do they know, perhaps it's already been kind of a boom. $37 billion raised in the industry so far this year compared to $23 billion a year ago. Mike Sokol joins us with the data AVP of Account Management for the Market Intelligence Desk at NASDAQ. So Mike, quickly, the kind of trailing numbers, obviously a good year compared to last, right?
Yeah, surprisingly so. I mean, we're, as you point out in those numbers, we're 208 already in the industry in the U.S., raising $37 billion. We're 57% ahead of where we were for all of last year in terms of dollars raised. And, you know, the year's not out yet. We still have a couple of deals that we think could come this year that are pretty sizable, and hopefully also continue to hit singles and doubles. So it's been a pretty good year. It's also been pretty broad-based. We have healthcare, we have info technology, we have consumer discretionary. So it's kind of a wide array of companies. We've had 78 on NASDAQ non-US companies list, and we've also had 44 SPAC deals, which are sort of coming back too. So wherever you look, it's kind of not concentrated in one space, and it's been pretty healthy.
Healthcare has been super busy, right? Pretty big sector.
Healthcare is busy, and it's always a strong point for NASDAQ. We do a lot of biotech companies, of course. Financials, interestingly, because we had the Lineage deal, has actually raised the most in terms of capital. But yeah, in industrials, we've actually had quite a number of non-US and smaller deals. So kind of like where you look, you can see positivity in a couple of different places.
Okay. One thing that we've talked about is your pulse estimate for where IPOs you think kind of should be based on the macro.
192.
And that index.
Yeah, I'm holding.
Suggesting probably a higher activity even than what there is. Is that still the case?
Yeah, and I think a couple of things to look at. So we publish that quarterly, and we're right in the middle of another quarter here. So, you know, 5 or 6 weeks left in the year. We've had great momentum in the market, as you know, great sentiment, the potential for, you know, less regulation and so forth. So that's really helped the market. You see the S&P's up at 6,000. When you get into early next year, you also have the opportunity for companies to refresh their financials. And I also think that as good as things are, there's a couple of things that are maybe an overhang that people are waiting to see. And right after January 20th, you'll know what those are. But I'm calling them the 3 T's. So you have the trajectory of rate cuts, which has slowed a little bit, and that might be an issue for some, especially smaller companies, especially if they're not profitable. You have the 10-year Treasury, which is baking in a little bit more inflation and, of course, fiscal spending and so forth. And you have tariffs, and that's a big one, and that's going to have an impact on certain sectors, on certain companies. So I think once you get to, let's call it late January, we can see a lot more clearly on those 3 factors. That's going to give you a lot more clarity. And right now, even though we have good seasonality in the market and so forth, there's not really a reason to rush out an IPO at this point.
Okay, so it sounds like some of the tone then post-election has been fairly mixed in terms of what it's going to mean for IPOs specifically.
Yeah, and I don't think companies have to run right out and do an IPO in December just because we're post-election. There has been some clarity in the market. There's a lot of hope in less regulation in the market, and that's a good thing. But and of course, seasonality helps the existing stocks that are out there trade higher. But if you're doing an IPO and you're thinking about, what projections am I going to show? If you wait just a little bit longer, you can show all of 25, all of 26. You can get some clarity. Let's see where the 10-year settles. It's had a pretty big move, and the yields have come back in a little bit since the announcement of the potential new Treasury Secretary. So let some of those things clarify themselves. Tariffs is another big one. You have to see where that's going to all shake out. And of course, you do want to see if the Fed, which still is going to probably be a tailwind for companies. You still have a posture towards rate cutting. But again, I think you'll have a lot more clarity in a couple of weeks. So even though you're post-election, there's no reason to really push something out before Christmas.
Okay, understood. Appreciate the update. Very helpful one. Good stuff on the numbers. Thanks, Mike.
Okay, thank you, Oliver.
Absolutely. Let's go to the developing story with Jenny Horn in the newsroom. Host of Next Gen, Mark's correspondent, looking at airline fees just in time for the holidays. And from what I understand, bad news for Frontier, negative at least.
Okay, it is bad news for Frontier. It's bad news for all of us, though. It's the worst news for us as consumers. If you want to hear another way in which airlines are ripping you off, just get a load of this. So a Senate subcommittee on Tuesday did slams with the largest U.S. airlines on these fees to pick their seats, as well as earn commissions possibly on the various bag requirements. So between 2018 through 2023, American, Delta, United, Spirit, and Frontier brought in just over $12 billion in seating fees, including seats with extra leg room, as well as those with those preferred locations. So while we do know that a lot of airlines have actually foregone these various change of flight fees or cancellation fees, you're actually still paying it. You're just paying for it when you select your seats or you select extra leg room. And for the first time in
God, I can't believe all the girls that are following me on Twitter.
$1.4 billion from these seating fees that actually surpassed their checked bag revenue. But I think the most, objectively egregious part of this story is the report did also criticize those low-fare airlines, Spirit, Frontier, saying they paid gate agents $26 million between 2022 through just 2023 to catch passengers allegedly not following their airline bag policies, forcing them to pay a fee or even miss their flight.
Whoa.
That is
narcs.
It's
God.
awful. And okay, so Spirit refuted these claims, but Frontier
Taste
was
the
even on it,
wine.
saying their front gate agents are designed to incentivize their team members. So they didn't even deny it as far as this agent is concerned. That is just appalling.
Yeah, I've got thoughts
She likes
on
the horses.
Frontier's gatekeepers, whatever they call it. Dead to me.
Me too. Yeah, I had one bad experience. I'll never go back.
No, I have worse than bad. Okay, my problem with them is you have to check in an hour before, which is ridiculous.
Which is ridiculous. It's a waste
You're there
of
on time. You're there on time. So, they let you through security. You're there on time. So this, though, they were having people smoke out customers that otherwise would have just been able to board the bag. So they're being pretty aggressive for sure. But I don't know. At the same time, it's and that's your policy. The free market should then figure it out, and people stop going there. We get ticked off with them or whatever. So I don't know. Is it illegal?
To me, it's the worst if you have someone missing a flight. It's one thing to make them pay a fee, sure. I guess if it's within your policies, what have you. But $26 million that these people made off this, that's a lot of money. That's not just a few instances. That's basically them trying to find instances to catch customers, and I don't like that. We are coming up on the busiest travel day of the year. That's actually the Sunday after Thanksgiving. So will we see a lot of these gate agents trying to get you for every penny, perhaps. I'm already like pre-mad ahead of flying tomorrow, and this just was the cherry on top.
Yeah. All right. I don't know how much is going to be done about it, though. The stocks don't care too much. I mean, that's basically been Delta's like a big successful thing, or was it United that's been up pricing?
Look at United. It's having its best year on record.
Exactly, because they, every seat costs a different amount. But the bags thing, give me a break. Thanks, Johnny. Appreciate it. All right. Frustrating travel update before the travel season. We'll be right back with the big picture discussion. Liz Ann Saunders,
Come on, girl.
Nate Peterson, take us to the bell.
I ain't doing that.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Time for big picture discussion. The squad joins me, Liz Ann Saunders, alongside Nate Peterson as we head into the bell here. Stocks pretty good shape near the highs of the session, pretty much at them. Liz Ann, S&P's pushing 60-20 right now. So tell me what you think here.
Yeah, it's an interesting day because we do have some give back in the Russell 2000, and that's been really since it started its rip higher in early July. It's happened with fits and starts, and today is a day more for the larger caps and the cap-weighted indexes like the S&P. We continue to think we're going to see a lot of churn under the surface, a lot of sort of swift sector rotations, high sector dispersion at times, toward small caps, away from small caps, toward Mag 7, away from Mag 7.
What?
And I think that type of pattern.
They've been talking like this for a year.
Traders to persist at least.
And they still are trying to persuade you to do it.
And the Russell give back is on my radar too. Somewhat of a give back in bonds, but it seems like this week, for the most part,
I'm not gonna fall for that. They don't ever give any tickers for one.
Russell leading, somewhat of a shift. The bonds giving back to in terms of like rallying yesterday. It seems like we're kind of like.
So and she doesn't smile, so I don't trust her.
Going to be as we close out the year.
Yeah, Russell kind of benefiting from onboarding more pro-American, even in face of interest rates rising up there. It's really been since the post-election rally, it's been cyclicals and then speculation. There's still a lot of evidence that there are the animal spirits that are back into the market. When you look at a lot of the quantum computing, Bitcoin related. Leverage funds, non-profitable tech, those animal spirits from 2021, they are showing evidence of creeping in. And I'd say, if you're here trading for the next 4 or 5 weeks or so, it feels like, you've got the technicals that are in your favor, you've got seasonality that's in your favor. As long as the 10-year can stay under 4.5%, it feels like when it gets above 4.5%, then there's a little bit of resistance that might tend to come into the market. But it feels like with the pro-business administration that's coming into office, you may have a little bit of a permission slip to continue to push this higher as performance chasing kind of finds its way into the market. But yes, that's going to come with more volatility, especially in the speculative areas of the market.
Yeah, the cross currents of the political expectations game are getting pretty hazy, pretty tricky, Lizanne. It seems like a new kind of more solid narrative would be welcome at any moment.
Yeah, I don't know that we're going to get a solid narrative, particularly on policy between now and Inauguration Day. I think it's going to continue to be, much as we probably should have gotten used to in 2018, but tariff-type decisions announced via social media and those cross-currents, because when you look to potentially be lowering tax rates on corporate America. As an economy, we are more import oriented. An index like the S&P has close to half of its revenue stream coming from overseas sources. So that can have the effect of actually worsening the trade deficit, yet that is being seen as a yardstick in part to be the decision point around tariffs. Tariffs are also being used as a negotiating tactic for things like immigration and fentanyl. So I think there will continue to be a lot of cross currents, kind of the negative and positive side, thinking of the battery in this backdrop. And it's another reason why we think these sector rotations are fierce. I do worry about speculation. I'm glad Nate mentioned things like speculation in leveraged ETFs. You're seeing it particularly in the leveraged single stock ETFs. And then things like, the last time I bought bananas and duct tape, it didn't cost me $6 million. So I do worry a bit about froth.
Like that. Yeah, some of the leverage stuff getting slammed today. I'll offer up an example as the ticker-specific guy of the three. Say, for example, a MicroStrategy levered fund down like 25%. I mean, there's some juicy stuff going on. It's kind of amazing. VIX at 14, even during all of that, Nate. So I guess that kind of pre-election vol was just too elevated. Seems like we're still unwinding that.
A little bit, yeah. That VIX is tractor beam to the S&P 500. If you look at the daily changes in the S&P 500, you could say the VIX is maybe even a little bit overvalued because at 14 there, and then underneath the surface, you're right. MicroStrategy, good God, there's just these huge moves, and I think if you're in the speculative areas of the market, what I would kind of keep your eye on is Bitcoin. I'd say generally speaking, you want it to stay above 85K, that uptrend to remain intact, in order to get a sense of whether it's kind of risk on or risk off from a trading perspective over the next month or so. So I would just keep an eye on that. But if I'm looking at MicroStrategy specifically, there is a big bearish engulfing candle that happened last week that I've got my eye on. I'm wondering if that's going to be a prequel a little bit to Bitcoin prices. But in the meantime, Bitcoin 91K, still in the uptrend. Looks like it still has some legs, but gosh, you've got to really be nimble in this type of market.
Yeah, absolutely. Good thoughts, guys. Appreciate the perspective. Very helpful. Nate Peterson, Liz Ann Saunders. Knew it would be good stuff. As we come back, we've got earnings. Workday, Autodesk, CrowdStrike, Dell, HPQ. Busy afternoon here for some pretty key auxiliary AI plays.
There it is.
And a little software taste too. CrowdStrike's come back as well. Plenty to get into. Be right back.
There it is.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored.
I am exhausted.
Get it.
So exhausted. I had a pretty good day today. I'm swinging my Tesla to see if I can get out of it above $2 tomorrow. I was going to buy some here into close, but I decided just to wait till tomorrow. And see how that works out. Could have a nice day into Thanksgiving. But I'm wondering when they're going to start picking on Elon. They've been kind of quiet about him. They haven't given him too much. So I'm kind of curious about that. If you're not here tomorrow, wish everybody a happy Thanksgiving. People are probably going to be traveling and moving out and getting around and about. I'm going to kick back and watch some videos and cook me to see if I have a sweet potato to cook. More or less don't feel too hungry. But I am getting a little tired. I want to take a little nap, maybe. Just want to watch social media and see what all my friends are doing today. So, Timothy Sykes followed me. I had a bunch of girls following me all of a sudden. How are you doing today? Stormy Daniels says, how are you doing today? probably the only friend she has. How you doing today, Jimmy? I'm doing good, baby. I already explained to her I don't appreciate human trafficking, but I'm not counting her in the deal. I can't believe I'm talking to Stormy Daniels. If you're listening, baby, hi. I'm flattered. Whatever you do, don't spread that rumor around. Which is odd. Where'd that go? Jimmy. Alrighty, well, I'm going to get on out of here. Mike, appreciate your help today. Randy, Jimmy, Joe, and Joe. Magnificent. The Roaring Shitty. And I'll see y'all later.